Hi guys, welcome to BCCA. This is Ravi Teja and I'm your faculty for Corporate Financial Reporting at CMA Final Level. As promised, this is our first day of a regular batch for December 2025 with respect to the Corporate Financial Reporting. As promised, since this is the 18th of August, we are actually starting our day one of our subject, which is Corporate Financial Reporting. I will definitely make you understand the exact meaning of the term financial reporting and all. But before going into that, I just want you guys to understand how exactly our curriculum at CMA Final with respect to the paper number 18, which is Corporate Financial Reporting, is designed. I will make you go through the paper pattern ka analysis as well as to how exactly and what exactly are the areas which the institute is actually focusing, because you guys have to understand the exact focus where the institute is doing and you just have to adopt our preparation according to that. So I just want a quick heads up from the live students so that we can get started with the things off. So yes Baba, yes, I have been receiving. Yes, that's good, super. So with this notion, let us quickly just start with the things. First, if you observe the institute, they have clear-cutly broken down the syllabus of corporate financial reporting into 6 sections. Very clear. How many sections? Into 6 sections. If you observe, section number A, they will talk about Indian accounting standards, which are popularly called as Ind AS. Sir, what is the meaning of this exact Ind AS? Arey Baba, just be a little patient. By the end of this session, you will be understanding exactly what is the meaning of Indian accounting standards. If you observe section B, they will talk about how exactly the shares are being valued and what is the accounting and reporting of financial instruments which is being done, and obviously they will be explaining for NBFCs also. So this part have been covered in section number B. And if you observe section C, the most important concept, which is nothing but accounting for business combinations and restructuring. Guys, you have to understand the importance of this business combination. With respect to this, I have made a separate detailed revisionary also with respect to the business combination, which is recently uploaded in BCCA YouTube channel. You can watch that. You will understand the total importance of that. Keeping that aside, there is another section, which is section D, which is going to talk about consolidated financial statements and separate financial statements, which is also a brilliant standard which most of the students are taking choice. But trust me guys, with my classes I can give you assurance that you are going to get a maximum amount of marks from this section C and section D. If you observe section E and F, those two are nothing but section E talks about recent developments in financial reporting and section F talks about government accounting in India. If you observe these two sections are completely theoretical. Sir, how exactly and what exactly the weightage is coming from these chapters, I will be explaining a little bit later. But now what I have did is, sir, in section A, how exactly and how many indices are there and what exactly they are about, I have given a detailed breakdown also. Guys, this is also there in our study material only. I have just copy pasted from our study material as to what is the exact weightage of the institute. If you observe section A, since they have mentioned specific indices, they have directly given few indices. Sir, what are those few indices which we have to follow? Very simple guys. The first standard is Ind AS 8. If you observe, it is nothing but a kind of accounting policies. If there is any change in accounting policies, how you have to do the accounting. If there is any change in accounting estimates, or if there is an error with respect to the prior period item, how exactly you have to do the accounting for. That exact accounting, entire accounting is being dealt by Ind AS 8, which is a very chotu sa standard. You will love that standard because that is very simple. That much not important from exam perspective, but still we will be covering that as sufficient. Okay, how much it is sufficient for our examination, I will be covering that thing for you. Second part, if you observe income taxes, this is with respect to the Ind AS 12. I think you guys have already known in inter terms like deferred tax asset and deferred tax liability. Sir, when exactly deferred tax asset will be created and when exactly deferred tax liability will be created, and all different aspects are being discussed in this Ind AS 12. The next part, if you observe PPE, Arey Baba, it is nothing but property, plant and equipment. This has been covered in Ind AS 16. They have come, I mean, it is a comprehensive standard which is going to cover everything with respect to the plant, property, plant and equipment. The moment when you recognize the PPE, the moment, I mean, initial recognition of the PPE is also dealt in that standard, and not only that, subsequent recognition of the PPE is also covered in that standard. Sir, if I de-recognize the PPE, how exactly I have to do the accounting at that time also, even that has also covered in Ind AS 16, which is PPE. Next, the most important standard according to me, which is nothing but leases. The reason why I am saying this as important is because it is a recently developed standard and it is a comprehensive standard which is going to cover all the possible combinations, and that is nothing but Ind AS 116. Our institute is not asking next level questions from this Ind AS 116, but if you observe, this has the capability of asking huge questions. It is a very big standard, Ind AS 116, because if you observe specifically at CA final level, there they have already started asking next level questions, and I am sure that our institute also will definitely ask next level questions from this standard, which is Ind AS 116. But still, since the standard is huge, I will be limiting my discussion whichever is important from our institute perspective itself without deviating the content. So that assurance I will be giving to you, keeping in the mind the time constraint. At the same time, I don't want you to miss any important thing with respect to the standard, which is leases. So I am going to take care of everything. You guys no need to worry at all. If you observe this Ind AS 21, this is nothing but if there is any foreign exchange rate is being used. For example, assume there is a foreign currency debtor with which you have entered into any contract. Sir, how subsequent recognition will be done at each reporting period? At what rate I have to use my initial recognition? If there is any exchange rate which I have to use, which date exchange rate I have to consider, and all for reporting purposes. If there is any foreign currency item in your books of accounts, at what rate you have to convert it to reporting currency, and all related things is being explained in Ind AS 21. Ind AS 23, borrowing cost, that is very simple thing guys. I think at inter level we have already learned this part. Borrowing cost, qualifying asset thing, that is being covered in Ind AS 23. If you observe impairment of assets, but at that time we have studied AS Baba, if you remember, but now we have to study Ind AS. Sir, what exactly is the difference between AS and Ind AS? Arey Baba, just be little patient. Everything will be clarified to you at the end of this first session. If you observe this impairment of assets, which is covered in Ind AS 36, this is a kind of important. I will be anyways explaining you the paper pattern. At that time, you will understand what is the institute's exact focus at this point of time. Okay. Next, if you observe, we are having intangible assets ka standard, which is Ind AS 38. After that, share-based payments we have, which is being covered in Ind AS 102. Guys, this is also a little bit a comprehensive standard, which have many models, many examples. Next, if you observe, we are having a standard called as operating segments, which is covered in Ind AS 108. Next, fair value measurement, छोटू सा standard. Ind AS 115, which is nothing but revenue from contracts with customers. This is also another comprehensive standard which the institute have already started focusing more areas, but again I am saying still it is having more capability of being asked many tougher questions in the future. If you observe, institute have already given expected weightage of 25% to this. Sir, 25% means, Arey Baba, including choice you have to calculate. I will again explain that, don't worry. Sir, what is the exact paper pattern and all I will be explaining, but that you just have to wait for the next 5 to 10 minutes. If you observe, if you look at section number B, it is nothing but valuation of shares. accounting and reporting of financial instruments, and NBFCs. Institute have specifically mentioned out of 128 marks, my weightage is 15%. Sir, this comprises of valuation of shares, easy chapter, accounting of financial instruments, Ind AS 109. This is also, frankly speaking, a very comprehensive standard, but our institute have limited coverage, and we will be covering whatever which is given in the examination, and whatever the topics which are covered in our study material also we will be covering 100%, and the previous exam questions also we will be covering 100%. So I will give you an assurance that we are going to cover completely without missing even a single thing as well. This NBFC's provisioning norms, accounting and reporting. Guys, this is also a chotu sa chapter. They will be just giving you the provision rates. You just have to create the provisions for substandard assets, standard assets and doubtful assets and loss assets. That is also very simple. You just have to by heart the provision rates and you just have to simply calculate the amount. That much simple it is. Next comes to section C, one of my favorite standard, which is known as accounting for business combination and restructuring. This is having an expected weightage of 20%. 20% weightage it is having, guys. I have given a few concepts, and trust me guys, all these concepts I have covered in the recent revisionary which I have been uploaded. So if you guys have any doubts or if you want any kind of clarification, you can directly watch this Ind AS 103. Of course, I haven't covered these two topics in that video, because my objective is pretty simple. These two are a little bit different from the chapter business combination. So what I have did is I just thought of preparing a separate video when it comes to these chapters. Of course, I will be doing that in the future. If you observe this section D, another super important according to me, I love this chapter, which is consolidated financial statements and separate financial statements. This is also is having an expected weightage of 20%. If you observe, we are having an interlink between this section D and section C, Baba. So it also having expected weightage of 20%. I also thought that I also understood that most of the students are taking choice when it comes to this section D and section C, which according to me students should not take, because I know the practical importance of these sections. Even if you qualify, after qualification also these standards will be playing a key role. After that, section E and section F are purely theoretical topics, guys. Definitely I will be showing you the weightage as well. Next, what I wanted to show is, so first we have understood the actual coverage of the institute. Next, I want to show you the index for my material, index for our workbook, which is BCCA's workbook. I just want you to prove one thing, that we are not missing even a single topic in our study material. I mean in our concept book or even in our workbook as well. We are going to cover all these 12 Ind ASs. We are going to cover all these 3 chapters. We are going to cover this business combination. We are going to cover this consolidated financial statements, and last but not the least, those 2 sections, government accounting and recent developments in financial reporting also we will be covering in our index. Guys, this is the index of our workbook. Of course, this is undergoing a little modifications. I will be providing that workbook very shortly, because trust me guys, this workbook is going to be a one-stop solution for all your institute study material ka questions, previous examinations, model paper questions, and the recent questions from the workbook as well. Whatever the workbook which the institute have recently released, I have also incorporated those questions as well. If you observe, Ind AS 8 is covered, 12 is covered, 16 covered, 116 covered, 21 covered, 23, 36, 38, 102, 108, 113, 115. All these standards have been covered in our workbook. And not only that, if you look at section number B also, valuation of shares and goodwill covered, accounting of financial instruments covered, NBFC's provisioning norms, accounting and reporting is also covered, and my favorite standards, these two are also covered in detail, along with the recent developments in financial reporting and government accounting in India, which means I have not even missed a single topic in our study material. I mean, in our workbook, which means if you do our BCCA materials, those are more than enough, and this will fetch you a minimum of 90 plus in our examination, which is December 2025. So you guys have to promise and tell me that I am going to get 90 percentage minimum. I am going to get 90 marks minimum in my subject, which is nothing but corporate financial reporting. I will make the things very, 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 very easier for you guys. What you have to do, you can completely rely upon me because of the recent experiences which I have gained past qualification, post qualification. Many things have been pretty clear according to me. I specifically know those areas wherein 100% attention is required because of the analysis which I have made. I will show you the past paper ka analysis as well, because I know those areas where our institute is going and testing next level questions. I will make you prepare for those next level questions with my classes. And of course, there are few gray areas which the institute is not that much focusing, and we will not waste much time in those areas. So our agenda is very simple. If the institute is going in depth into any area, we will also definitely go into in depth. If the institute is not going that much in depth, then we won't waste our time in digging into those areas. So this is the main objective which a student have to understand, because considering the quantum of the syllabus, a student have to draw his study plan very efficiently without wasting his resources, because time is the very important constraint. So a student have to exactly understand where the institute is focusing, and he just have to adopt his strategy, adopt his study plan in order to what should I say, in order to the importance of the institute. So having been said, now it's our time to start the question paper ka analysis. Guys, this past paper analysis I have already shared in the business combination ka summary video where I have attached, but I will just go through these things. It is very simple, guys. You already have know that 15 MCQs will be there in the very first question, and you have to answer all 15 MCQs, which will be giving you 15 into 2, which means 30 marks. This is pretty simple, guys. No introduction needed with respect to this. After this question number 1, we are having 2A 2B, 3A 3B, 4A 4B, 5th question no AB, 6th question no AB, 7A 7B we are having, and 8A 8B 8C we are having. Pretty simple. From 2nd to 8, you just have to answer any 5 questions. Any 5 questions you have to answer, Baba. Out of the 7 questions, you just have to answer only 5 questions. Out of those 7 questions also, it is pretty simple. Each question will be asked for 14 marks, which means 7 into 14 is 98 marks, out of which you just have to attempt only 5 into 14, which means 70 marks. So 2 marks they have given for choice. If you observe, very simple, guys, 2A, 2B, 3A. These 3 questions will be focused from the specific Ind AS, which means 7 marks, 7 marks, 7 marks. So 21 marks will be directly asked from the specific Ind AS. And next, if you observe, this 3B and 4A question will be asked from the section B. If you observe, goodwill calculation, financial instruments, NBFC provisioning norms. So these are the areas which they have covered out of those 3 chapters. See, out of these 3 chapters in section B, they are asking 2 questions, which makes this section a very, very important. And after that, we are having internal reconstruction, which is a chotu sa concept, but they are asking continuously this question: internal reconstruction, internal reconstruction, internal reconstruction, internal reconstruction, which means being a student, you should not miss this chapter, which is internal reconstruction. Next, coming to 5th question, direct 14 marks question will be asked from this chapter, which is business combination. And trust me, guys, getting a minimum of 12 out of 14 marks is very easy task if you follow my methods. If you apply my methods blindly, you will easily get a minimum of 12 out of 14 in the business combination ka question, because I know entire thing with respect to this chapter business combination. What exactly are the different types of business combinations which are covered in our institute, and how exactly we have to approach those questions and all, everything I will be explaining you very in detail. Still, if you have any doubts with respect to my kind of teaching, you can directly go ahead and watch the recent revisionary which I have uploaded. That is going to give you entire clarity with respect to this chapter question number 5. If you observe question number 6, again I am saying I know more about consolidated financial statements. I know exactly what your institute needs in order to get a minimum of 12 out of 14. This consolidated financial statements ka question also institute will directly ask for 14 marks. No shortcuts, nothing. I will make you understand entire concept without any fail. Trust me guys, you will never regret taking classes from mine. I will give that much assurance with respect to these two chapters. Other chapters are very easier only. So those chapters you cannot have any second doubt. But when it comes to the most toughest chapters, if you have learned the toughest chapters in easier manner, obviously the easier chapters are going to be more easier for you. You just should not miss that kind of logic. If you observe 7A 7B questions, they are continuously asking from recent developments in financial reporting. 8A 8B, if you observe government accounting, not even a single attempt they have missed any question. And 8C, this is also a kind of connection which is there with respect to a business combination and consolidated financial statements. So this is a kind of a brief paper analysis which I have made. So a student have to understand the importance of the specific Ind AS, and obviously section number B as well, and the business combination ka section, consolidated financial statements ka section, recent developments in financial reporting, and government accounting as well. So your agenda is very simple guys. If you have already written your examination in the last attempts, for example, assume you have taken classes of any other faculties, or assume that you have gone for self-study, or assume you have already given up any kind of previous attempt, you guys will already have some preconceived notions in your mind that I will be ignoring business combination chapter, I will be ignoring consolidated financial statements ka chapter, like that. If you are having any set of preconceived notions, it is the time you have to remove all those things, Baba, because with fresh mind you have to start the things. So our objective is I will make you guys enjoy the subject corporate financial reporting, and that is completely my responsibility. You just have to sit back and relax and enjoy what I am exactly saying. You just have to repeat with me what I am saying, so that you will be in the flow. You will not get bored, Baba. Trust me, I will make you corporate financial reporting a very interesting thing. So I will focus on all those areas which are relevant for the examination, and you do not have to worry about anything, Baba. If you are a fresh student, you can completely rely upon me. Even if you are a repeater student, I don't mind. I can teach you from the entire basics. But I just want you guys to be sure of only one thing. Please remove all the preconceived notions. Assume that you are listening the classes for the very first time. I will try to explain everything with logic, Baba, so that it is very easier for you to remember for a longer periods of time, which is very necessary in a subject like CFR, which is having a huge kind of formats, more number of performers, etc. So it is very important for you to remember all the performers. So having been said that, so I think this is more than required is what I am thinking, because I have first explained you the thing of here. Obviously what I have explained is I have explained the detailed breakdown of concepts. Guys, this I have already explained in the business combination chapter. If you want, you can directly go ahead and check there. So as of now, what I have said is I have given an bird's eye view of the institute's chapters which are there. Next, I have given you a overall understanding of what are the chapters which are covered in our study material. I mean our workbook. I have proved that we are not missing even a single chapter or a single topic in our workbook. So this is the exact assurance which I will be giving to you. Next, I have made the paper pattern and the paper analysis also I have explained. So I guess we are pretty on the track. So without making any further delay, it is high time that we have to start with the subject, which is nothing but the corporate financial reporting. I am very much excited, guys. So I am expecting a equal amount of excitement from you as well. So yes, Baba. So yes, guys. First, let us understand the meaning of our subject, which is nothing but a corporate financial reporting. Out of this, you have to understand the meaning of financial reporting. First of all, assume, Baba, you have made an investment in one entity. Now, it is your responsibility. Of course, it is what should I say? It is very essential for you to exactly understand how the company is basically performing. What is the exact financial position of the entity? What is the exact financial performance of the entity? And of course, I am expecting all these details if I want to make any kind of investment. So that is the first part. Assume I was a management. I exactly want to know the financial position of the entity, because whatever the strategic decisions which I have to make, whether to go for expansion or whether to go for a retrenchment kind of strategy, or do I want to include a new product line, do I want to include a new process line, do I want to include a new service line, and things like that will be understood. First of all, if I've had an exact picture of how my financial position is going to be, assume I was a creditor of the entity, and I just want to understand whether my debt or whether my payable is being secured or not, because that will be understood by looking at the liquidity of an entity. And if I am a regulator as well, so whatever the information which is being provided by the entity, is it exactly correct or not? If you observe different stakeholders, including the shareholders, including the management, including the creditors or regulators, etc., it is very important for all these stakeholders in order to understand the financial position of the entity, in order to take informed decisions. Financial reporting is very important, and exactly the process of communicating the financial position of an organization through entities' financial statements is nothing but a process of financial reporting. It is nothing but you will be understanding the results of an organization, and that is exactly why the word financial reporting comes into picture. The second thing which you have to understand is I cannot prepare the financial statements according to my wish, because one second, guys, because it is pretty essential for the investors to get a sort of uniform financial statements, because as an investor I am very much interested to make comparisons between different companies. And if two different companies prepare financial statements according to their wishes, it is very difficult for the investor to make a meaningful comparisons. In the same manner, if any one entity prepares the financial statements for 1 year as per the company's wish, and also in the second year which the company is basically preparing the financial statements, assume it have followed some a different kind of approaches, a different kind of standards, a different kind of presentation and all. Obviously, it will be very much clumsy. So my analysis cannot be done. What should I say? My analysis cannot be done, or my kind of comparison cannot be done meaningfully. So that is the reason why it is very essential to have some sort of rules with respect to the preparation of the financial statements. So first you have to understand that our MCA, which is popularly called as Ministry of Corporate Affairs, has notified the two rules, very important two rules for the preparation of financial statements. Sir, what is the first rule, sir? First rules are nothing but Companies Accounting Standard Rules, which are 2006. These are earlier rules, Baba. Companies Accounting Standards Rules 2006. Now they have amended to Companies Accounting Standard Rules 2021. Sir, what exactly are these rules? Arey Baba, these rules are very simple. These rules will definitely say the company, Arey Baba, company, please follow accounting standards. Please follow accounting standards. These accounting standards are nothing but whatever the accounting standards which you have learned in your CMA Inter. So strictly speaking, companies have to follow accounting standards. And this, sir, why they have to follow accounting standards, Arey Baba, that is given in Companies Accounting Standard Rules, which are 2006. But you just have to understand one thing. These accounting standard rules 2006 have been amended to Companies Accounting Standard Rules 2021. This you have to notice. And the second important rule which you have to remember is a Companies Ind AS Rules 2015. Sir, what are these Companies Ind AS Rules 2015? That is very simple, guys. It requires few companies, basically few companies. Arey Baba, for you AS is not sufficient. Your level of requirements, your level of disclosure requirements, we want more disclosures from you. We want perfect accounting treatment for you. So what they have suggested is, Arey Baba, since you are big companies, following AS itself is not sufficient. So for you, you have to follow something, some stringent disclosures are required for you. Stringent accounting treatment is required for you. So this kind of treatment is exactly provided in Ind AS. And why you have to prepare Ind AS is very simple, because according to the Companies Ind AS Rules 2015. As of now, you can remember like this, that Ind AS are applicable for listed companies and for large companies. Very simple. If you are a listed company, you have to definitely follow Ind AS. If you are a large company, so what is the meaning of large company? Arey Baba, just be a little patient till the end of this session. If you after the session, you will be getting complete clarity regarding the applicability of the Ind AS. So this is the first point which I want you to understand, which means as of now, there are some entities for which accounting standards are applicable, and there are for another set of entities Ind AS are applicable, which means practically speaking both standards are applicable. Sir, for which companies accounting standards are applicable, for which companies Ind AS are applicable, Arey Baba, those you will be learning a little shortly. But now what you have to remember is, you can remember like this, Arey Baba, if you are a small company and if you are following accounting standards, another set of companies are, if you are a listed companies and large companies who are following Ind AS. So strictly speaking, I can summarize those things like this. If you are a small companies, you have to follow AS. If you are a listed company, or if you are a big company, you have to follow Ind AS. So this is the thing which you have to understand. Sir, how I have to prepare the financial statements? Is there any kind of pro forma, or is there any kind of format which is there? Arey Baba, you guys have already know about this format in your CMA Inter, and that is nothing but Schedule 3 to the Companies Act. So whatever the pro forma which you have to follow, that is clear cutly given in section schedule 3 of the Companies Act 2013. Whether you are following accounting standards or whether you are following Indian accounting standards, pro forma for preparation of financial statements is directly given in schedule 3. I will make you go through this schedule 3 in detail, Baba. So if you observe, just give me a moment, Baba. Yes, this is nothing but schedule 3. This is nothing but, Baba, schedule number 3. If you observe, if you check schedule 3 ka division 1, very important, I want your 100% clarity, Baba. If you observe division 1 of schedule 3, they are saying very clearly, guys, if you are preparing financial statements for a company whose financial statements are required to comply with the company's accounting standards rules 2006. This is the point just we have written now. If you are a company for which accounting standard rules 2006 are applicable, you have to follow the pro forma of the financial statements which is given in division 1 of schedule 3. Can I write here? If you are a Ind AS based company, you have to prepare financial statements which are given in division 1 of the schedule 3 of the Companies Act 2013. Fine, sir. Arey Baba, if you go little bit deeper, if you open, just a moment, guys. I just want you to show one thing, and that is nothing but this thing, Baba. Sir, what is this? Arey Baba, this is division 2. Sir, what is exactly is this division 2? Arey Baba, simple, Baba. Financial statements for a company whose financial statements are in compliance of the company's Indian accounting standards rules 2015. Arey Baba, simple. If you are a company where you are following Ind AS, you have to prepare your financial statements in the pro forma or format which is given in division 2 of the schedule 3 of the schedule 3 to the Companies Act 2013, which means if you are a listed entity or a big entity, you have to follow Ind AS, sir, where the financial statements are given. Arey Baba, that is clear cutly given in division 2 of schedule 3 to the Companies Act 2013. To summarize, a company can either follow accounting standards or Indian accounting standards based on their applicability, which we will be studying a little bit later. If you are a company and for you accounting standards are applicable, then you have to prepare financial statements according to the division 1 of the schedule 3 to the Companies Act. Arey Baba, but you are a company for which Indian accounting standards are applicable. You have to prepare financial statements which is clear cutly given in division 2 of schedule 3 to the Companies Act 2013, which means if you are a company which is following accounting standards, for you division 1 of schedule 3 to the Companies Act 2013 is applicable. But if you are a company for which Indian accounting standards are applicable, Arey Baba, for you division 2 of schedule 3 to the Companies Act 2013 is applicable. Guys, we are going in a sequential manner. First we have understood, sir, what is the meaning of financial reporting, and next we have understood, sir, what are the rules which are essential for the preparation of financial statements. Arey Baba, there are two rules. One rule will ask a company to prepare accounting standards and to prepare financial statements based on accounting standards, and another rule is pretty simple, which will be asking the companies to prepare financial statements based on Ind AS. If you are a AS compliant company, you have to follow the pro forma or format which is given in division 1 of schedule 3 to the Companies Act 2013. But if you are an Ind AS compliant company, Baba, you have to follow the pro forma or format which is given in division 2 of schedule 3 to the Companies Act 2013. 13. Next part, Baba. Sir, what is the meaning of financial statements? Arey Baba, before directly going into this, let us try to understand from this itself as to what are the exact financial statements which an entity have to prepare. That is very simple, Baba. First, let us understand about AS compliant company. If you are a AS compliant company, the first thing which you have to prepare is balance sheet. You have to prepare. If you remember the pro forma or format which you use it to prepare financial statements at CMA inter level, that is nothing but this pro forma. If you remember, it will start with equity and liabilities. First, you will be starting with shareholders funds. I will again go through this in depth when it comes to schedule 3 ka discussion, Baba. But first, now I am making you understand what is the meaning of financial statements as per schedule 1 division, as per division 1 of schedule 3 to the Companies Act 2013. So the first most important part, Baba, part number 1, which is balance sheet you have to prepare, which is a must when it comes to financial statements. And if you go down, what they have given is a general instructions for preparation of financial statements. That is not necessary for us, Baba. If you dig deeper, there is something which is called as part 2. Part 2 you have to prepare, which is nothing but statement of profit and loss. Arey Baba, this also you have already seen at CMA inter levels. Again, we will be having a detailed discussion with respect to each and every component of the statement of profit and loss. So if you go through like this, general instructions they have given with respect to preparation of this, and the most important is, Arey Baba, how to prepare the consolidated financial statements also they have given. Currently it is not necessary for us. So other than this, you have to prepare balance sheet, statement of profit and loss, CFS, which is nothing but cash flow statement, Baba. This cash flow statement ka guidance is not provided in schedule 3. For this we have already one accounting standard which is already been covered in our CMA inter syllabus. And last but not the least, notes to account is also an integral part of the financial statements. These 4 are nothing but a components of financial statements. If you are a AS compliant, means you have to prepare financial statements based on accounting standards. Arey Baba, then you have to follow the format which is given in division 1 of schedule 3. But if you are an entity who have to prepare the financial statements based on Ind AS, which means you have to follow division 2 of schedule 3. Sir, in this division 2 of schedule 3, what are the financial statements which I have to prepare, Baba? That is even more simple. First, you have to prepare the balance sheet. Second, you have to prepare the statement of profit and loss. CFS is also there, cash flow statement, and last, notes to accounts is also there. But the one more important thing which is not there earlier, that is nothing but you have to prepare something called as statement of changes in equity. What is this, Baba? Statement of changes in equity. Sir, what exactly is this statement of changes in equity? We will be having a detailed discussion in the basics chapter itself. But first you have to remember there are totally 5 components of financial statements when it comes to division 2 of schedule 3. Another thing I'm making you, I'm giving you clarity right now only, Baba. At inter level, you have already studied division 1 of schedule 3 to the Companies Act. So at final level, learning all these things is not at all relevant. This is the point which you have to keep in your mind. This division 1 of schedule 3 is not relevant. Sir, so what we have to learn is we have to learn something called as division 2 of schedule 3. I will be again opening you the balance sheet, again opening you the P&L account, again opening you the statement of changes in equity, notes to accounts, everything I will be discussing with respect to division number 2 of schedule 3 to the Companies Act, because we will be learning the new format of how to prepare the financial statements, and that will be covered in this division 2 of schedule 3, because at final level this is the format which we have to go to follow. That I will be again making a detailed discussion probably in tomorrow's class, which will give you a complete clarity with respect to division 2 of schedule 3. So yes, with this, let us quickly start the next thing, which is nothing but, sir, how exactly in the history, how these global accounting standards have been evolved or emerged. Okay, fine, because you have to really understand how these Ind AS have been started. Sir, we already have accounting standards. What is the exact reason for the introduction of another set of new standards which are called as Ind AS? If you want to understand that thing, you just have to go to the history of evolution of different kind of global accounting standards. Guys, there is so much history to learn. But trust me, Baba, knowing that much will make you lose common sense. And if you know too much, then obviously it is very difficult for you to focus on whatever it is important. So what I have did is, I have selected only those points, those timelines, those milestone timelines, which will make you understand the evolution of exact accounting standards. And that is nothing but whatever I have covered here. So just give me a moment, guys. Okay, guys. So as discussed, I will be focusing only on the important milestones which are essential for you to understand. It is pretty simple, guys. If you go back to 1973, this is the first landmark year which you have to remember. So what exactly happened in the year 1973? Are Baba, that thing is very simple. Guys, different countries have assembled together. I mean, whatever the international countries which are there, all those international countries have decided to assemble together, and they have conducted a meeting, and they have decided to form a common set of accounting standards with respect to the preparation of financial statements. So first of all, why all the countries are agreeing to prepare a common set of accounting standards? Baba, the reason is very simple. At that time itself, way back in 1973 only, investors have multiple options. They are having investments. Their objective is to make an investment in a profitable entity, and of course they are having multiple options, multiple companies which are located in different countries. Think from investors perspective. If different companies which are located in different countries have prepared their financial statements according to the accounting standards which are prevalent in their countries, it is very difficult for the investor to make a meaningful comparisons and take an informed decision. So that is the reason it is not at all correct if different countries have followed different accounting standards. So because of that reason, in 1973 itself, many countries like UK, US, Australia, German, France, etc. have come together, and they have formed one committee which is known as IASC. So what is the meaning of IASC? It is International Accounting Standards Committee. Many countries have formed together, and they have set one body which will form accounting standards, and that is nothing but IASC board. It is the standard setter for IASC. So what have happened in this? Yes, the countries have accepted, and they have started issuing a common accounting standards in the name of IAS, which are nothing but International Accounting Standards. So way back in 1973 itself, different countries have started issuing international accounting standards, Baba. Those are called as IAS, and remember this word, Baba. International accounting standards are issued by International Accounting Standards Committee. So IAS are being issued by IASC. Okay, fine, Baba. Next, the time have passed. Many countries in the world have started accepting those international standards. And the next landmark year which you have to remember is this 1989. So what exactly has happened in this 1989? This also I will be explaining. Simple, you have to remember there is one body which is known as IOSCO. So this IOSCO is nothing but International Organization of Securities Commission. International Organization of Securities Commission, like how we are having SEBI in India. There is, you can assume this as an international corresponding body of SEBI. Okay? Yes, sir. At this time, there are many cross-border international transactions which have been taken place. one company in one country started acquiring another company which is located in different country. Huge kind of business acquisitions are being taken place. Very complicated and complex financial instruments like derivatives and many instruments such as many kind of financial instruments have been emerged during this period, which makes it very difficult to continue with existing international accounting standards also. So what this body mandated is, Are Baba, in order to conduct cross-border transactions, which means transactions which involve different countries, your internationally accepted standards, whatever standards which are there, they have to be improved. They have to be improved and they have to consider the latest kind of things which are going in the economy. So that is the reason in 1989 IOSCO have preferred our internationally accepted standards needs improvement. Till then they have been making changes, and then in 2001 another important landmark year, whatever the IASC which is there, International Accounting Services, International Accounting Standards Committee which is there, that was now replaced by another body which is called as IASB, which is International Accounting Standards Board. From then, this IASB have started issuing another set of new standards which are called as IFRS. So what exactly is the meaning of this IFRS? This IFRS is nothing but International Financial Reporting Standards. Guys, what have happened here is this IASB have not deleted all earlier international accounting standards. Some international accounting standards are still there, even now also they are there. Some standards based on which, for example, if they have selected any one matter which needs a huge modification from internationally accounting standard, what they have did is they have completely deleted this Indian international accounting standard and they have given one IFRS for that. Which means as on this date and also even today as well, we have both international accounting standards also and IFRS also. Sir, how we will be identifying which standard is given by which standard is an international accounting standard and which standard is an internationally financial reporting standard? Remember, the thing is pretty simple now. Their numbering also will be like that only. For example, IAS 1, IAS 2, IAS 5, IAS 7, like this only their numbering will be. And if you observe, IFRSs are also numbered like this only: IFRS 1, IFRS 2, IFRS 3. So this is the thing which you have to remember. And another important differentiating factor is IAS, International Accounting Standards, are being issued by International Accounting Standards Committee, whereas this IFRS is issued by International Accounting Standards Board. And now they have improved international accounting standards to make them truly global. Now, last important landmark here when it comes to global accounting is this 2005. All the global entities started following IFRS from them. So from then what have happened is two sets of widely accepted accounting standards have been emerged. One, this IFRS, which are followed by non-US clients, and another set of financial statements, another set of accounting standards are nothing but US GAAP. Because this US people will always want to display their status. They will not agree a common thing where the rest of the world agrees. They want to show their superiority, they want to show their dominance. So that is the reason US country have not directly agreed to follow this IFRS. So what have happened is they have designed their own accounting standards, and rest of the US, mostly all other countries will be following this International Financial Reporting Standards. So then what this US country will follow, it have issued their US GAAP on their own. Those were issued by US Financial Accounting Standards Board, which is called as FASB, and this will be followed by US trains. So this is the little history which you want to understand with respect to the global financial reporting standards. Okay? Yes, sir. Now what you have to understand is, Sir, why India need global accounting standards? Because you guys have already know that we India already have accounting standards. So what is the reason for introduction of completely a new set of standards which are nothing but Indian accounting standards? Guys, whatever the points which you are seeing in the screen, I want you guys to write all these points because I have designed a very point on point summary notes for you. If you copy this is more than sufficient. Nothing other concepts or no other books you have to refer. So this is more than sufficient. So what I just wanted you to do is, after completion of any topic, you just have to pause the video. You just have to pause the video, and while going live, you don't have any option. You can just aram se rely upon me. Since this is the basics chapter, I am not giving time to note down, but other chapters, of course, you can note down along with me. But students who are opting for recorded mode, what you have to do is, after completion of, for example, certain topic, pause the topic and make the notes. That is what I just want you guys to know. Okay? Yes, Baba. Huh. So when it comes to this, sir, why exactly India need global accounting standards? The reason is pretty simple, guys. India have already reached to greater heights. That India have already started entering into different cross-border transactions. Which means if India don't want to opt for this international accounting standards, if India is very much reluctant to go for Indian accounting standards, if India still chooses to prepare accounting standards based in financial statements only, then it is very difficult for the other investors to invest in Indian companies, obviously. So there needs a change. And second one, if you observe, many Indian companies have reached a global marks, and those require international capital. Those require capital from different investors all across the world. The reason is pretty simple and pretty same, that each of the countries, if they follow different accounting standards, basic financial statements, it is obviously difficult for the investor to make comparisons and make an investment. If you observe, the third point is also pretty simple. If you want to compare financial statements of different countries which are prepared upon different accounting standards, again it is very difficult for any investor to make a comparison kind of thing. And also the last part is complicated financial instruments. We have derivatives which are taken place at a pretty normally intraday trading. Securities are there, options are there, futures are there, interest rate swaps are there, and interest rate risk management, huge derivative contracts are there, which is not addressed in the existing accounting standards. Even if you check, for example, business combination standard also, if you check, whatever the things which are there in our earlier accounting standard, they are not that much comprehensive, but Ind AS have taken those into next level, and it have covered a complete set of possible combinations, which means our existing standards will not address all these, what should I say, all these limitations. So that is the need. India have to introduce something. India have to go global and need to introduce something which are called as global accounting standards, Baba. That's it. Yes, sir. Next, what have happened is, before introduction of this Ind AS, we already have accounting standards. The introduction relating to this accounting standards, you guys have already know at ICMAI inter level. So now what I have been doing is, I will be only explaining you what are the relevant standards, relevant introduction I thought of needing, only that will be explaining to you. Accounting Standard Board in India will issue different accounting standards. So as of today, this I'm talking about earlier accounting standards. These are not Ind AS, Baba. These are earlier accounting standards. So we have totally how many accounting standards, sir? 27 accounting standards are there. Most of the accounting standards, of course, whatever relevant, you have already learned in your CMA inter. But this accounting standards are not at all relevant in CMA final level. In our CMA final, so what is relevant is pretty simple. Only Ind AS will be required in our examination, Baba. This thing you have to be very much clear. And another thing is, for the preparation of financial statements also, as I have explained, if you are an Ind AS based company, you have to follow Division 2 of the Schedule 3 to the Companies Act. Division 1 and accounting standards are not at all relevant for us with CMA final level. This thing I wanted to make again very clear to you. Next, if you observe, in 1977, our famous Institute of Chartered Accountants of India have formed Accounting Standards Board. What have happened is, it do not sit idle. It have observed different countries. It have observed international accounting standards also, and later on it have observed international financial reporting standards also, because these are issued from 2001 onwards. But okay, I mean, from this 1977, what have happened is, it have observed IAS also and IFRS also, and it have prepared own accounting standards which needs to be applied in our country. And obviously those standards we have not exactly copy pasted, because those standards have designed in order to suit their economic conditions. In the same manner, we have designed new accounting standards according to the economic conditions of India. And what is the thing which you have to observe is, these standards are only recommendatory in nature. These accounting standards are earlier not mandatory, Baba. These are only recommendatory in nature. Of course, afterwards they have made this recommendatory standards mandatory also, but later they have made it mandatory. Next landmark here, what you have to observe is 2006, Baba. This 2006, there is something called as G20 summit, which is even conducted now as well. But this what have happened is, India committed to the entire world that Baba, we will also follow international standards. They have said this, they have committed this in 2006 itself, but getting approvals, preparation of international accounting standards based on our economic situations or economic conditions is not that much easier. So what have happened is, implementation, actual implementation of these standards have taken place in 2015. From 2006 they have been preparing, and from 2015 they have started implementing these Indian accounting standards. And they have not made these Indian accounting standards applicable for all entities, because that is not at all possible, Baba. Because Ind AS require huge amount of disclosures. Perfect financial presentation is required when it comes to Ind AS, which normal companies or other entities may not afford. So what they have decided is, from this date they have started implementation of Ind AS, and they have clear cutly made that applicability of Ind AS in phase wise manner. So what exactly are the companies which are covered in the applicability of Ind AS, that will be explained a little bit later, Baba. In this class only I will be explaining. So to summarize, what I will be explaining you is, two rules are there. Companies Accounting Standards Rules 2006, which means earlier, now it have mandated, now it have amended to Companies Accounting Standards Rules 2021. It have mandated all companies to apply Ind AS. Till then, accounting standards are only mandatory in nature, but from this, they are all companies have to apply the accounting standards. Next one, MCA notified Ind AS rules 2015, and from this it mandated application of Ind AS. Sir, for which companies Ind AS are applicable? Rightly you can understand like this: listed companies, or if you are a big company, if you are a large company, for you, Baba, Ind AS will be applicable. So this is the thing which I want you guys to understand. If you are a big company or a listed company, for you Ind AS are only applicable. If you are a company which is not a listed, which is not a big company, then for you earlier, whatever the accounting standards which are there earlier, still those accounting standards will be applicable even for you now as well. Okay? Yes, Baba. So to conclude, in India presently, both Ind AS is also applicable, accounting standards is also applicable, but for a different set of companies. That is the thing which you have to understand, Baba. Small companies will still apply accounting standards only, whereas listed companies and big companies or large companies will apply this Ind AS. Okay? Yes, Baba. Next, sir, what exactly happened? India have said that it will adopt to new international standards. Sir, have they exactly copy pasted, or of course we have prepared our own accounting standards based on the international standards is the question. Whether it have exactly copy pasted, IFRS or Ind AS, or whether it have prepared their own accounting standards, but the basis is they have taken from the international standards is the question. So if any company wants to comply global accounting standards, there are basically two methods, Baba. So that I have explained here. Those are called as adoption versus convergence of global accounting standards. Any country can become IFRS compliant in two ways. First one is adoption process and second one is convergence process. Sir, what is the meaning of adoption process? Adoption means no usage of brains, nothing, entire copy paste, entire standard of international standard will be copy pasted with respect to your entity or your country, Baba. India has not did adoption. India has not did adoption. India have went for this process which is convergence process. Sir, what is the meaning of this word convergence process? Countries will make adjustments based on the economic conditions. Countries will develop own accounting standards by taking IFRS as the basis. And India have done exactly this. It have opted for converged IFRS, which means India has adopted converged IFRS with few changes, and those changes will be called as carve-ins and carve-outs. A detailed discussion is having with respect to this word carve-ins or carve-outs later. But now what you have to understand, India has not exactly copy-pasted international standards. It have converged IFRS. Converged means it have prepared own accounting standards, of course by taking international standards as the basis. So this is the things which we have to remember, which are very essential. Okay. Yes, Baba. India has opted a converged IFRS in order to make global accounting standards. The next part, if you observe, fine. Sir, what is the exact numbering of Ind AS? Because you will come to know very shortly that some Ind AS we are having from 1, 2, 3, 4, 5, 6 like that, and some Ind AS we are having from 101, 102, 103 like that. Sir, why exactly there is a difference between that? Very simple. Guys, I have already said that. Sir, we have two sets of international accounting standards even now also. What are those two sets of international standards, Baba? First one is IAS and second one is IFRS, which means India have retained the numbering of these IASs exactly. So what is the meaning of this? If IAS 1 is there, India has given name to that IAS as Ind AS 1. If IAS 20 is there, Ind AS 20 is the exact name which have been given. If IAS 16 is there, Ind AS 16 is the exact numbering which they have given, which means very simple, Baba. India retained the numberings used by the IASC in the preparation of IAS. For example, if IAS 1 is there, which talks about presentation of financial statements, we have given it as a name Ind AS 1. This will talk about presentation of financial statements. But when it comes to IFRS, because I said that IFRS is also currently issued, if I have continued the numbers, obviously it may bring a sort of inconvenience to the users. So what they have did is they have started a different series, and that series will be starting after 1. For example, if IFRS 1 is issued, I will name that as Ind AS 101. If IFRS 2 is issued, I will rename that as Ind AS 102. If IFRS 3 is issued, I will rename that as Ind AS 103, which is very simple. IAS, I will exactly retain the same number. But when it comes to IFRS, that will be added plus 100 to that IFRS number, and now our Ind AS number will be achieved. Simple, Baba. IFRS 1 means Ind AS 101. IFRS 2 means Ind AS 102. IFRS 3 means Ind AS 103. And like this, they have given a numberings, Baba. And next thing is, currently, if you observe, there are 23 international accounting standards and 16 IFRS are there in total. Earlier, 1 to 41 international accounting standards are being issued, but later some are deleted and some are modified. But as of now, we are having only 23 international accounting standards and 16 IFRS we are having. ठीक है बाबा? Yes. So this is the very basic understanding which you guys should have. So the things which we have covered till now are this financial reporting part we have covered. After that we have covered the rules for the preparation of financial statements, and after that we have covered what exactly is the meaning of financial statements and for which entities this division 1 of schedule 3 is applicable. Are Baba, these are applicable for accounting standard compliant companies. If you are an Ind AS accounting compliant company, for you division 2 of schedule 3 will be applicable. Detailed discussion is there with respect to division 2 of schedule 3 in the next class, because that is going to be the real game changer. You guys have to understand that exactly. Theek sir. Next, we have understood the history of global accounting standards. We have understood how IASC is constituted and what are the standards which are issued by IASC, and those are nothing but international accounting standards. And next, we have understood in 1989 IOSCO is there, which have mandated all the countries to improve their international accounting standards, and after that in 2001 IASB have come and replaced IASC. Correct. And 2005 onwards, there are totally two sets of widely accepted standards. One is US GAAP and another one is IFRS. Next, we have understood why exactly India need global accounting standards. And next one we have understood, sir, before Ind AS, what are the existing ASs which are there and all we have understood. And after that, India have adopted converged IFRS. India have not directly adopted, Baba. Excuse me. India has followed converged IFRS to make them suitable for Indian environment. Next, we have understood how exactly the numbering of these indices are done. Also, we have understood. Okay. So these are the things which I want to keep very short in the first class. So from tomorrow onwards, I will be explaining you, sir, what are the companies for which Ind AS are applicable? Excuse me. And what are the companies for which Ind AS are applicable? And Baba. Next, I will be explaining, I will be opening division 2 of schedule 3 to the Companies Act 2013, because that is the new set of balance sheet, that is the new set of profit and loss account which we guys have to follow, Baba. So in our next class, our agenda is to complete division 2 schedule 3 ka balance sheet and division 2 schedule 3 ka profit and loss account as well, because that is the most important discussion which is going to be, because that is the new format which we guys have to know, and in our examination we have to present the division 2 ka schedule 3 presentation only, because in our syllabus there are only Ind AS which are there. Okay? Yes, Baba. So, hi guys, good evening. Am I audible and is my video clear? Can you just confirm? Can you just confirm whether my audio video is everything is clear or not? So, can you just confirm, any one of you, either Lingeshwar or Jyoti? Okay, fine. Good evening, Prasad. Good evening, Lingeshwar. Good evening, Jyoti. So, first of all, have you gone through the earlier video which have been shared in the app? A quick response, a quick heads up. Have you guys already watched or didn't get time to watch that? I'm waiting for your answer. Okay, no worries. Okay, very good, Jyoti. So, fine, Baba. I'll just take a quick 3 to 5 minutes time in order to just go through what all the things which I have covered in the last class. Strictly speaking, in last class, I have just explained the paper pattern of how exactly our institute is basically testing and what all the chapters which are covered in the our curriculum, and also how our approach is going to be. So these are all the things which I have covered in the last session. So after completion of that, I have just started with a little bit introduction of what exactly is the meaning of this word, which is financial reporting. If you observe the word which is financial reporting here, just a moment. Yes, if you observe the meaning of financial reporting, it is nothing but obviously the communication of a financial position. How financial position? I mean, what exactly is the position of an entity which is there? That communication of an organization through the entity's financial statements, because this presentation or this communication is essential not only for shareholders, rather this is essential to all its stakeholders, which include shareholders, even management, creditors, regulators, etc. So why it is useful to all these persons, I have very clearly explained in the video, so you guys have definitely watched that part. Second part what I have explained is, in India, MCA have notified the following two rules for the preparation of financial statements. Those two rules are pretty simple. There are some accounting standards which you guys have learned at CMA Intern. Do you remember those accounting standards? The reason why you have learned those accounting standards are because of this rules only, which are nothing but companies accounting standards rules, which are 2006. Only because of this reason only, there are some companies which even as of now, even after the Ind AS have been introduced, still there are some companies in India which are still following accounting standards. The reason is pretty simple. Now these rules have been amended to Companies Accounting Standard Rules 2021. Then there is another set of rules which is nothing but Ind AS ka rules, and these rules are specifically applicable for so hello guys, is my video visible? Just now the power is back. Can you just confirm? Let's quickly start. Is it visible now? Fine, 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 Jyoti, fine. Very good. Thanks for confirming. So if you check this, rules for preparation of financial statements, I have stopped it here, Baba. Text back of you is not visible. Just a second. Okay, that will be adjusted. Don't worry. That will be adjusted. Don't worry. Okay, fine. So now what you have to remember is, in India, with respect to the preparation of financial statements with respect to companies, two standards are there in common. So those two standards are nothing but, the first one is you have to follow accounting standards also while preparation of financial statements, and second set of rules are nothing but these companies Ind AS rules, which are applicable for listed companies and for large companies. Now you have to understand this thing, guys. Ind AS are applicable for listed companies and also for large companies. But when it comes to accounting standards, these are applicable only to few companies which follow accounting standards. And this is very simple. In the current class itself, I will be explaining for which companies Ind AS is applicable and for which companies AS are applicable. I will be clear-cutly explaining you those things. But what you have to remember is, if you have to prepare accounting standards, if you have to prepare financial statements on the basis of Ind AS, you have to follow the format which is given in Division 2 of Schedule 3 to the Companies Act 2013. But if you are a company for which accounting standards are required, if you are a company who have to prepare financial statements as per accounting standards, the pro forma which you have to follow is Division 1 of the Schedule 3 to the Companies Act 2013. This thing you have to remember. Only crux, if you are Ind AS company, if you have to prepare financials as per Ind AS, you have to follow Division 2 of Schedule 3. Arey Baba, this Schedule 3 itself I will show today only. I will show today only this Schedule 3. So you guys, no need to worry at all. So after this, the next part is, there I have explained, sir, what exactly is the meaning of financial statements which is required. In Division 1 of Schedule 3, if you observe, this is nothing but, you guys have already know this Division 1 of Schedule 3. In your CMA Inter, whatever the balance sheet which you have learned, whatever the P&L account which you have learned, whatever the notes to accounts which you have learned, those are exactly same. That was given in Division 1 of Schedule 3. But if you remember, these four are nothing but the components of financial statements there, which means balance sheet will be there, statement of profit and loss also will be there, CFS, cash flow statement, is also there, and notes to accounts is also there at your inter-level CMA. And that is specifically given in Division 1 of Schedule 3 to the Companies Act. But now at final level, we don't have this Division 1 of Schedule 3, Baba. You have only one thing, which is Division 2 of Schedule 3. So our today's agenda is to go ahead and watch this Schedule 3 as to how exactly that balance sheet has to be prepared when it comes to Division 2, which means Ind AS companies, how it have to prepare the balance sheet and all. I have clear-cutly explained. I will explain in today's video. So that is the basic part. If you observe, four of the components of the financial statements were exactly same as per Division 1. But the thing is, presentation is being changed. Sir, how exactly they are changed, I will explain in today's class. But apart from these four items, balance sheet, statement of profit and loss, CFS, cash flow statement, and this notes to accounts, there is one thing which you have to remember, that is nothing but statement of changes in equity. This is the thing which you are never aware of, and trust me guys, I will explain this concept in next level. I am going to take this concept into next level with the help of my knowledge. Okay? Yes. So after that, this history of global accounting standards, I am not revising now because I have very much nicely explained in the video. So you guys can watch the video after completion of today's lecture as well. That is going to definitely help you. So this I am not touching. Now what I will be touching is to summarize, sir, what exactly you have covered in the last class. If you want to ask me, I will just only give you one thing. That is nothing but, if you are a company, for which in order to prepare financial statements, if accounting standards needs to be followed, then you have to follow division 1 of schedule 3. This is the thing which you have to remember. Whereas if you are an entity which have to prepare financial statements but on the basis of Ind AS, Are Baba, now you have to follow something called as division 2 of schedule 3 to the Companies Act 2013, and this exactly is going to be learned by us in today's lecture, Baba. Fine, sir. Next one, if you observe, so right now let us understand, sir, what exactly to what companies these Ind AS are applicable, because earlier I said that to listed companies and for big companies Ind AS is applicable, is what I have mentioned. So the first point you have to understand is, guys, I want you guys also to write along with me, and that is nothing but the point which we will be learning here is applicability of Ind AS. I want you guys also to write along with me. Sir, to which companies exactly these Ind AS are applicable? This point I will be explaining now. If you observe, this Ind AS is specifically applicable for all the listed companies. This Ind AS is applicable for all the listed companies. So here I will write companies which are listed, companies which are already listed, or companies which are in the process of listing. If you are already a listed company, Baba, no choice, you have to apply Ind AS. Or if you are an entity which are in the process of listing, which means you have decided to go for listing, but many of the approvals from SEBI and all are still pending, which means you are not listed entity enough, but you are in the process of listing. Even for you also, this Ind AS is going to be applicable. And remember one thing, guys. Sir, what is the meaning of this listed? Listed means not only equity share, even debenture, even preference share, any of your security, if it is listed, then for you Ind AS is going to be applicable. So if you are a listed company or if you are in the process of listing, for you Ind AS are definitely going to be applicable. Listed meaning any of its security. Okay, sir, first point is pretty clear, sir. Now let us check the second point, Baba. Second point, if you observe, if you are an unlisted company, whose, guys, they have prescribed now net worth criteria, whose net worth is more than or equal to 250 crores. Net worth is more than or equal to 250 crores. This net worth you have to check as on the last date of, as on 31st March of the previous year. You have to check. If you are an unlisted company whose net worth is more than 250 crores as on 31st March of the previous year, then from current year onwards for you Ind AS are going to be applicable. Now I want you guys online students to respond, sir, what is the meaning of net worth? You have to tell me what exactly is the meaning of net worth. I am waiting for your answers. So please tell me what is the meaning of net worth. I think you guys have already heard this term called net worth. So I'm waiting for your answers. What do you know about the net worth? Even if it is wrong answer, still it is totally fine. I just want whether you guys have know this meaning net worth or not. I'm waiting for your reply, guys. Lingeshwar, Prasad or Jyoti. Have you guys aware of the term net worth? Brilliant. Okay. Some of the students have replied net worth is nothing but value of all assets. Very good. Jyoti have said that you have to take assets minus liabilities. Okay, very good, guys. You guys have partly correct. The thing is, this net worth you will get when you deduct net worth is nothing but total assets minus outside liabilities. You have to take outside liabilities or total assets. This is one way where you will be getting the exact meaning of the term net worth. Guys, net worth is more than 250 crores is not a normal thing. Turnover can be more than 250 crores for many entities, but when it comes to net worth, you have to check the actual worth of the company. Sir, how I will understand the actual worth of the company? Very simple, Baba. Take the total of all assets from the balance sheet and you just have to deduct outside liabilities from the liability side. Then whatever the figure which you will be getting, that will be called as net worth, and you have to check that net worth. If it is more than or equal to 250 crores, then for you Ind AS are applicable. Then for you Ind AS are applicable. And the third part, if you observe, third part is nothing but REIT. REIT is called as Real Estate Investment Trust. Real Estate Investment Trust and INVIT. INVIT is called as Infrastructure Investment Trust. INVIT is called as Infrastructure Investment Trust. Guys, these are the two entities which you will exactly understand in CMA final direct taxes paper. What is the meaning of this REIT and INVIT? You guys will understand while discussing CMA final direct taxes. So as far as accounting is concerned, these two are not at all important from our perspective. So I am not touching upon these areas, but you will get definite clarity when you will discuss CMA final direct taxes chapter taxation of various entities. REIT, Real Estate Investment Trust, and INVIT, which is nothing but Infrastructure Investment Trust. These two are notified by SEBI. These two are notified by SEBI. So if you are in real estate investment trust or if you are in infrastructure investment trust, for you, what is applicable? For you, Ind AS are going to be applicable. If you check the fourth point, any other entity notified by the CG. If central government wants to notify any person for which Ind AS are applicable, then for you Ind AS are going to be applicable. So there are only 4 entities which you have to remember for which Ind AS are applicable. First one, very simple. If you are a listed company or if you are in the process of listing, then for you Ind AS are definitely applicable. Second one, Baba, if you are an unlisted company whose net worth is more than or equal to 250 crore as on 31st March of the previous year, you have to take. If your previous year ka 31st March ka figure is more than 250 crores, then from current year onwards, for you, Ind AS are going to be applicable. The third point, if you are a REIT or if you are a INVIT, if you are notified by SEBI, then even for you also Ind AS is going to be applicable. And the last point, if central government notifies you as an entity for which Ind AS are applicable, then Baba, no chance, you have to follow Ind AS only. Understood, Baba? Yes. One thing you have to understand. Assume there is one entity which is A Limited. This A Limited is a listed company. If this A Limited is a listed company, obviously for A Limited, Ind AS is applicable. Because of the first point, if you are a listed company, for you, Ind AS is going to be applicable. So if A Limited is a listed company, assume B Limited is holding 80% of shares in A Limited, which means now B Limited is called as holding company. Correct or not? And this A Limited is holding 60% of shares in AA Limited, which means this AA Limited will be called as subsidiary of A Limited. And assume there is another entity which is holding, A Limited is holding 30% in AAA Limited, which means this AAA Limited is also called as associate of A Limited. Which means if for one entity Ind AS is applicable, then for all the group entities. Guys, this type of entities will be called as group entities. If you want complete clear-cut clarity as to what exactly these group entities are means, guys, we have to wait till consolidation chapter, because there I will give 100% clarity on this structure. But I can assume that you guys have already know about these terms called holding company, subsidiary company, associate company. I am assuming that you guys have already know this. So with this notion, if for A Limited Ind AS are applicable, then even for A Limited, for AAA Limited, for B Limited, for all of you also, Ind AS are going to be applicable. B Limited is saying, Arey Baba, I am not a listed company. My net worth is not more than 250 crores. Still, if any one of your group is an Ind AS compliant company, then all the group companies have to apply Ind AS for sure. There is no relaxation or no kind of restriction kind of a thing. If in a group entity, any one of the company is Ind AS compliant, then all entities should definitely follow Ind AS. Clear, Baba? Yes, so let us write this point as well. If Ind AS applies to any one entity in a group, then all group entities in brackets associate or subsidiary or joint venture should also follow Ind AS. Guys, I hope you guys have written this point. So if you just give me a heads up that you have written, I will continue with the next thing. I hope this point is very clear to all the students. So can you just confirm whether you guys have understood what I have tried to say or not? The applicability part of Ind AS. Have you guys completed this part? Then please type OK so that I can start with the next thing, which is applicability of accounting standards. So if you guys have completed, I will immediately start with the next part. That is nothing but applicability of accounting standards. Very good, Jyoti. Very good. Thank you so much for your response. So yes, guys. Now, let us start applicability of accounting standards, because we have already understood that accounting standards are also still applicable. Okay, Lingeshwar, copy this fast. No worries. You have to write along with me, Lingeshwar. Since this is the first time, it's okay, but later on you have to really write along with me. Okay, fine. Just tell me once you are done so that I can proceed. Meanwhile, please go through what we have written, Jyoti, so that you will get a complete clarity as to the applicability. Okay, fine. Just a moment. Okay, fine. Now, let us check applicability of accounting standards. Guys, you have to remember one thing. Here, which companies are covered, guys? Here only companies which are listed or in the process of listing is covered, or if you are an unlisted company whose net worth is more than or equal to 250 crores, you are covered, which means there may be other companies also which are small companies. Sir, I am a company, my net worth is only 1 crore, which means for me, Ind AS are not applicable. For you, accounting standards are applicable because of the rules which I have explained in the last class. Because of those rules, if you are a company, guys, you can write along with me. If you are a company other than those who follows Ind AS, if you are a company for which Ind AS is not applicable, then for you what is applicable? Accounting standards are applicable. And the second part is, sir, if you are a non-company, sir, non-company means non-corporate entity, then institute is there. ICAI has mandated, ICAI requires the application of, accounting standards on non-corporate entities. It is very simple. If you are a company, you have to follow AS. If Ind AS is not applicable, then you have to follow AS. Sir, who said that I have to follow AS? Arey Baba, simple. Your accounting standard rules, company's accounting standard rules itself have specified that. Correct or not? Sir, I am not a company. Then who have mandated me to follow the accounting standards? For certain entities, ICAI have required that for you, accounting standards needs to be applicable. For which companies or for which entities, I mean for non-company entities, for which entities accounting standards are applicable? That is not there in our syllabus, nor it is not required for you to remember them also. To summarize, you just have to remember, if you are a company, if for you Ind AS is not applicable, for you AS are applicable. That is the first point you have to remember. If you are a non-company, ICAI is there, which will make you have to follow accounting standards. That is the thing which ICAI will take care of. But as of now, if you are a non-company, ICAI will mandate whether you have to follow accounting standards or not. So for which companies it is applicable and all is not there in our syllabus, that we have already completed at CMA inter levels. Fine. Yes. The last point which you have to understand is banking and insurance companies. Banking and insurance companies. This you have to understand. Banking and insurance companies के लिए, for this entities also, still Ind AS is not applicable in India. Guys, I am telling you the reason why for banking and insurance companies Ind AS is not applicable. Because, guys, actually speaking, India, our government is basically trying and asking these entities also to follow Ind AS. But banks and insurance companies are not actually following this Ind AS because of the reason, if they follow Ind AS, they are going to disclose. Their disclosures are very stringent. They have to disclose many items. For example, If you remember NPA, non-performing asset, the disclosures with respect to that NPA is very much stringent. They have to do lot of disclosures when it comes to NPA, or whether where their investments are exactly going to be, which will expose many banks and insurance companies. They may not they may not be liking to show such kind of disclosure, so because of which they are not basically following this Ind AS. But trust me guys, our government will definitely bring these banking companies also and insurance companies also into the application, into the ambit of Ind AS. But as of now, Ind AS are not applicable to banking companies and insurance companies. This you have to remember. Okay, fine. Now I want you guys to draw a quick summary of the applicability of Ind AS. Applicability of Ind AS. One quick summary you have to draw, Baba. 1 second. Here I want you to write non-applicability of Ind AS. Non-applicability of Ind AS. First, Ind AS are not applicable for banking companies and insurance companies. This you have to remember. Banking and insurance company. For you, all ASS will be applicable. For you, all accounting standards will be applicable. Next, sir, if you are a company entity, if you are a company entity, if for you this company entities are divided into SMC and non-SMC. SMC means small medium companies and non-SMC means it is generally a big company kind of a thing. But sir, which company is SMC and which company is non-SMC is also not there in our syllabus. What they have did is, for some companies, if you are not a listed company, but if you are a big company, for you all accounting standards are applicable. For you all ASS are applicable. But if you are a SMC, which means you are a small company, therefore for you all standards are not applicable, only limited ASS are applicable, which means relaxation they have given to you. So only limited ASS are applicable for SMC company, SMC entities. So the next type of summary which you want to write is, if you are a non-company entity, if you are a non-company entity, guys, here this non-company entities are divided into two parts for the purpose of applicability. Again, this is also similar kind of thing. If you are a level 1 entity, based on turnover and capital, they have categorized this entity into level 1, or the other types of entities are level 2, 3 and level 4. If you are a level 1 entity, no relaxation, Baba. All ASS should be applicable. If you are a level 2 or level 3 or level 4, only limited ASS are applicable. This you guys have to understand. First, copy this part. I will once again touch upon this. Just a 1 minute time, you have to copy this, and then slowly I will once again make you explain this, and then we'll start with the proforma. Very important proforma I will start, but once you have completed this, then I will start. Guys, please confirm once you have written this. Still 7:30. Still writing? Please confirm, guys. Brilliant, Jyoti. Brilliant, Lingeshwar. Super. Now, I will once again summarize what exactly you have to remember. You have to exactly remember the applicability of Ind AS. SMC is nothing but small medium company by small medium company, Lingeshwar. Okay, fine, sir. Applicability of Ind AS. First of all, if you are a listed company or if you are in the process of listing, for you Ind AS are applicable. If you are an unlisted company whose net worth is more than or equal to 250 crores, for you also Ind AS is applicable. If you are a REIT, which is Real Estate Investment Trust, or if you are a INVIT, which means an Infrastructure Investment Trust, for you also Ind AS are going to be applicable. Plus, if you are in any entity which is notified by the central government, for you also Ind AS is applicable. Next, you are one entity in a group. If for you Ind AS is applicable, then for your all group companies, your holding company, your subsidiary company, your associate company, also Ind AS is going to be applicable. If you check the applicability of AS for companies other than which are covered in Ind AS, if you are a company for which Ind AS is applicable, go and follow Ind AS. We can't help you. But if you are a company which is not covered in that, then you have to check whether you are an SMC or a non-SMC. If you are a small medium company, then they are saying, okay Baba, since you are a small medium company, you cannot follow all the accounting standards. Therefore, what we will give? We will give few relaxation to some accounting standards. Sir, which standards are applicable, which standards are not applicable? Guys, that is not at all there in our syllabus. So I will not teach you that part. This is very clear. Yes, sir, we have clear. That is clear. But if you are a non-SMC, which means you are a big entity, then for you no relaxation is there. You have to follow all the accounting standards. Sir, but I am a banking company or an insurance company. For me, which standards needs to be followed? Simple, Baba. As of today, banking and insurance companies are not following Ind AS. So you have to follow all accounting standards. No relaxation is there for you. Sir, I am a partnership firm. I am not a company only. I am not a company entity. Then for me, whether, I mean, what are the standards which needs to be applicable for me? Simple. If you are a level 1 entity, sir, what is the meaning of level 1 entity? Not there in your syllabus, so I am not teaching you. I am making that thing very clear. Since it is not there, I am not teaching you. If you are a level 1 entity, based on some turnover, based on the paid up capital, based on the net worth, they will define what is the level 1, level 2, level 3, level 4 entities. If you are a level 1 entity, no relaxation, which means all ASs are going to be applicable for you. But if you are a level 2, level 3 or level 4, for you only few ASs are applicable. So this is the part which you have to remember. That's it, Baba. If you are fine, we'll move to the next thing, which is the most important discussion which we will be having now. And that is nothing but the balance sheets pro forma, which I will be explaining now. The most important thing which you guys have to remember is nothing but, so please write along with me, this is nothing but division 2 of Schedule 3, Division 2 of Schedule 3 to the Companies Act 2013. Division 2 of Schedule 3 to the Companies Act 2013. Okay, fine, sir. We have kept the heading Division 2 of Schedule 3 to the Companies Act 2013. Baba, first you have to understand one thing. You can write along with me this thing also. Division 2 is applicable for Ind AS companies. Is applicable for Ind AS companies. Which means companies, in order to financial statements for which companies Ind AS are applicable. For you, which is applicable? Division 2 of Schedule 3 is applicable. I will show you the Schedule 3 also very shortly. Don't worry. Then Division 1. Here I will write Division 1 of Schedule 3. This is applicable for AS compliant companies. If you are a company for which accounting standards are applicable, then which division you have to follow? Sir, I have to follow Division 1 of Schedule 3. Theek Baba? Yes, sir. We have understood what you are exactly trying to say. So first I will open that Schedule 3. Okay, let me just open right now itself. Schedule 3. So check this, guys. This is nothing but Schedule 3. If you look at Schedule 3, Division 1. This Schedule 3 ka Division 1 is applicable. If you read this part, financial statements for a company whose financial statements are required to comply with the company's accounting standards rules. If you are a company for which accounting standards are applicable, then you have to follow Division 1 of the Schedule 3 to the Companies Act 2013. This is the thing which you have to remember. But if you are a company let me show you the Division 2 as well. Just a moment, guys. Division 2. Which page it is? This one. If you look at Division 2, Division 2 is clearly saying if you are a company whose financial statements are drawn in compliance of the company's Indian Accounting Standards Rules 2015. I will compare both balance sheets and I will make you to remember the exact items of the balance sheet till the completion of today's session, guys. So I want your complete 100% attention from now till the end of this session, because this is going to be a very important discussion, guys. So fine, sir. So now I have clearly written here also that Division 2 is applicable for Ind AS companies and Division 1 is applicable for AS compliant company. So then now let us write, sir, what are the components of financial statements? Write along with me. Components of financial statements. Guys, this we have already written the components of financial statements. You have already know that. The first part is nothing but balance sheet. The first component is nothing but balance sheet. If you look at the second part is nothing but statement of profit and loss, which is nothing but P&L account. This also we will see, guys, don't worry. And the third part, if you observe, it is nothing but cash flow statement, which is also known to most of the students. And if you check the fourth part is nothing but statement of changes in equity. statement of changes in equity, and the last part is nothing but notes to accounts. Last part is nothing but notes to accounts. Guys, if you check schedule 3, the complete guidance with respect to the preparation of balance sheet is clear cutly given in schedule 3 only. This statement of profit and loss also is clearly given in schedule 3. This statement of changes in equity, which is shortly called as SOCIE, for this also we are having an in-depth discussion. And notes to accounts is also there. Guys, these 4 items, balance sheet, statement of PL, statement of changes in equity, and notes to accounts, for all these 4 items, complete clarity, complete guidance they have given in division 2 of the schedule 3 to the Companies Act only. But if you look at this cash flow statement, this is not provided in schedule 3. Sir, then where we have to understand where the guidance with respect to the cash flow statement is provided? Arey Baba, if you want that, go ahead and follow Ind AS 7, because Ind AS 7 may they have clear cutly given the guidance with respect to the preparation of cash flow statement. Fine, sir. Other 4 items, balance sheet, statement of P&L, statement of changes in equity, and notes to accounts, guidance is clear cutly given in schedule 3. Okay, that point you have to remember. Okay, fine, sir. So here I am going to write that point, and that is nothing but format of balance sheet or statement of profit and loss. Next part, SOCIE, which means statement of changes in equity, and the last, notes to accounts, is clearly given in division 2 of schedule 3. Division 2 of schedule 3, they have clear cutly given the guidance of the format of balance sheet, statement of profit and loss account, SOCIE, notes to accounts is clear cutly given in this part. Understood? Yes, sir, we have exactly understood. So we have exactly understood what you are trying to say. Yes, sir. Next part, guys. So here you have to understand one thing. Guys, at your CMA inter level, no need to copy, now just listen. At your CMA inter level, if you remember, you already know how balance sheet is drafted according to the Companies Act. Schedule 3 only you guys have known at that time also. But whatever you have known is nothing but that was clear cutly given in division 1 of schedule 3 to the Companies Act 2013. Division 1 schedule 3, because for you at that time AS is applicable, but now you are at final level. So in final level, division 1 is not applicable, division 2 is applicable, because instead of AS for you, Ind AS are going to be applicable. This is the clarity which you have to maintain. Sir, now what will be changing? Guys, entire balance sheet presentation will undergo change. This point you have to remember. It is not here and there changes, it is completely changed. Presentation requirements of Ind AS are completely changed. That point you have to understand. I will open the previous balance sheet which you have learned at your inter level also, and I will compare CMA final level balance sheet also. And trust me guys, there is no need for us to remember once again whatever we have did in CMA inter. No need to learn both. In our exam they will focus only this final level balance sheet only, because going forward there are many chapters wherein we have to prepare consolidated balance sheet in consolidation chapter also, and there are many chapters wherein we have to prepare balance sheet. So it is our responsibility to get a complete clarity right now itself. Going forward, that should be very smooth enough. So now let us focus on the balance sheet pro forma, the balance sheet format. So now what let us do is, let us quickly come to schedule 3, Part 1, balance sheet. Guys, you have to confirm, have you remember this kind of format which you did at your CMA inter levels? You just have to type yes if you know this format, or you can type no. No sir, I have seen this format for the first time. I want your response in the chat box, because I'm sure that most of you students at your CMA inter levels, most not all the students, have definitely seen this type of format. So I want confirmation from your side. Very good, Guru Prasad, you are correct. So if you remember, the very first item of your balance sheet is nothing but equity and liabilities. If you remember, therein your first portion will be starting with shareholders funds. If you remember, starting you will write equity share capital. After that you will write reserves and cash surplus, and next money received against share warrants. Guys, if you remember, even if you have preference share capital also, that will be also sitting in this Eka part only, because that is the share capital, and obviously that is related to a funds of a shareholders. So that is the first part. And next, if you observe this share application money pending allotment, we will not write anything in that, so I'm not touching upon that thing. Then if you observe, you are having something called as non-current liabilities. First one, long-term borrowings. Next, deferred tax liabilities you are having. Other long-term liabilities also you have, long-term provisions also. Guys, I'm not explaining each and every point. I just want you guys to relate with whatever we have studied at the CMA inter level. Next, after completion of non-current liabilities, you have something called as current liabilities, short-term borrowings, trade payables, other current liabilities, short-term provisions. Then you will be taking the total of the liabilities. And when it comes to assets, first one we are having non-current assets. I think you guys have known about this. First you will start with property, plant and equipment. In this we have tangible, intangible assets. Capital work in progress is also there. Intangible assets under development also. Blah, 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 blah. Non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Current investments, inventories, trade receivables, cash and cash equivalents, short-term loans, advances and other current assets. This much pro forma you have learned at your CMA inter levels. Now trust me guys, this entire pro forma is total waste to you when it comes to CMA final level. At practicality, we have to follow division 1 for AS compliance, for AS companies, and you have to follow division 2 for Ind AS companies, which means that practically speaking, you have to remember both the formats. But for our exam perspective, it is fine if you remember only division 2, which I am going to discuss now. This is going to be the most important pro forma which you have to remember. And now I am exactly opening you that format. Clear? Yes, sir. So I will be opening that schedule, and it is nothing but this thing. Yes, sir. Part 1 of the schedule 3 division 2 says about how your balance sheet has to be prepared. Guys, I will make you write this format, but first you have to remember, you have to observe the differences which it is there. If you remember, division 1, AS companies will start with, just a moment, AS companies will start with liabilities. If you remember, shareholders funds. But trust me, here we have to start with assets, which is the first change which you have to notice. So firstly, you have to understand that our balance sheet is going to start with assets, and that too, there are different kind of classification even in assets also. Once this assets part is done, guys, I will explain each and every component, and by the end of the next session, so I am planning to end this session in the next 30 minutes. So till 30 minutes, I will be making sure that you guys will remember each and every line item of this balance sheet. I will give that much confidence. I am that much confident. I will give that much assurance that till the end of the session, if you watch, you will remember this for lifetime. Fine, sir. After completion of assets, then liabilities related thing will be started. I will be explaining that part. So here what you have to understand is, yes. So here what you have to understand is, First, let us try to remember the pro forma which is given for assets. Guys, the first thing you have understood that it is totally going to change. Second thing, I will make you remember the exact pro forma, then I will ask you to draw as well. We will definitely draw this, but first let us try to understand how exactly it is being organized. The first one is very simple. If you remember, assets side, liabilities side is going to be a cakewalk for you. So this total assets is further divided into two parts. First one, non-current assets. Don't write, guys, first listen. Let us try to memorize, then we will start. Second one, if you observe, we are having something called as current assets. In non-current assets, if you observe, you have to remember, in non-current assets, sir, we are having tangible assets first. After tangible assets, we are having intangible assets. After intangible assets, we are having a new item completely which is called as biological assets. I will explain, don't worry. After biological assets, we are having something called as financial assets. After this financial assets is done, we have something called as deferred tax asset. And once this deferred tax asset is also completed, we have something called as other non-current asset. Guys, I want you guys also to repeat along with me so that these things will be automatically fixed in your mind. The first thing, you are having tangible assets, intangible assets, biological assets, financial asset, deferred tax asset, and last other non-current assets. If you remember this, you will definitely remember the pro forma of the balance sheet. That I will take care of. First, completely trust me. You are going to enjoy this. Sir, we are having three tangible assets which you have to remember. How many tangibles, sir? Only three tangibles. We are having three intangibles which you have to remember. And we have only one biological assets. Sir, how many biological assets we are having, sir? Only one biological asset we are having. Sir, how many financial assets we are having, sir? Financial assets, if you observe, we are totally having four kinds of financial assets. How many, sir? Four kinds of financial assets we are having, Baba. Deferred tax asset, we are only having one, and non-current asset also we are having only one thing. So 3, 3, 1, 4, 1, 1. This is the format which you have to remember. Three tangible items, three intangible items, one biological assets, four financial asset, and one deferred asset, and one last thing which is nothing but other non-current assets. So these are the things which you have to remember. Guys, I am again writing, so you just have to remember the series, you have to remember the flow of the assets. First, we are having tangible assets. Sir, once tangible assets are done, we are having something called as intangible assets. That after this intangible assets are completed, we are having something called as biological assets. Sir, after biological assets, we are having financial asset. After financial asset, we are having something called as deferred tax asset. And after this deferred tax asset, we are having other non-current asset. This is the format which you have to remember. Sir, first let us understand intangible assets. What are the items which are there? Arey Baba, intangible assets, if you observe, the first item which you will be having is nothing but the tangible assets. If you observe, the first item which you will be having is nothing but property, plant and equipment, that you guys have already know about that. Second one, if you observe, after PPE, we are having capital work in progress. I will touch upon all these points, but just first let us try to remember these things. The third part, if you observe, PPE done, capital work in progress done, and then the last part which is called as PPE, capital work in progress, and the last part, if you observe, we are having investment property. These three are the tangibles which you have to remember. Sir, when it comes to intangibles, The first one which you have to remember is goodwill. The second one which you have to remember is other intangibles. The third one is intangibles under development. Intangibles under development. Simple, guys. 3 tangibles you have to remember, 3 intangibles you have to remember. After this, we are having something called as biological assets. Guys, this is completely new to you. This you have never heard earlier. So I will definitely touch upon this part, biological assets. I will touch. Next one, if you observe, we are having financial asset. Sir, what is the meaning of this financial asset? Guys, remember one thing. We have a very we have one standard wherein they will clear cutly explain about, sir, what is the meaning of financial asset and all. But for the time being, you have to understand financial asset is nothing but a contractual right to receive the cash. If I am having a contractual right to receive the cash, that is going to be a financial asset. Sir, can you give me one example? Definitely. If you have a debtor, if you have a debtor in your books of accounts, obviously you are having a contractual right to receive the cash in the future. So this debtor is going to be a financial asset. So another example, assume I am having an investment in subsidiary in any one entity. It is a contractual right to receive the cash in future. So obviously that investment is also going to be a financial asset in my books. Another example, assume I have given loan to some another person. Assume I have given loan to Mr. X. In future, because of the contractual relation between me and Mr. X, I am going to receive, I have the contractual right to receive the cash in future, which means that loan to Mr. X is also going to be a financial asset in my books. So this is the little understanding, complete understanding you will be getting by checking this part. So if you observe how the assets are being structured, the first three assets they have discussed are nothing but non-current assets. First three assets they have covered are nothing but tangible assets. Next, once these tangible assets are covered, next three assets they have covered are nothing but intangible assets. The next one asset which they have been covered is nothing but biological assets. Next four assets which they have covered are nothing but financial asset, deferred tax asset they have covered, and at last they have covered other non-current assets. Sir, can you please tell me what are the tangible assets which they have been covered? Guys, that is very simple. First one, property, plant and equipment. Second one, capital work in progress. Sir, what is this capital work in progress exactly about? Arey Baba, simple. Sir, I am constructing one property for myself, which is going to be a PPE in my books. So what have happened is, till the property is being constructed, it is work in progress. So whatever the work in progress which is there, if any asset is under construction or under preparation kind of a thing, that will be grouped into this capital work in progress. And the third part is nothing but investment property. Guys, I will touch upon this investment property a little bit later. If you observe, we are having a separate standard in AS 16 when it comes to property, plant and equipment, and that is there in our syllabus as well. I will going to explain you a complete clear-cut clarity with respect to this in AS 16. Investment property also I will explain a little bit later. So these three tangibles you have to remember, Baba. First one, property, plant, equipment. Second one, capital work in progress. And third one, investment properties. If you come to intangibles, the first one which we are having is goodwill. This is the most commonly heard term. Goodwill. In our Ind AS also, in many standards we will hear this word called goodwill. This goodwill has separate treatment. We have one complete Ind AS related to intangibles, and even in business combination and consolidation standards also, we are going to hear this term goodwill a number of times. Next one, if you observe, we are having something called as other intangible assets. For example, trademarks, copyrights, franchisee rights, like these things like this will be called as other intangible assets. And if there is any intangible asset under development, for example, For example, what should I say, any kind of research or something which you are undergoing a formula which you are developing. So all these things will be called as intangible assets under development. So here I am writing whatever the things which I am remembering, which because this will make you remember for lifetime, Baba. First one, sir, three tangibles we are having, sir. Sir, can you please tell me what are the three tangibles? The first one is nothing but property, plant, equipment. The second one is nothing but capital, work in progress. And the third one is nothing but investment properties. The second part, if you observe, sir, when it comes to the three intangibles, these three intangibles are nothing but, first one, goodwill is the first intangible which you have to remember. Second one, other intangibles you have to remember. And third one, intangible assets under development is the next part which you have to remember. Sir, when these intangibles are also completed, now the most important part which you have to understand is biological assets. So this is the first time I guess you guys are hearing this term biological assets. Other than bearer plant. Other than bearer plant. This is clear-cutly given even here also. Sir, biological assets other than bearer plant. Sir, what is the meaning of bearer plant? You have to understand this part, Baba. Assume. So the meaning of bearer plant, I will take one example, you guys will understand. Let's assume there is one tree. Assume there is one tree, and this is a mango tree. So this is full of mangoes. This is summer season. Of course it is over by now, but assume in summer season this mango tree will be full of mangoes. Correct or not? Once the mangoes are grown, what I will do, whether I will cut only the mangoes or whether I will cut the mango tree, you guys have to tell me. Guys, you have to respond. I am waiting for your response. Once these mangoes are fully grown, whether I will cut only the mango or whether I will cut the entire mango tree. I am waiting, guys. Because of this only the definition biological assets will be dependent. Because of this only the meaning bearer plant will be defined. So you have to tell me whether I will pluck only the mangoes or whether I will cut the entire mango tree. Common sense, Guru Prasad. That's correct. Only you will cut the mango. Which means if you observe, if you compare this with a machinery, what will you do with the machinery? Machinery will obviously provide you certain kinds of goods. You will use only those goods, and obviously that machinery will be again producing you goods. Correct or not? Machinery, if any goods are produced by the machinery, obviously you will be selling those goods, and again the machinery is going to produce new kind of goods. Correct? In the same manner, even this mango tree is also, once the mangoes are fully grown, I will only pluck the mangoes. The mango tree will again in the next season, it will produce new set of mangoes. Correct or not? Which means this mango tree and machinery both are same according to the Ind AS. Which means they are saying even this bearer plant is also a plant and machinery. Therefore, it is also a tangible asset, and this is clear-cutly explained in Ind AS 16. This I will explain when we start Ind AS 16, which is nothing but property, plant and equipment. If you compare the mango tree and plant and machinery, guys, both are same, because again the mango tree is going to produce me new set of mangoes, just like how a machinery is producing goods. In the same manner, this bearer plant will be treated as a plant and machinery. Sir, is bearer plant also a biological asset? 100% yes, this is also a biological asset, but this bearer plant will be treated as a property, plant and equipment as per Ind AS 16. But sir, if there are any biological asset other than bearer plant, Are Baba, that will be treated as a separate line item and that will be presented here, which is nothing but biological asset other than bearer plants. Guys, again I am explaining, 100% focus I want. Sir, if you are a biological asset, guys, biological asset means very simple. For example, animals and plants which are biologically born, those will be treated as biological assets. Sir, can you give me examples? Definitely I will give you examples. Biological assets are two types. Sir, if you are a bearer plant, Are Baba, that will be treated as PPE that was given in Ind AS 16. Sir, what about other than bearer plant? Other than bearer plant, that will be disclosed as biological asset only. That will be disclosed as a biological asset only, and that we are having separate standard. Ind AS 40 is there to cover that part. So strictly speaking, you have to remember only one thing. Biological asset, if you are a bearer plant, go to Ind AS 16. If you are other than bearer plant, you will come here. Now, sir, can you give me examples of biological assets which are other than bearer plant? Are Baba, simple. For example, assume, I think you guys have know about this Amul, a milk dairy production farm. It will be having thousands of buffaloes. It will be having thousands of cows. All those buffaloes and cows are nothing but the assets of this Amul Farming Limited. So this will also be disclosed. This will be disclosed as biological assets. Sir, can't these assets be grouped into plant and property, plant and equipment? Guys, it is not possible. This nature is different. PPE ka nature is different. If you observe this nature, that is completely different from the PPE. If you observe PPE accounting, you will be providing depreciation, you will be providing cost or fair value. These kind of valuation you will be doing at Ind AS 16. But this biological assets, if you are a cow or if you have any buffaloes kind of thing, for you different kind of accounting treatment they have prescribed, and that is not there in our syllabus as well. But for the purpose of remembering this pro forma, what you have to remember is, guys, first I have started with the tangible assets and I have to remember only three tangible assets. Sir, first one property, plant and equipment, second one capital work in progress, and third one investment property. When it comes to intangibles also, you have to remember only three things. First one goodwill, second one other intangibles, third one intangible assets under development. If you come to biological assets, whatever the biological assets which you have other than bearer plant, you have to remember. Fine, sir. So now the next part is very simple. The next part is nothing but financial assets. This is also a little bit new to you. Financial assets. Sir, what is the meaning of financial assets? Guys, we are having Ind AS 109, which is a comprehensive standard, which is very important standard. They have exactly defined the definition of this financial asset. It is not possible for me to explain that entire definition now itself. So what I will be saying is, I will be saying whatever it is exactly relevant for us to understand right now. And it is nothing but financial asset ka meaning is nothing but contractual asset to receive the cash in future. Contractual asset to receive the cash in future. Sir, can you give us some examples? I have already explained earlier. Guys, for example, you are having one debtor. Debtor balance, for example, assume it is 1 lakh rupees. Sir, what is the meaning of debtor? In future, I am going to receive the money. Sir, how you can receive the money? That is nothing but contractually. Because of the contractual relation, I will be receiving money from my debtor. Can I say that this debtor is your financial asset? Answer is 100% yes. This financial asset is going to be your this debtor is going to be your financial asset. Next one. Sir, I have given a loan to my friend and my friend is going to give me back. For example, assume it is 2 lakh rupees. I have one contractual relation and because of that contractual relation in future, I am getting back the money. So this is the reason even this loan also should be treated as a financial asset. Sir, another example. I have made an investment in Excel Limited. Assume it is 5 lakh rupees. Because of this investment, I am having a contractual right to receive future cash flows. For example, dividend, or even if I have redeemed my investment at that time also, I will be getting money. In both the cases, I am having a contractual asset to receive the cash. So all these items are nothing but financial assets in my books. So to conclude, if you observe this financial assets, the first thing which we are having is investments. The second thing which they are having is trade receivables. The third thing which they are having is loans. And at last we are having which is known as others. And next part, if you observe, deferred tax assets. Guys, I think you have heard this name deferred tax asset earlier. If you don't, still it is fine, because we are having a comprehensive standard which is nothing but Ind AS 12, wherein we will cover entire thing related to deferred tax assets in detail. The last part is other non-current assets. Sir, if there is any other current asset which is not covered in all these items, that is going to be covered in other non-current assets. Guys, I will stop till here. I will stop till non-current assets only. We are still having current assets ka part, and we are having liabilities ka portion as well. This liabilities ka portion will be discussed in tomorrow's class. But again, I want you guys to remember all the non-current assets ka part. So one last time I'm revising. After that, you guys have to copy this pro forma. Then I will be leaving you guys. So for one last time, simple sir, our non-current assets are divided into, first one, 3 tangible items. Sir, what is the first tangible item, sir? First tangible item is PP. Second tangible item is capital work in progress. And third tangible item is nothing but investment property. This investment property also I will be explaining tomorrow. Second one, if you observe, so we are having intangibles as well. And if you observe this intangibles, the first thing which is there is goodwill. Second one which is there is other intangibles. And the third one which we are having is intangibles under development. And the third part, if you observe, what we are having is biological asset other than bearer plant. Bearer plant is a PPA. This you have to remember. But other than bearer plant, which means, for example, cows, buffaloes. If you remember sugarcane, after sugarcane is grown, you will entirely cut the sugarcane plant, but not the sugarcane itself, which means sugarcane is not also a bearer plant. Understood or not? But in case of mangoes, you will only pluck the mangoes, but not the entire plant. But when it comes to sugarcane, you will entirely cut the sugarcane plant also. So that is the reason why sugarcane is not a bearer plant, but mango tree is a bearer plant. Next part, if you observe, sir, we are having financial asset. Sir, in financial asset, what are the things which I have to remember, sir? Very simple, Baba. First one you have to remember is loans. Second one, investments you have to remember. Third one, trade receivables you have to remember. And the last one is other financial assets. And after this, we are having something called as deferred tax asset. And the last one we are having is nothing but other non-current asset. So these 6 categories you have to remember. With these 6 categories, you will be remembering the non-current assets ka portion. So I want you guys to copy this pro forma, and then you can move. Okay, so okay, first write this part, guys. So I think you guys have to write from here. Okay, we'll do one thing. You can start till here. You can write till here. Or what I will be doing is, I will be sharing this PDF in free resources section, which you have to do. You have to remember this kind of pro forma. You have to copy this entire balance sheet ka pro forma also, because I will be copying this entire notes in our free resources section. So what you have to do is, you just have to copy the entire part of this balance sheet. Okay, so that's it for today's guys. Do you remember what is the asset categorization? How assets are categorized? Definitely, Lingeshwar, I will be sharing the notes. But first of all, I just want to understand, have you really understood the today's class or not? Today's class also I have kept very simple. We have completed the Ind AS applicability and AS applicability. Once that was done, we have immediately started with the most important division 2 schedule 3 part 1, which is balance sheet. So this notes I will be sharing. You guys no need to worry at all. But do you remember the assets? Will you remember all these assets or not? You have to tell me. Will you remember all the assets or not? You have to remember, no choice. Very good, Lingeshwar. Thanks for the response. So I will be sharing that notes in our free resources section. So you have to download that and you have to copy in your running notes. Don't forget to copy, because accounts is such a subject wherein a student will get marks only with practice, practice, practice. Formats have to be continuously faded in your mind. You guys, without practice you will not get full marks, because trust me, with my classes you will definitely get 90 plus in our subject, which is CFR. But that can be achieved only with the practice which you have to do. So I think that's it guys. So that's it for today. We'll continue the balance part in next session. So thank you so much. Please revise the pro forma. In next class I will explain the remaining pro forma. Along with that I will also be starting, I think, profit and loss account ka pro forma also we will be starting in tomorrow's class. So that's it for today. We'll continue in next class. Fine. So have you copied the class, the last class what we have covered? You guys have asked me the PDF I have sent. So can you just confirm whether you have copied that or not? Yes, superb, superb. So I'll be starting. Don't worry, just a moment. Okay, fine. So let's quickly revise what we have discussed in the last class. I will be revising only the key points. So don't expect me to revise each and everything. So fine. If you observe, the most important thing which you have to remember is the applicability of the Ind AS. If you observe, the standard is very simple. If you are a listed company or if you are in the process of listing, for you Ind AS are applicable. That is the first point. Second point, if you observe, even if you are an unlisted company, if your net worth is more than or equal to 250 crores, then you also should apply Ind AS. You have to check 31st March of the last previous year. I mean, of the last financial year, you have to check. If you are a REIT or if you are a INVIT, for you also, this is applicable. Ind AS are applicable. Next one, if central government is having, if central government wants to apply this Ind AS to any body corporates, it have the power to do so. Clear? Yes. This part we have covered. If in a group entity, any one entity applies Ind AS, then all its consequent entities, all its group entities, say parent, subsidiary, holding, associate, all the companies will also apply Ind AS. That is the thing which is clear. Yes, sir. Next part, if you remember, we have understood that division 2 of schedule 3 we have started. Sir, division 1 is applicable for which entities? Division 1 is applicable for AS entities, which means if you are a company for which accounting standards are applicable, you have to follow division 1 of the schedule 3 to the Companies Act 2013. But if you are a company for which Ind AS are applicable, that is the most crucial part we will be learning, and that is nothing but for you, division 2 of schedule 3 is going to get applicable. We already understood that the components of financial statements are nothing but the first one, balance sheet we are having, second one, statement of profit and loss also we have, third one, cash flow statement we are having, after that statement of changes in equity. This is the new thing which I will be explaining in today's class itself. And the last one, notes to accounts, is also there. Is it clear? Yes, sir. So these format of balance sheet as well as PL, notes to accounts SOCIE is clear-cutly given in Division 2 of Schedule 3 to the Companies Act 2013. And then we have started with balance sheet ka format. Part number 1, they will talk about format of the balance sheet. If you remember, we have already completed non-current assets side of a balance sheet. I will take only 2 minutes to copy what all the items which are there in the asset side of the non-current asset side of the balance sheet. So just give me a moment. Just a moment. Okay, fine. Guys, you just have to only remember one thing. Sir, when it comes to asset side, the first thing you have to remember is, sir, first assets will be starting with non-current assets. Fine, Baba. Assets will be starting with non-current assets. In this non-current assets, we are having tangible assets also. Second part, we are having intangible assets also. After intangible assets, we are having the third type is nothing but financial assets are also having. Biological assets, of course, the order is reverse. So first we will be having biological assets, next we'll be having the financial asset also. And next one, if you observe, we are having deferred tax asset also. And the last one, we are having other non-current assets. Guys, you also have to follow like this only. You guys also have to remember like this only. Correct? Yes, sir. When it comes to tangible assets, we are having only 3 tangibles. If you remember, what is the first tangible, Baba? First tangible is nothing but property, plant and equipment, if you remember. Second tangible asset is nothing but capital work in progress. And third tangible asset is nothing but investment properties. These are the 3 tangible assets which are there in non-current assets, tangible items ka portion. If you look at intangible assets, they are very simple. First, the most famous intangible which is there is nothing but goodwill. You have to remember. Sir, after goodwill, what is the asset which is there, sir? Bare Baba, after goodwill, we are having other intangibles. For example, patents, trademarks, copyrights. Like this, we will be having, correct or not? The next part, if you observe, we are having intangibles under development. So we are having 3 intangible assets as well. If you observe biological assets also, we have to include all the types of biological assets other than bearer plant. So bearer plant related discussion also we already have in the last class. Example, you have to remember, so mango tree or an apple tree kind of a thing. This bearer plant discussion we will again have in Ind AS 16, because this bearer plant will also be treated as PPE according to Ind AS 16. This is the only thing which we have discussed in the last class. Further discussion we will be having in subsequent classes. Financial asset, if you observe, we are having different type of financial assets which you have to remember. The first type of financial assets are nothing but investments we are having. After investments, we are having trade receivables. After trade receivables, we also have something called as loans. And last, we are having other financial assets. And we are having one deferred tax asset and one non-current asset also. So this is the structure which you have to remember. Guys, like this only you have to practice. If you practice like this 2 to 3 times, definitely this pro forma is going to sit in your mind. Fine, Baba? Yes, sir. Sir, once these non-current assets are completed, the next item which is going to start is nothing but current assets. Next item which we have to start is nothing but current assets. Sir, what all the items which are covered in this definition, which is current assets? Are Baba, if you observe, the very first item which we have to focus is inventory. First current asset which we will be getting is inventory. That is the very first item which you have to remember. Second item we are having is nothing but financial assets. Third item is nothing but current tax assets. And last item is nothing but other current assets. Guys, we all know that inventory will always be treated as current asset only. If you observe, this thing is pretty similar to what is there in non-current assets. For example, if you observe, this tangible assets and intangible assets will always be, this tangible, intangible and biological will always be in long term in nature. Therefore, all these items will not be coming in current assets. But there is one item which will be coming, and that is nothing but inventory. If you observe financial assets, it can be both short term also, it can be both long term also. Sir, what exactly is the meaning of long term? It is very simple, Baba. You just have to calculate the operating cycle of the entity, and based on that operating cycle, if you are going to realize any asset within operating cycle, it is said to be current asset. If it is taking more than the operating cycle, in that case, it is going to be called as a non-current asset. Understood? Yes, sir. It is clear. Next part, if you observe, for the timing, you can remember like this: operating cycle may be 12 months. This may not be correct in all the situations, but if any asset you are going to realize in the next 12 months, that is going to be called as a current asset. If you are taking more than 12 months to realize, that is going to be called as a non-current asset. That discussion you have to remember. Okay? Yes, sir. So inventory will be generally a current asset only, because obviously it will be taking less than 12 months or less than the operating cycle period of time to realize. So that is the part. If you observe financial asset can be both long term also, can be both short term also. So if you observe the short term financial asset, even if you observe this bifurcation also, that is pretty similar as to exactly what we have written in the non-current side. So the first one, which is nothing but investments is there exactly same. Second one, if you observe, we are having something called as trade receivables. Two items, just leave some space. Next they will start with loans ka part, and last they will say other financial assets. Are baba, these four also are exactly same as financial assets, non-current assets ka part. Correct ya nahi? Sir, but what are the two items which will come in financial asset? Arre baba, those are very simple. One item is cash and cash equivalents, and second part is nothing but bank balances, which are covered, which are not covered in the under above. Understood or not? That's it, guys. This is the thing which you want to remember. So other current assets are also same. Current tax assets. See, there we are having deferred tax asset. So here we are having current tax assets. Sir, what is the meaning of current tax assets? Arey baba, simple. For example, assume you are having a refund of income tax which is there. That is going to be a current tax asset. Correct or not? Assume you are having a refund of income tax or a kind of duty drawback kind of thing is there, which is receivable from the government. That is going to be sitting in this part, which is known as current tax asset. And the last one, if you have other current assets, or what items will be coming in this other current assets part, sir? It is very simple. For example, assume you are having prepaid assets, prepaid expenses, any prepaid expense which you have. Obviously, it is not a current asset. It is not, it is not an inventory. It is not a financial asset also. It is not a current tax asset also. In this case, this is going to be a other current asset. Have you understood or not? We have completed assets portion of the division 2 of the schedule 3 to the Companies Act 2013. I am once again opening this schedule, and let us quickly go through all the non-current assets items. Clear, sir? Yes, sir. Guys, if you observe non-current assets, first it will start from property, plant and equipment. Second, it will start from capital work in progress. We already have a detailed discussion. Third one is investment property. Guys, this investment property is very simple. If I am holding any property, for example, assume if I am holding any building and my objective is to earn a dividend income, my objective is to earn cash flows from that asset. For example, if my object is to earn capital appreciation from the building, then building is said to be treated as an investment property, and we have separate Ind AS, which is Ind AS 40 deals with that. Sir, can you repeat that once again? Definitely, Baba. Assume I am having one building. If I am using it in my business, that is going to be a property, plant and equipment, and that will be dealt according to Ind AS 16. Correct or not? If I use that building for my office purposes or my administration purposes, then it is a property, plant and equipment as per Ind AS 16. But if I am holding the building for investment purposes in order to get the capital appreciation only, in that case, that building is said to be an investment property. This much is more than sufficient, guys. If your intention in order to purchase the building is to earn capital appreciation, which means you will just buy the building. Whenever you see the prices of the building have increased, you will immediately sell the building, and therefore it will be treated as an investment property according to Ind AS 40. This goodwill I have touched, other intangibles also I have touched, intangible assets under development also we have touched, biological assets other than bearer plants also we have explained. When it comes to financial assets, guys, I have said that financial assets we are having a separate standard, which is nothing but Ind AS 109. There we have a detailed discussion as to what exactly is the meaning of financial asset. But now what you have to remember, financial asset is nothing but contractual asset to receive cash. This is the thing which you have to remember. Sir, if I am having investment in any other entity, obviously that investment is going to give me some cash in the future, so that will be my financial asset. For example, assume you are having a trade receivable. That trade receivable is obviously going to give you cash in future, so this trade receivable is also a financial asset. Assume you have given one loan to another person, obviously that another person will be paying back the loan, and that loan is also treated as a financial asset. That you have to understand, Baba. Next part, deferred tax asset is also we have understood, and other non-current assets also we have touched upon. When it comes to current assets, we have understood the meaning of this inventory also. Financial assets, exactly copy paste from above. 4 items will be copy pasted, investments will be copy pasted, trade receivables will be copy pasted, other non-current assets will be copy pasted, and loans also will be copy pasted. Other than those 2 items, we will be having cash and cash equivalents, and lastly bank balances, which are not covered in the third point, which is this cash and cash excuse me. And next, if you observe, current tax assets will be there, and last we are having other current assets also. So now what you have to do is, guys, I will be once again revising all the assets portion. Means I will just tell you how to remember. I will write here. After I have completed, you also have to write in your running notes all those points like how I am writing. You guys understood the assignment or not? Now I will write all the non-current assets, all the current assets, how to remember. I will write like that. After completion of mine, you guys have to promise me that, sir, we will also be writing after yours is done. Once you are done, let us immediately move to the next part, which is nothing but equity and liabilities. Very interesting discussion is going to be there, guys. Clear? Yes, sir. So first I will be writing. Once I am done, I will give time for you guys to write. Then you guys have to copy. Clear? Yes, sir. Our balance sheet will be starting from assets. In assets, first we have to start with non-current assets. If you observe in this non-current assets, we are having 3 tangibles and 3 intangibles one biological, four financial, one deferred tax asset, and one other non-current asset. So when it comes to three tangibles, simple Baba, we are having property, plant and equipment. Second part is we are having capital work in progress, and third part is we are having investment property. So when it comes to three intangibles, very simple. The first part is goodwill we are having. Second part is other intangibles, and third part is intangibles under development. When it comes to biological assets, we are having all biological assets but not bearer plant. So when it comes to financial assets, we are having investments, we are having trade receivables, we are having loans, and last other financial assets. Students may get a doubt, sir, we have learned that this trade receivables will be current. This trade receivables will be current assets, but why you have written in non-current assets? Baba, the logic is simple. If you are going to realize your trade receivables within the operating cycle, for example, 12 months, it is your current assets. If it is more than your operating cycle, it has to be non-current asset. Sir, is it practically possible? Strictly speaking, theoretically only this will be written in non-current assets, but in maximum cases, this will be always there at current asset ka place only. Before tax asset one item, one other non-current assets also we have to remember. Sir, our non-current assets part is done. Next, Baba, if you observe the current assets ka part, sir, first our discussion will be starting with inventory. Sir, once this inventory is done, the second discussion which we'll be writing is this financial asset. And the third one, if you observe, I will be writing current tax asset. And the last but not the least, I will be writing other current assets. Sir, in this financial asset, I am having exactly these 4 points, but the order is different. Meanwhile, these two items are nothing but cash and cash equivalents and bank balances other than covered above. Guys, have you understood the pro forma or not? You guys have to confirm in this pro forma. Have you understood all the things when it comes to assets part or not? Guys, one thing, sir, it is not, we are not getting 100% clarity. The reason is very simple. This biological assets ka word also, we are hearing this for the first time, most of the students. And even the things like this deferred tax assets also, most students are hearing it for the first time only. But the thing is, we are having a separate standard for this deferred tax assets. We are having a separate standard which is Ind AS 12, wherein I will explain complete clarity. I will give you complete clarity there. Financial assets also, we are having a separate standard Ind AS 109. So you will be getting complete clarity there only. PPE also, if you check, you will get that complete clarity in Ind AS 16 only. Investment property also. Just a second. Okay. Yes, investment property also, we are having one separate standard which is Ind AS 40. But that is luckily, one second. Even if you observe this goodwill and other intangibles also, everything is going to cover in separate standard which is intangibles ka standard. But now what you guys have to confirm is, sir, yes sir, after seeing this asset side of the balance sheet, definitely we got certain idea. It may not be complete, but at least you can understand that, yes sir, we have got certain idea when we see the items of these non-current assets. Guys, I want response from your side. Can you please confirm yes if we got some idea when it comes to the asset side of the balance sheet? You guys have to confirm that, guys. Very good. Super Ringeshwar, Super Jyoti, Super Guru Prasad. Now, what you guys have to do is, like how I have written this, you also have to write this. Guys, you have to promise me, you also have to write this, and trust me, within 2 minutes, you have to complete all these things. Then only we can say that, sir, yes, sir, we have exactly got idea what we are trying to say. So I am pausing my video. I will come back after 2 minutes, and I want you guys have to complete what I have written like this. So once you are done, then let us move to the liabilities ka portion. So that is the thing which I want you guys to do. So I'm going, I will be coming in 2 minutes, and I want yes from you guys that yes, sir, we have completed whatever you have said. Okay, fine, guys. I'm here only, I'm not going anywhere. I'm going just to get some water. Meanwhile, you have to write how I have written this part. Fine. So, hello guys, can you confirm? Have you completed or is it still taking some time? Still no one have did this. I think Lingeshwar Jyoti Guru Prasad. Brilliant Jyoti. Brilliant. Very good that you have completed. Super, super, super. Fine. That's it. So with this, we have completed asset set. We have completed a new presentation of Schedule 3 Division 2. Correct. So now let us immediately move to the liabilities portion. Very important. Yes. The first one, if you observe, our equity and liabilities. This is the major difference which you have to compare. Just a moment, guys. I will open AS balance sheet. Just 1 second. There is a little problem with this slide. Okay, fine. Here you have to understand the things. Your AS balance sheet will start with equity and liabilities. That too we have started here shareholders funds. But our schedule 3 division 2 balance sheet, if you observe here, equity and liabilities will be starting, but the first thing is only starting with equity. You have to observe this thing. Sir, which means if I look here, they are saying shareholders funds, which means this funds will also include equity shareholders funds. Equity shareholders funds also plus preference shareholder funds also. But here they are clear cutly saying only equity portion is included. So this you have to understand, guys. Till now you have studied that preference shareholders, preference share capital is also a part of shareholders funds. But this is the first fundamental change which you have to remember in Ind AS application. Now what they are saying is preference share capital is not a shareholder fund. Sir, what are you exactly trying to talk? Yes guys, this preference share capital is no longer a shareholder fund according to Ind AS. What this Ind AS is saying is you have to bifurcate or you have to break this preference share capital into two parts. This preference share capital will include some portion of equity and some portion of liability, which is called as a financial liability. So what they are trying to say, sir, why we have to bifurcate, how we have to bifurcate this equity portion and financial liability portion, that will be clear cutly explained in our standard, which is Ind AS 109. So there I will explain you the complete logic and all. But now what you have to remember is, sir, preference share capital is no longer a shareholder fund. That is the reason Division 2 Ind AS Schedule 3 have made it very clear that your equity and liabilities, first amount you have to write equity portion only, which will consist of equity share capital only, and it do not consist preference share capital. The reason is preference share capital will be treated as a financial liability. Financial liability as per Ind AS, it is not an shareholders fund. Sir, why it is treated as a financial liability? Guys, we are not discussing it enough. Guys, I truly understand your situation. Lot of interconnectivity is going on because this entire presentation of financial statements we are going to learn in our subsequent syllabus. For this other equity and share capital, you have to just understand that point, that preference share capital is no longer a shareholder fund that will be treated as a kind of financial liability. The reason I will be explaining when we will discuss that standard. Understood? Yes, sir. In this liabilities part, after this share capital and other equity, I will come to these 2 points a little bit later. Sir, what exactly is this other equity all about? I'll come, guys. I will come little bit. When you go to liabilities side, we are having very simple liabilities. Asset side is the biggest thing. Liabilities is pretty simple, guys. Non-current liabilities, if you observe, we are having financial liability. Second part, we are having provisions. Third part, we are having deferred tax liabilities. One second. Third part, if you observe deferred tax liabilities we are having, and the last part, it is nothing but other non-current liabilities we are having. Guys, only 4 liabilities you have to remember. So first one, financial liabilities, provisions, deferred tax liability and non-current liabilities. That's it, guys. Only these 4. But when it comes to financial liabilities, we are having few points. First one, borrowings are there, lease liabilities are there, and trade payables are also there, and last May we are having other financial liabilities. Guys, this part I will make you remember, no need to worry only. First, non-current liabilities may we will be having financial liabilities. Sir, what is the meaning of financial liability? Arey Baba, financial asset, if you remember, sir, it is nothing but a contractual right to receive the cash. Correct or not? So financial liability is also nothing but you are having a contractual obligation to pay the cash. If you have a contractual obligation to pay the cash, that will become your financial liability. But if you are having a contractual right to receive the cash, that will become your financial asset. Guys, this much understanding is more than sufficient enough, because we are having Ind AS 109 financial instruments. Actually, there we are having 3 set of Ind ASs. There we are going to get a complete clarity. So now I have just explained you the meaning that financial liability is nothing but an obligation to pay some cash. Sir, can you give me an example? Definitely I will give you an example. I have borrowed money from my friend. Do I have to pay back to him? Answer is yes. Which means, can I say that I am having a financial liability to pay the cash? Answer is yes. Therefore, it will become your financial liability. Second case, in my books, I am having a trade payable of 1 lakh rupees. Sir, in future, do I have to pay the cash? Do I have the contractual obligation to pay the cash? The right answer is yes. Therefore, that also will become a financial liability in your books. So these two are fine. I think you have understood the idea of this word financial liability and financial asset. In-depth discussion, we are having a separate standard. Guys, are you understanding or not? Liabilities portion very simple. Non-current liabilities may, first one is financial liability, second one is provisions, third one is deferred tax liability, and fourth one is other non-current liabilities. I will summarize these points here, Baba. Sir, first one, equity and liabilities is the part. In equity, we are having share capital and other equity. In liabilities, we are having non-current liabilities. Even in this non-current liabilities also, the first one we are having is a financial liability. Second one we are having is provisions. Third one is DTL, which is called as deferred tax liability, and the last one we are having is other non-current liability. So when it comes to financial liabilities, what all the items which I am having? Simple, guys. First, assume you have borrowed any amount to any person. That will become your financial liability. Sir, lease liability. Guys, this leasing related also we are having one comprehensive standard which is Ind AS 116. But I will give you an idea. Arey Baba, this lease is nothing but, for example, assume you have purchased an item on lease. Assume you have taken one item on lease. You will pay lease installments, correct or not, which means you are having a liability to pay the cash in future. So that will also become your financial liability. If you understand this much, that is more than sufficient. Because detailed discussion of this word lease liability, we are having a separate standard which is nothing but Ind AS 116. We will cover that later. Next part, if you observe, we are having trade payables also. And the last one, we are having other financial liabilities. That's it, guys. Only 4 items you have to remember. So this trade payables, there is a recent amendment. This is not now, this have come a long back. So here what you have to remember is, when it comes to this trade payables, you have to do a bifurcation. So out of this trade payables, how much amount is related to MSMEs and how much amount is related to non-MSMEs, you have to do a bifurcation. You have to disclose that amounts basically. Guys, understanding or not? Equity and liabilities. Equity side, I will come back to that little bit later. When it comes to liabilities, non-current liabilities side, first we are having financial liabilities. I have explained you the meaning of financial liability. Provisions we are having, deferred tax liability we are having, and other non-current assets we are having. Guys, this deferred tax liability related, we are having a separate standard which is Ind AS 12. So I will cover that part a little bit later. If you are having any other current liability which is not covered in the above 4, it is going to be covered in other non-current liability. Are you understanding or not, guys? This is pretty simple. When it comes to assets portion, liabilities portion is a cakewalk for you. Now, the next part, if you observe, we are having something called as current liabilities also. Guys, this current liabilities is even simple. Exactly same copy paste. First, we will have financial liabilities. Next, we will have provisions. Next, we will have current tax liabilities. The last one, we are having other non-current liabilities there. That will compensate in second portion. So here they will write other current liabilities. Guys, are you understanding or not? Exactly there we are having financial liability. Here also same financial liability. The last one is other non-current liability. This order has shifted to second one. Provisions is remained provisions. DTL have remained current tax liability. Are you understanding or not, guys? Liabilities portion very, very simple. So this current liabilities, what all the things which are having, sir? So exactly these 4 items. Borrowings will be there, lease liability will be there, trade payables are also there, and last other, one second. Other financial liabilities also we are having. Understanding or not? Guys, this is very easy things which is going on. So with this, we have completed balance sheet ka format. Guys, I can understand that completely you will not get the idea, because our further discussion, you will anyway refer to the further topics number of times. Our syllabus is like that only. Without understanding this division 2 of schedule 3 ka pro forma, you will never understand a single topic also. In the same manner, even if you start division 2 schedule 3 first, still you have many topics which you have to get a complete clarity. Over the time, you will definitely get the comfort, and that is my promise to you. So now what you guys have to remember is, by the time this balance sheet ka format is completed, that means by now you guys should have a proper idea. You guys should remember at least 95% of the pro forma. Trust me, guys, my students will definitely remember 100%. I am having that much confidence in all of you. So my assurance, you are going to enjoy the CFR. Right now, there are some things which have remained open in your minds, but complete clarity you will get. Don't worry, guys. Just stay little patient. You are going to understand everything. Understood or not? If you guys are clear, let us immediately start with the next portion, which is called as profit and loss account. The most important statement of profit and loss. If you guys are fine, type yes, then we can start with the most important statement of profit and loss. If you are fine with the balance sheet, if you are fine with all the items of the balance sheet, we can immediately start with statement of profit and loss. Are you comfortable? Please respond. Brilliant, brilliant, Jyoti. Fine, excellent. Now let us quickly move to the next part, which is nothing but statement of profit and loss. This is also a completely new. You guys have already know one thing, that sir, in division 1 of schedule 3, which means while learning AS also we have learned one pro forma for P&L account. Now also division 2 of schedule 3 for Ind AS, they have prescribed a different profit and loss account. Sir, do I have to remember this? Not at all. Sir, do I have to remember this? Yes, you have to remember this. Sir, how I have to remember? Guys, that is completely my responsibility. You just have to sit back and relax. I will take care of everything. Is it clear for you or not? Fine. So now I will open first the P&L account which you have learned at the time when you are learning AS. Let me open that part and I will compare and make you understand. First one, revenue from operations, other income, which means income side we are having only two incomes. Only two types of incomes we will be having. First one, revenue from operations, second one, other income. These two you have to add. You will get total revenue. Expense side. When you comes to expense side, you are having cost of materials consumed, purchases of stock in trade, changes in inventories of finished goods, work in progress and stock in trade, employee benefit expense, finance cost, depreciation and amortization, other expenses. Which means, sir, how many items you are having? 1, 2, 3, 4, 5, 6, 7 expenses at that time you have learned. How many incomes? 1, 2. 2 incomes and 7 expenses I have studied. If you deduct total expenses, if you take the total of these expenses, you will get total expenses. Here I have got the total revenue. If I deduct total expenses from total revenue, obviously I will be getting profit. But that profit is before exceptional items and extraordinary items and tax. Profit before exceptional items, profit before extraordinary items and profit before tax. From this, I will be making an adjustment for exceptional items. Then I will get profit before extraordinary items and tax. From this, I have to deduct tax expense, which is nothing but current tax, deferred tax. Then I will get profit or loss for the period from continuing operations. Next, you have to also include discontinuing operations ka profit or loss also. If in the current year you have decided to discontinue any operation, that profit or loss also have to be included separately to your P&L account. That also you have to bring into the face of the P&L account. So even the discontinuing operations ka profit or loss also you have to show. And not only that, you have to also show the tax expense of that discontinued operation also. Then you will get profit or loss from discontinuing operations after tax. Here you got continuing operations, here you got discontinuing operations, both are after tax. If you add this item and this item, you will get something called as profit or loss for the period. You will get profit or loss for the period. Last, we have to write earnings per share, that is nothing but EPS, basic diluted. Have you understood or not? That's it, you have to remember this whenever you are studying accounting standards. Sir, but now what have happened? Simple. But sir, but now what have happened? Very, very simple. First, those two revenue items have not changed. Those two income items have not changed. Sir, first one, sir, revenue from operations. Second one, other income. These are the two revenues, these are the two income side which you have to remember. These have not changed with the AS. Exactly same copy paste. Just now I have said that there are totally 7 expenses which you have to remember. Those 7 expenses are also exactly same copy pasted. The first one, if you observe, first one is nothing but cost of materials consumed. Second one is nothing but purchases of stock in trade. And third one is nothing but changes in inventory. Here you have to write raw material also, finished good also, work in progress also. All changes in inventory you have to write. After these 3 items are done, next I have to write employee benefit expenses. Next I have to write finance cost. Next I have to write depreciation and amortization. Next I will get other expenses. These 7 items are exactly copy pasted from your AS based P&L account. First one, cost of materials consumed, exactly copy pasted. Purchases of stock in trade also exactly copy pasted. Changes in inventory also exactly copy pasted. Employee benefit expense, finance cost, depreciation and amortization, other expenses. These 7 items are exactly same. Sir, cost of materials consumed, purchases of stock in trade, changes in inventory. These are very, very simple, guys. This changes in inventory is nothing but opening stock minus closing stock of stock in trade. In this cost of materials consumed, this is specifically with respect to manufacturing industries kinds of a thing. If you have purchased any stock in trade and you have to make opening stock, closing stock adjustments. Guys, this is very simple. Whenever problem comes, I will explain this part. No need to explain theoretically. If I had paid any expense which is related to employee benefit, for example, salary kind of thing, that is going to be set in employee benefit expenses. Finance cost, assume interest. I have taken a loan, I am paying interest. That much, the scope of this word finance cost is much wider. You will get complete clarity when we are discussing Ind AS 109. You will get complete clarity. Finance cost is interest, that will not change, but many more items which may not be exactly interest, still they will also be included. Depreciation and amortization, you guys have already know this, other expenses. So these 7 items you have to include. These 7 items are exactly same, copy paste. Sir, if I add these 2 items, I will get total income. Sir, if I add these items, I will get total expenses. Sir, here total income, here total expense. Then what I will get? You will get profit. But that profit is before exceptional items and tax. That profit is before exceptional items and tax. If you observe AS, this is the thing which I want your attention to come into picture. Here if you observe, if I deduct total income and total expenses, here they got profit before exceptional and extraordinary items and tax. But here I have written profit before exceptional items and tax. If you observe, in days I have removed this word extraordinary items, but in AS it is still there. When it comes to Ind AS, the word extraordinary items have been removed. Sir, why they have been removed? Guys, they have removed this word extraordinary items from all the standards itself. From all the Ind ASs, if you observe, there is no such word which is called as extraordinary items. So this is also second observation which guys you have to make. So here I will get profit before exceptional items and tax. From this item, I will be making an adjustment of exceptional items. Then I will get profit before tax. From this profit before tax, I will obviously be deducting tax expense. Sir, while deducting tax expense, I will write two expenses. First one current tax, second one deferred tax. Then I will get profit after tax. But this profit after tax is from continuing operations. This profit after tax is from continuing operations. In the same manner, I will be writing PBT from discontinuing operations. From this, I will be writing minus tax from discontinued operations. Finally, I will get profit after tax from discontinued operations also. Sir, we are having profit before tax from profit after tax from continuing operations and also from discontinued operations also we are having. If I add these two figures, I will get total profit for the year. Total profit for the year. Guys, have you understood this or not? Very simple discussion which I have explained till now. If you observe, this is nothing but the statement of profit or loss. First, we will start with income. Just a second. Revenue from operations, other income. You will get total income. Two incomes. Expenses side, if you observe, cost of materials consumed, purchases of stock in trade, changes in inventory, employee benefit expense, finance cost, depreciation and amortization, other expenses. You will get total expenses. Now you have to do something called as profit before exceptional items and tax. Guys, here there is no word which is called as extraordinary items. Then you will get profit before tax. From profit before tax, you have to deduct the tax expense. Sir, we are having current tax also, deferred tax also. There I will get profit after tax from continuing operations. From this profit after tax from continuing operations, you have to add profit or loss from discontinued operations before tax. And tax of discontinued operations should be shown separately. Then you will get profit from discontinued operations after tax. Then you will get which is called as profit for the year. You will get which is called as profit for the year. Guys, everyone, have you understood till here or not? Please confirm. Have you understood till this point which is profit for the year ended? I want your confirmation. I think it is very clear. There is no new item which you guys are not totally aware of. There is no such item in the P&L account. The only item I have explained, sir, extraordinary items ka word itself is not there in any Ind AS. There is no reference of the word extraordinary items in the whole Ind AS. So here we are not having that word which is extraordinary items. So now if you observe, till here there is no doubts. Yes, Guru Prasad, thanks for confirming. Till now everything is clear. Now comes the totally new part. This you have not listened to before. This is the first time which you are hearing exactly what I am saying from the next 15 minutes. This word, I am sure that you guys have not at all heard it before. And that is nothing but this word, which is other comprehensive income. Other comprehensive income. Guys, normally speaking, our AS wala P&L account ends here. Our AS wala P&L account, whatever the statement of profit and loss account which you have prepared at the time which you are learning Ind AS, sorry, accounting standards, that is completed till here only. But AS have completely introduced one new word which is called as other comprehensive income. Sir, what is that? It is called as other comprehensive income. Sir, what exactly is the meaning of other comprehensive income? Guys, this will take at least 1 hour in order to you guys to properly understand what is the exact meaning of this other comprehensive income. So what I am planning to do is, right now I will give you a whole idea of why exactly this other comprehensive income portion is included in Ind AS. I will try to give the logic. You may not get 100% comfort. But trust me, if you don't understand this word other comprehensive income now, this word will continuously come in number of standards many times. Whatever the standards which are there in our syllabus, in all the standards, this word will always come into picture. OCI, 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 OCI. So you guys have to pay 100% attention right now. The full form of OCI is other comprehensive income. In this other comprehensive income, you have to remember there are totally 2 items. There are totally 2 items. First items are items that are not reclassified to PL account. Second items are called as items that are reclassified to PL. These are the 2 types of OCI which you have to remember. Guys, I will explain you the logic of OCI, but before that you have to understand there are totally 2 types of other comprehensive income. First type are items that are not reclassified to PL. Second type are items that are reclassified to PL. Sir, what exactly is the difference? Why some items are not reclassified to PL, some items why they are classified to PL? I will try to explain you complete logic. But now let us try to understand. Sir, our accounting standards wala P&L account has already ended till here. Profit or loss for the period, correct? After that we have started discussing earnings per share. But in AS, you are saying that you have something called as this other comprehensive income also, and that too you are saying that there are totally 2 items. First one, items that are not reclassified to PL. Second one, items that are reclassified to PL. Sir, what exactly is this? Arey Baba, here also you have to remember one thing. Whatever the items that are not reclassified to PL which is there, I have to give tax effect also, minus tax on such items. Even these items also which are reclassified to P&L account, I have to present this tax on such items. Now you will get these 2 items after tax. Items which are not reclassified to PL also after tax you will get. Items which are reclassified to PL also after tax item which you will get. Are you understanding or not? Right now we are understanding. Sir, our Ind AS wala profit and loss account have introduced a new term which is called as other comprehensive income. In that other comprehensive income, we are basically having two items. First type of items are items which are not reclassified to P&L account. Sir, what is the meaning of items which are not reclassified to P&L account? Guys, hold on. You will get complete clarity. Second type of items which are reclassified to P&L account. Both items ka tax effect also you have to show. After showing the tax effect, you will be getting after tax items. Guys, are you understanding or not? If you observe the balance sheet, OCI will start here. First, we will be writing items which will not be reclassified to P&L account. And tax on above also will be presented. Second, items that will be reclassified to P&L account, tax on above will also be presented. Now, sir, why OCI? What is the purpose of this OCI? Guys, in order to understand that purpose, let me take one example. You guys will totally understand what I am exactly trying to say. Simple, sir. For that, you guys have to take one example. Guys, check this part. Sir, there is one property, plant and equipment which is revalued by 5 lakh rupees. The value of the PPE is nothing but 45 lakh rupees. The value of the PPE is how much, Baba? 45 lakh rupees is the value of the PPE. Sir, how much revaluation is done? Revaluation is done 5 lakh rupees. Assume it is upward revaluation. Assume it is upward revaluation. Then what have happened, sir? They are asking you to prepare the statement of the profit and loss account. Assume company's profit is 6 lakh from its operations. And tax rate they are saying which is 30%. Guys, tomorrow I will explain, sir, what are the items which are not reclassified to P&L and what are the items which are reclassified to P&L account. That I will explain tomorrow. But now my objective is, sir, why OCI is introduced. I want to give you at least a clear-cut idea. Complete details I will explain in tomorrow's class. But at least you guys have to understand, sir, why OCI. Then you have to understand this example. PPE revaluation is done. Assume it is upward revaluation. Sir, what is the current value of PPE? 45 lakh, which means after this, the value is 50 lakh rupees. Prepare the statement of profit and loss. Guys, if you remember, sir, assume PPE is there. Its value is 45 lakh rupees. Now, its value is increased by 5 lakh rupees. Sir, can you tell us the journal entry with earlier accounting standards? Sir, your PPE is increased, therefore PPE account debtor. Sir, how much, sir? 5 lakh rupees. 2. I will credit revaluation reserve account. It will be 5 lakh rupees. This is old AS presentation. This is old EAS presentation. Guys, if there is any revaluation surplus on account of increase in value of the machinery, assume there is a revaluation surplus on account of increase in the value of machinery, that is a non-recyclable item. That item will not be reclassified to P&L account. That I will explain in tomorrow's class. But now, sir, AS, this point is clear-cutly explained to the investors. So this point is very clear. But my question, sir, still, why OCI? Why OCI? Why OCI? Guys, the purpose of OCI is to give to the shareholders a clear-cut explanation, a clear-cut understanding of what exactly has happened with this item. Sir, how it is possible? Guys, you are saying that, sir, my PPE is increased by 5 lakh rupees. Sir, if my PPE ka value is increased by 5 lakh rupees, obviously I have to pay more tax on that value. Obviously, I have to pay more tax on that value in future. Correct or not? Obviously, I have to pay more tax on that value in future. And therefore, not only your PPE is increased by 5 lakh rupees, later if you sell that asset, you also have to pay tax on that 5 lakh rupees also. Normal ASS is only showing that my PPE is increased by 5 lakh rupees. But Ind AS is saying, Arey Baba, hold on. Not only your asset value is increased by 5 lakh rupees, if your asset is increased by 5 lakh rupees, which means you have to also pay the tax on that 5 lakh rupees. So show the effect of P&L, show the effect of tax also. You are saying that my PPE is only increased by 5 lakh rupees. What about tax? Won't you pay the tax on that increased amount? Right answer is you have to pay the tax also. So there comes the Ind AS. There comes the new point, which is other comprehensive income wala point, and there you will not only explain that your asset is increased, you will also state the impact of tax. There comes the OCI. If you want to tell complete information to the investors, say completely. Don't tell half-heartedly. Don't tell only half points which is beneficial for the company. Say completely. If you want to say to the investors that you are getting profit, say completely. Your PPE is increased by 5 lakh rupees, that is fine, but you cannot disclose. But you cannot escape from disclosing the tax effect on this increased 5 lakh rupees. And there comes the Ind AS. Sir, how this is addressed by the Ind AS? First of all, tax rate is 30%. Company's profit is 6 lakh rupees from its operations. Profit for the year 6 lakh rupees we will write. I will be adding OCI items. Just now I have said that this revaluation reserve item is a non-reclassifiable item. Sir, why? You will understand. I will explain in tomorrow's class. But now you have to understand, sir, why OCI? Revaluation reserve 5 lakh rupees. Sir, minus tax on above. Sir, how much tax, sir? 30% tax. 5 lakh into 30%, 1,50,000, which means 3,50,000 and 6 lakh. So the net profit of mine is only 9,50,000 rupees, which means I have explained to the investor clear-cutly, Arey Baba, my asset is increased by 5 lakh rupees, but tax on that amount is 1,50,000. So investor is happy now. He understood, okay, there is an upward revaluation of PPA also, and even tax on that is also there, 1,50,000. Understanding or not? Here the investor is getting a complete clarity, because of which OCI is essential. They want to give crystal clear disclosures, crystal clear clarity to the investors. So therefore they have introduced this term called OCI. I hope this introduction is clear to you. You guys have exactly understood what is the purpose of OCI. Guys, please confirm, have you understood why OCI is required? And the entry which I will be passing is PPE account debtor 5 lakh rupees. I will not credit entire revaluation reserve. For tax amount, I have created 30%, and that is nothing but my deferred tax liability. This is exactly sitting in your non-current liabilities, deferred tax liability. OCI account revaluation reserve 3,50,000. Balance amount only will be the actual profit which you have earned. So this OCI account will be sitting in retained earnings portion. Sir, what exactly is the amount of profit which I have earned? OCI. This 3,50,000 is the only profit. Sir, but my asset is increased by 5 lakh. Yes, but you have to pay tax on that 5 lakh also now. 30%, that is retail. Balance amount 3,50,000 will be going and sitting in your retained earnings. Have you understood or not? If you observe our P&L account at the time when you have learned AS is completed till here only, but we have added now other comprehensive income. That also we are having two items. First item, items will not be reclassified to P&L account. You have to calculate tax. Second items that will be reclassified to P&L account, and you also have to calculate the tax on that item also. You simply add this item, this items. Finally, you will get total comprehensive income. From this, you have to deduct EPS. Both basic and diluted EPS you have to deduct. From continuing operations also you have to show separately. From discontinued operations also you have to show separately. Guys, that's it. That's it when it comes to statement of profit and loss account. Tomorrow I will explain completely about what all the items which will be reclassified to PL, what all the items which will not be reclassified to PL. Guys, right now I am giving you one kind of a danger sign, one kind of a warning sign kind of a thing. Guys, this OCI, if you do not understand enough, this OCI is going to come at back of you number of times in number of standards. So we will be understanding a clear-cut understanding. Sir, how much is required? I will explain you that much in tomorrow's class. So our next objective in tomorrow's class is to complete statement of changes in equity, which is a complete new set of financial statement which is not there in the earlier AS. Along with that, I will give you complete clarity with respect to the other comprehensive income ka part. I hope you guys have understood the statement of profit and loss. Guys, please confirm have you understood or not. If you are fine, we can stop our session for today. Till now, we have understood the exact pro forma, exact format of the division 2 schedule 3 of balance sheet. Balance sheet done, profit and loss account also done. Profit and loss may OCI part we have started. Sir, what exactly are the items which are not reclassified, which are classified? I will be explaining in tomorrow's session. After that, I will be starting with statement of changes in equity, and once that is done, we will immediately start with our Indian accounting standards. Our agenda is very clear. We are not wasting any time, guys. Whatever the basics which are very much required for you, I have started with those basics. So once these basics are done, we will immediately start with our Indian accounting standards. So I think maybe one more class we will take for basics. From that, we will be starting with Indian accounting standards. Guys, is it clear? Sir, yes sir, we have clear. You guys have to promise me one thing, that you have to complete till here. You have to complete till statement of profit and loss account. Statement of changes in equity, I will explain in tomorrow's class. So that's it, guys. That's it from my side. That's it for today. Please revise the entire pro forma of balance sheet. Please revise the entire pro forma of P&L account also. So that's it for today. We'll continue in next class. But please don't forget to revise. Bye bye, guys. Good night. Okay, yes. In last class, if you observe, we have completed the balance sheet portion. In before last class, actually, we have just completed non-current assets ka part in balance sheet. But yesterday we have completed the current assets portion also. Even the liabilities portion also we have completed. And then we have immediately started with statement of profit and loss as well. So before starting, let us quickly revise important sort of points and then we'll continue with today's class. The first thing which you want to remember is the applicability of this Ind AS, which is the key in this chapter. So it is pretty simple. The first one is if you are a listed company or if you are in the process of listing. Sir, what have to be listed? Guys, any security you have to list. Whatever security which is there, if it is listed for you, Ind AS are going to be applicable. Second point, sir, even NBFCs also, if you are a listed NBFC, for you Ind AS are going to be applicable. But I already explained this, banking companies and insurance companies are currently not applying Ind AS. In future, of course, the government intends even the banking and insurance companies also to follow Ind AS. But it will take some more time because banks are not ready to adopt this Ind AS right now. Second company, sir, some unlisted companies are also there. If their net worth is greater than or equal to 250 crores as on 31st March of the last financial year, you have to check. If your net worth as on 31st March of the last financial year is more than or equal to 250 crores, then from this year onwards, then from this financial year onwards, you have to follow Ind AS. The next part, if you observe, REIT and INVIT notified by SEBI are also having this Ind AS which are applicable. And the last part, if the central government wants to notify any body corporate as Ind AS compliant, it can do so by way of a notification because it is having the power to do so. Next point what we have studied is, sir, if Ind AS have applied to any one entity, it will be applicable to all the group companies. For example, it is applicable to associate also. It is applicable to subsidiary. It is applicable to joint venture as well, which means entire group के लिए this Ind AS are going to be applicable. And we also understood that currently in India, there are some companies which are following accounting standards and there are few companies which are following Ind AS. And we also have gone into details. Of course, this AS applicability is not that much important from examination. They will never ask any question with respect to the accounting standards applicability. But we have briefly seen the point. For banking and insurance companies, right now we are applying accounting standards only. The next part, if you observe, the most important, if you are a company which prepares financial statements on the basis of accounting standards, you have to follow Division 1 of the Schedule 3 to the Companies Act. This you have already studied in your CMA Inter. Right now it is not essential. We never learn this format. But for reference purposes, I have shown this Division 1 ka format as well. But whatever which is relevant for us is Ind AS preparation. If you are a company for which Ind AS are applicable, you have to follow the format of balance sheet and statement of profit and loss account, which are clear-cutly given in Division 2 of Schedule 3 to the Companies Act. And then we have understood there are 5 components of financials with respect to Ind AS, and the first one is nothing but a balance sheet. Second one, statement of PL. Third one, cash flow statement. Next one, statement of changes in equity. And the last one is nothing but notes to accounts. We have already completed this balance sheet ka part. And we have also started with this statement of profit and loss account ka part as well. Once this is done, we will be starting with statement of changes in equity in today's class itself. And notes to accounts, strictly speaking, notes to accounts is not just a separate standard. It is not a separate, what should I say? It is not a separate kind of a financial statement. It is nothing but just a kind of briefing which will give you in other, if there is, for example, if balance sheet, any line item is having 4 to 5 items, that will be clear-cutly given in the notes to accounts as to what exactly is the breakdown. And the next part is, if you observe this notes to accounts, what are the accounting policies which the entity have followed and all that kind of briefing. For example, if any estimate is used by the entity, what exactly is the basis for that estimate, that they will be clear-cutly explaining in this, which is called as notes to accounts. Right now, we will complete this statement of profit and loss account ka part and will be immediately starting with this statement of changes in equity. If you remember, we have already started the part 1 format of balance sheet. Guys, first you have to write the name of the company. And after that, you have to write the balance sheet as on a date, for example, 31st March 2025 or 31st March 2024, like that you have to write the dates. This pro forma we have already remembered. And current year figures you have to write, and not only that, even previous years comparative figures also you have to write. Current year figures also, along with that you have to write previous year's figures also. Sir, when it comes to rupees in, sir, whether I have to write rupees in thousands or whether I have to write rupees in lakhs or whether I have to write rupees in crores or rupees in millions, like that. That guidance is clear-cutly given in Schedule 3. But trust me guys, you guys no need to follow a standard kind of format. Whatever is given in the question, you can simply write that. Rounding off also you have to done according to the guidance which is given in schedule 3. But strictly speaking, for examination purpose, there is no need for you to remember. You have to write clearly the amounts. For example, you have to write like this: 33,21,579. You have to write this amount fully to get full marks. No rounding off, nothing, unless the question asks you to do so. Guys, are you understanding or not? Then we have immediately started with balance sheet ka pro forma. Correct? Sir, strictly speaking, if we observe, our balance sheet, division 2 balance sheet will immediately start with asset side. And we understood it first starts with non-current assets. The first 3 items which are called as PPE, property, plant and equipment, capital work in progress, and third one which is investment property. These 3 items are called as tangible assets. The next one, if you observe, 4th point, 5th point, 6th point, these 3 are called as intangible assets. Sir, what is the meaning of intangible assets? First intangible asset is goodwill. Second intangible asset is other intangibles. And 6th is nothing but, the third of intangibles is nothing but intangibles under development. 3 tangibles we are having, 3 intangibles we are having, and next we are having is nothing but a biological asset. And not all biological assets, because biological assets other than bearer plant is only covered here. Sir, what happens to this bearer plant? Guys, I have already said that this bearer plant is a part of PPE. That detailed discussion we will have a little bit later. And then we are having financial assets. Sir, what is the meaning of financial asset? Guys, I have already said that, sir, we are having a separate standard which will cover the definition of the financial asset. But just what you have to remember is, if you are having any contractual asset to receive the cash, that will be called as a financial asset. For example, assume I have made some investment in any subsidiary or any associate for that matter. So whatever the in future, I am going to get contractual right. I am having a contractual right to receive the cash. Therefore, that investment will become a financial asset. Assume in my books, there is a debtor balance of 1 lakh rupees, which means in future, I am going to get a receive. In future, I am going to get a cash of 1 lakh rupees. Can I say that that is a trade receivable and it is going to be a financial asset? Answer is yes. Assume I have given one loan to my friend. That person have to pay me in future, which means can I say that I am having a contractual right to receive the cash? The answer is yes. Therefore, that is going to be a financial asset. If there is any other financial asset other than these 3 items, it will be presented here. If you observe the next part, which is called as deferred tax asset. So this deferred tax asset, we are having a separate standard in AS 12. So there I will be talking in detail. Till here we have completed normal current assets, and if there is any still normal non-current assets we have completed. Even if there are any other non-current assets, they will be covered here. And the next part, if you observe current assets, very simple. So the distinction between current and non-current is based on the operating cycle of the entity you have to calculate. If any asset is going to be realized within the operating cycle of the entity, that is going to be a current asset. If any item is going to realize after the operating cycle of the entity, that will be treated as a non-current asset. Sir, coming to current assets, the first current asset which we are having is inventory. Next, we are having financial asset. In this financial asset, we are having exactly the same 4 items which are there in non-current assets. Investments are there, trade receivables are there, loans are there, other assets also there. But before that items, we are having 2 items which are called as cash and cash equivalents. And next, bank balances, other than which are covered in this third part. Next, if you observe, we are having something called as current tax assets. And last, we are having other current assets. If you add all these items, you will be getting total assets. Next part, if you go to liabilities portion, it is divided into equity and liabilities. The first portion, which is called as equity, And this equity will be comprising of two items. First one share capital, second one other equity. And the first difference which I have explained here is, till now you have treated preference share capital also as a shareholder funds as per schedule 2, as per schedule 3 part 1. Division 1 of schedule 3 means whatever accounting standards which you have studied, they have made you treat preference share capital as a shareholder fund. But this is the fundamental difference which you will observe in Ind AS. So whatever the preference share capital till now, you have treated as a shareholder fund is now going to be a financial liability. Sir, how we have to do, why we have to do that, I have already said that we will be discussing in Ind AS 109. In financial instruments ka chapter, I will explain you the entire logic. Then if you observe other equity ka portion, these two figures will be directly taking from another working which is called as SOCIE, and it is nothing but statement of changes in equity. Once these are done, our liabilities portion will start. Sir, what are the liabilities which will be there here? First one, it is non-current liabilities. In this, our non-current liabilities will be starting with the word financial liabilities. Once these financial liabilities are done, next we will move to provisions. After that, deferred tax liability, and the last we are having other non-current liabilities. Sir, what is the meaning of financial liability? Guys, financial asset is nothing but contractual right to receive the cash, and financial liability is nothing but contractual obligation to pay the cash. If you observe borrowings, which means I have borrowed money from some person, which means I am having the obligation to pay the cash in future. Therefore, that will become my financial liability. And lease liability is covered. Trade payables is also covered. Sir, we all know that trade payables is a current liability. But yes, if your payment ka time is more than your operating cycle, then the same will become your non-current liability. Here what you have to do is you just have to give a proper bifurcation between what are the payables which you are paying to MSME and others. You have to do a bifurcation. And after this we are having other financial liabilities. Next, provisions are a very normal thing. Deferred tax liabilities also we are having a separate standard. Other non-current liabilities also we are having. Residuary liabilities I can call. If there is any liability which is not covered under above, that will be covered here. Next, if you observe, we are having current liabilities, exactly those which are there will be discussed here also. Financial liability will be there, other current liabilities will be there, provisions, current tax liability. Just the order have been changed, exactly the same bifurcation of the financial liabilities in non-current is repeated even in this current liabilities as well. So once this is done, our balance sheet ka format is done. So now immediately let us start with the statement of profit and loss account. Guys, have you revising this? Have you practicing this at home or not? Balance sheet ka pro forma in in the foregoing chapters, I will not revise this pro forma again. So that is the reason why I am going in depth and repeating this many times. I just want to make this thing clear. This is the only time wherein I will make you guys revise multiple times the format of balance sheet and statement of profit and loss account. Going forward, I will assume that you guys have already know this. So I am not going to repeat that much in depth in the upcoming chapters. So just a moment. So next, we have started with statement of profit and loss. So statement of profit and loss, we have understood. Sir, first we will be starting with the statement of profit and loss. We have already understood that our P&L account will start from 2 incomes and 7 expenses. It is very simple. Sir, what is the first income which we have to start with? Arey Baba, first income is nothing but revenue from operations. Second income is nothing but other income. Sir, if I add these two figures, I will be getting total income. Then I have to move to expenses side. Sir, what are the expenses which I have to remember? First of all, you have to start with cost of materials consumed. Second, you have to write purchases of stock in trade. Third, you have to write sir changes in inventory. Next, you have to write employee benefit expenses. Next, you have to write finance cost. Next, you have to write depreciation and amortization. And next, you have to write other expenses. Sir, if I add all these items, of course, the total is I will be getting a total expenses. Sir, earlier I got total income. Now I got total expenses, which means so here I will get profit before exceptional items and tax. Guys, earlier we are having a word called extraordinary items, but I have said that Ind AS have removed this word which is called as extraordinary items. So now profit before exceptional items and tax. Next, I have to make an adjustment for Next, I have to make an adjustment for exceptional items. So plus or minus I will be doing. Then I will be getting a profit which is called as profit before tax. From this, obviously I have to deduct the tax expense, and it is nothing but current tax, deferred tax. So these two expenses I have to deduct, and then I will get something which is called as profit after tax. And this is from continuing operations. With this, I have to add profit before tax from discontinued operations. Here I will be taking one total, and there I have to disclose the tax effect also. So now I will get profit after tax from discontinued operations. I have to add this profit, and then I will get total profit for the year. Guys, will my P&L account exactly end still here? Earlier P&L account which you used to prepare using accounting standards will end till here. But Ind AS have introduced a new term which is called as other comprehensive income. And yesterday only I have given you the basic details of why OCI is introduced. This OCI is basically having two items, and the first item is nothing but items not recycled to P&L account or not reclassified to P&L account. Recycled or reclassified. On this I have to show tax, and then again I have to add another kind of items which are nothing but items which are reclassified to PL, and I also have to show the tax effect on this as well, which means I will be adding these two items also. Finally, whatever the income which I have got, it is nothing but a total comprehensive income. Total comprehensive income. So now, as promised, this OCI is going to coming in multiple standards multiple times. Sir, what we have to do? Without understanding of OCI right now, you will never understand the things properly. So this OCI will be coming number of times in respective multiple standards. So our today's objective is, sir, what exactly is the meaning of items which are not reclassified to P&L account? And what exactly is the meaning of items which are classified to P&L account? How many items are there? Are they fixed or are they going to change? That complete discussion we will be having right now for the next 30 minutes. Guys, remember, this OCI is having only 9 items. Other than 9, no more item will be coming in OCI. Sir, who will decide which item has to come to OCI? That is not me, that is not you. That is the IFRS ka standard setter will decide. IASB will decide which item will be coming in OCI, which item will not be coming in OCI. There are few logics for some items and there are no logics for other items. If you want, see, if you observe, if you read all those items, it may seem to you that there is another item also which has to come into OCI, because I will be explaining you the logic also of few items which should not be reclassified to P&L account. Then after listening to few standards, your common sense will say that you will apply that logic to even any different item also. At that place also your logic works, but still you cannot transfer that item. You cannot treat that item as a non-reclassified item. Understanding or not? What I am trying to say is, you may apply the same logic to any other item also. Your logic will work, but still you cannot transfer the item. You cannot treat that item as a non-recyclable item. Sir, why? Because simple, these items are designed by IASB and they will be decided only by that. You cannot make plus or minus to those items. Understood or not? There are only 9 items, and items which are not to be reclassified to P&L account, we are having 5. Items to be reclassified to P&L account, we are having 4 items. Guys, are you understanding or not? First, what I want you guys to do is, please copy these items. Please copy this entire chart. And once you are done, I will be giving you a brief idea as to why exactly this item should not be recycled and why exactly this item have to be recycled. I will try to give you a few idea. Guys, now only I am giving you a warning. You will not understand these things completely. But at least if you have a basic idea of, yes sir, this item is a non-recyclable item, this item is a recyclable item, trust me, our objective is already achieved. As I have said, these items will be coming number of times. So if you leave this enough, at that time you are going to suffer. I am saying that there is of course certain logic in why they have treated these items as not reclassified and why these items are reclassified. I will try to give you the logic. But what I am saying is, you may not understand this at right now itself, because since this is the starting stage. But going forward, you will definitely get the clarity. You may ask, sir, at that time only, why won't you explain? Why are you not explaining at that time only? The reason is pretty simple. There is an interconnectivity going on here. If you don't understand enough, you will not understand other topics. So we can't skip OCI at any cost. So what you have to do is, please copy this OCI 9 items, 5 items not to be reclassified and 4 items to be reclassified. Once you are done, let us start with the next things. I will explain you the whole logic as well. But right now, please copy this part. Guys, please tell me once you are done so that we can continue. Okay, please drop a message that yes, we have done so that I can understand, then I can immediately start with the things. Okay, fine. Okay, sir, we have done copying. So now try to listen very, very carefully, guys. I am going to explain the reasons for these items. So why exactly few items they have given as recyclable to P&L account and why few items are not recycled or not reclassified to P&L account. So I want the logic. I will giving you logic. So please listen very, very, very carefully. The first part is, let us start from this item only, which is nothing but revaluation reserve of PPE or intangibles. Guys, let me take one example. You will exactly try to understand what my intention is. Okay, first one. So there is a building whose value is 40 lakh rupees. Whose value is how much? 40 lakh rupees. So now what have happened is, I have made a revaluation and my building ka value has gone up by 5 lakh rupees, which means an upward devaluation is happened and it is nothing but for 5 lakh rupees. Which means now the revised value of my building is how much, Baba? 45 lakh. Correct or not? Yes, sir. The entry which I will be passing is a PPE account or a building account debtor for that matter, because building is increased, so it will be debited. So building account debtor to revaluation reserve account, which is nothing but an OCI item. Guys, yesterday itself I have explained this item. So now I will be explaining, sir, why this item is a not recyclable item. So try to understand very, 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 very carefully. Sir, here what have happened is this building's ka value will be increased by 5 lakh rupees. Which means there is a 5 lakh rupees balance which is sitting in OCI on account of a revaluation of the entity of the building for that matter. Correct, sir? I have understood this point. Now, for example, subsequently, the building got sold. The building got sold. Sir, assume it had sold for 48 lakh rupees. Assume it had sold for 48 lakh rupees. Sir, now what is the entry which I will be passing? Arey Baba, simple entry. Sir, bank account debtor to building account. Sir, bank may have received 48 lakh rupees. Whereas the value of the building is nothing but only 45 lakh. Sir, what happens to this 3 lakh ka difference? Arey Baba, that is nothing but that will be transferred to P&L account. Sir, how much is the difference? Sir, it is nothing but 3 lakh rupees. Guys, I hope this entry is pretty clear to you. But now you have to understand exactly what I am saying. Sir, on my OCI balance, I am having something called as revaluation surplus, which is created with respect to this building. Now this building itself is sold. So obviously I should not have this revaluation reserve ka balance. Arey Baba, the reason why I have created this OCI balance is nothing but because of the building got upward revaluation. Now my building itself is not there. So obviously this OCI reserve also have to be there. This OCI reserves also should not be there. Which means this OCI reserve have to be transferred somewhere. Sir, the meaning of not reclassified to P&L account is this item will never come back to P&L account. Sir, the meaning of reclassified to P&L account is nothing but, for example, sir, assume this revaluation reserve balance will be reclassified to P&L account. There, whatever balance which are there in OCI account, which is RR, this 5 lakh rupees will be transferred to P&L account if it is an item which is reclassified to P&L account. But if an item is a not recyclable item, then this balance will never be coming back to P&L account. Which means here I cannot write P&L account. Sir, then what you have to write? Here I have to simply write retained earnings, or here I will write other equity, which means whatever the balance which is there earlier, that will never hit back P&L account again. Sir, what is the logic for this? Guys, it is very simple. Here the standard setter wants to communicate to the investor that my business is not selling off assets, because this 5 lakh rupees is nothing but the profit which is not realized. At that time, when you have exactly revalued the building by 5 lakh rupees, you have not made the profit. Later you have sold the building for 48 lakh rupees. So there is the time which you have exactly realized the profit. Which means they want to clear-cutly communicate to the investor or shareholder, Arey Baba, my business is not to make profits only by selling the buildings. So this is the reason why they are asking you not to transfer this revaluation reserve ka balance to P&L account. Because if this balance is transferred to P&L account, if I am an investor, I will see the profit and loss account of the balance, of the profit and loss account of the company, and I will feel that, okay, since it have come to P&L account, I may think like this, okay, the company's business is also selling off buildings, which is wrong in this case. If it hits the P&L account, investors may be misleading that this may be the main business of the entity, but which is not correct. It is just a revaluation sort of profit. And if it accidentally gets transferred to the P&L account, public will think that, Oh, okay. This balance is transferred and the company's main business itself is selling off assets, which is not at all correct. So that is the reason if you sold any asset and if you are having revaluation reserve ka surplus balance in your OCI reserve, once that asset gets transferred, please do not transfer that amount back to P&L account again. That amount will never see P&L account. So then what happened to the balance which is already there? Are Baba, go ahead and transfer that amount directly to the retained earnings or other equity. This is the first item which you have to understand. It is very simple. If it is transferred to P&L account, public will be of the opinion that it's okay. Company's main business itself is selling off buildings, but that is not correct. So that's why they have given a completely new set of disclosure OCI, and there also they have made a clarification that Are Baba, you are an item which should not be reclassified to P&L account, which means you have earned the profit on this, but that profit is an accidental profit. My business is not actually to sell the building. Are Baba, my business is to use the building, but because of some reasons I have sold the building, which is not my main business. So the profit on sale of building, because of which I am having earlier some surplus balance, that will not be reclassified to P&L account, and this is the first logic which you have to understand. So coming to the 5 points. First point, if you observe, revaluation reserve of PPE or intangibles. Sir, this point again they will say in Ind AS 16 also. If you got complete clarity now, it is excellent. Sir, I am not understanding. Please wait, Baba. We are having subsequent standard where you will get completely. But if you understand right now itself, trust me, your understanding levels are next level. If you understood this point right now itself, your understanding levels are next level. Guys, are you understanding or not? Please give me a heads up that yes sir, we have understood the first point. If you are fine, then let's move to the second point. Brilliant, Prasad. Thank you so much for your response. Now let us move to the second point. Guys, I am discussing this point first. You will easily understand that. Don't wait. Don't worry. Assume I am doing one business. Assume I am doing one business. For example, I have one CA practice. I'm a chartered accountant and I have started one practice. From that practice, assume I have got a profit of rupees 60 lakh rupees. I have another investment in partnership firm. I have some investment in partnership firm. Sir, how much capital you have contributed? I have contributed exactly 50% of profits. My profit sharing ratio is also 50%. The profits of the partnership firm for the current year, assume it is 30 lakh rupees. It is 30 lakh rupees and that is nothing but the entire profit which is earned by the partnership firm. Guys, can you go ahead and calculate and tell me what is my share of profit in that partnership firm? I am repeating the question. You guys have to calculate what exactly is my share of the profit of the partnership firm. Can you calculate and tell me the correct amount? I am waiting for the answers. Guys, it is very simple. Sir, if the total profit of the partnership firm is 30 lakh rupees, 50% of the profit belongs to me, which means 30 lakh into 50%. If I calculate, I will get 15 lakh. Sir, if I ask you what is the entire profit of mine, I have to say this 60 lakh rupees also plus 50% of 30 lakh, which is nothing but 75 lakh. If anyone asks me what is your profit for the current year, then I will say 75 lakh. I am changing this example little bit. Now tell me what is my answer. Guys, assume there is one company A Limited. So this A Limited is having 30% shareholding in AA Limited. Guys, if you remember the basics of your subject, which is company law, this AA Limited will be called as associate company of A Limited. I hope this point is clear to you. Now what have happened is, this A Limited in this P&L account, it got some profit of 30 lakh rupees. Profit for the year. And obviously the associate company also got a profit of 10 lakh rupees. Guys, can you tell me, sir, what is the share of A Limited in the profit of 10 lakh rupees? Are Baba, it is very simple. A Limited is holding only 30% shareholding in AA Limited. If the profit of the AA Limited is 10 lakh rupees, it is obviously 10 lakh multiplied by 30%, and that is nothing but the share of A Limited. Which means here I have to add 3 lakh rupees. If you add these two items, the total profit of A Limited is nothing but 33 lakh rupees. Guys, you have to think from big companies perspective, because Ind AS are going to be applicable only for huge entities. We have also noted the criteria as well as to for which companies Ind AS are going to be applicable. Now I am a little bit improving this example, and I am giving you the exact example which I want you guys to understand. If you open this, sir, assume there is one company, assume there is one associate company wherein the company have made an investment of 40%. 40%, sir, profit for the year, the company is 5 lakh rupees. Associate ka profit, total profit is 2 lakh rupees. Sir, can you tell me the consolidated profit? Sir, what is the meaning of consolidated profit? Consolidated profit means profit for mine plus profit of my associate also. Sir, where we can understand the complete details of this word consolidated, guys, we are having a separate standard which is called as Ind AS 110, wherein I will explain complete details with respect to how to do consolidation and all. Since this is an associate, we are having a different standard which is called as Ind AS 28, wherein how to do the consolidation. Guys, now don't worry about consolidation. This is the very basic example which I am explaining. The total profit of the associate is 2 lakh rupees, out of which 40% belongs to my company. The total company of mine is how much? 5 lakh rupees plus 40% of 2 lakh, which is nothing but 80,000. So my total profit is 5 lakh 80,000. Assume there are some items which are not to be reclassified to P&L account. Sir, company is also having some items and associate company is also having some items. Sir, this entire 40,000 is mine only, plus 20,000 ka 40% is also mine. Arey Baba, if you calculate 20,000 into 40%, that is nothing but 8,000, which means total 48,000 belongs to me. In the same manner, assume there are items which to be reclassified to P&L account in the company also, in the associate also. This 30,000 are completely belonging to me. Whereas 40% of this 10,000, which means 4,000, is also belongs to me. So to add, I will get 34,000. If anyone asks me what is the total consolidated profit of you, I will say all these items, and it is nothing but 6,62,000, and this will be called as total comprehensive income. Which means if you observe, there are some items which are not to be reclassified to P&L account in your associate company. If you are consolidating these items will be appearing in items which are not reclassified to P&L account in consolidated balance sheet also, in consolidated statement of P&L account also. In the same manner, there are few items which are reclassified in P&L account in associate, and these items will be written, these items will be seen in items which will be reclassified to P&L account in the consolidated P&L account. Now come to this point. If you observe here, this is nothing but not to be reclassified to PL. If you observe the second point, share of OCI in associate or joint venture, which means I am talking about this amount, which cannot be reclassified to P&L account. Arey Baba, this item ka share is also an item that will also be not reclassified to P&L account, and hence I have written this item here only. Sir, if you observe here, sir, if share of OCI in associate or joint venture which can be reclassified to PL, which means this item ka share. Since this item is a recyclable item in the associate, share of that associate will also be a recycled item in the consolidated balance sheet or consolidated profit and loss account. Guys, this point is very, 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 very simple. Now comes the next part. Next part is the super important, and that is nothing but this third point. Guys, just give me a minute. Okay, sorry. Now is it audible? I forget to turn on this mic. Now is it fine? Please confirm. Super, brilliant. Guys, right now I am giving the clarity. Whatever the point which I am explaining now, you may not get 100% clarity now, because we are having a completely comprehensive standard which is nothing but Ind AS 109 on financial instruments. There we will be having a detailed discussion But now also I will make a few points to understand. If you remember those points, you will completely get the idea. Simple, sir. First you have to understood two items ka difference. So those two items are nothing but FVTOCI, and second item we are having, and that is nothing but FVTPL. So first of all, what is the meaning of FVTOCI and what is the meaning of FVTPL? It is very simple. So the meaning of FVTOCI is nothing but fair value through other comprehensive income. Sir, what is the meaning of this FVTPL? FVTPL is nothing but fair value through P&L account. Guys, this items you will hear number of times. FVTOCI, FVTOCI, FVTPL, FVTPL, FVTOCI, FVTOCI. So right now only I am making the things very clear to you. The full form of FVTOCI is nothing but fair value through other comprehensive income, and the full form of FVTPL is nothing but fair value through P&L account. So what exactly is the meaning of this? Guys, you will slowly understand that our Ind AS love this word fair values. Most of the standards, they will ask you to record that fair value only, because fair values are nothing but they are representing the actual picture. So Ind AS will love this word which is called as fair value. You will slowly understood that in due course of time. But now what you have to understand is, sir, what exactly is this FVTOCI and FVTPL? Don't worry guys, you will understand. Assume I have purchased some shares, investment in shares of Jio Limited. I have purchased some 10,000 shares at 10 rupees each. So at the moment when I have purchased these shares, the entry which I will be passing is nothing but investment in shares of Jio Limited. So the amount is 1 lakh rupees, and this will be, I will be crediting my bank, because obviously I have paid my cash now. So credit I will give to bank. Sir, how much, sir? 1 lakh rupees. This is the normal entry which you will record at the time of purchase. Now what have happened is, sir, I have checked at my reporting period, which is 31st March. There I have understood that, Are Baba, whatever the investment in shares of Jio Limited which is there, you have purchased at 10 rupees. Now the value has increased by 1 rupee, which means now you will say to outsiders that I am holding an investment of 10,000 shares into 11 rupees, which means 1,10,000. Correct or not? But you have purchased your shares at 1 lakh rupees only. Now my shares ka investment has increased by 10,000 rupees. Now I have to record this change also in my financial statements. But now most of the students will get this doubt. Sir, from our starting accounting days, from our intermediate, from our CMA Inter, from our CMA Foundation, we are hearing this word which is called as conservatism. Conservatism means, sir, we have to be conservative while recording losses. And there is another word which is called as prudence also. If you are having any known losses, you have to provide those losses. If you are getting any kind of a profit, please wait till the profit is realized. I think you are hearing these words, you are understanding these words which are called as conservatism and prudence. If you are anticipating any future losses, you have to record in your books of accounts. But if you are anticipating any future gains, don't record in your books of accounts. You have to wait till those gains are realized. But Ind AS hate this word prudence. Ind AS hate this word called conservatism. They always want you to disclose what exactly is there. If you are having a profit, please don't hesitate to disclose. If you are having a loss, please don't hesitate to disclose. That is not being said by me. That is the exact mentality, that is the exact mind game of these Ind AS. They are saying, we guys have no problem if you disclose any profit from investments. If you are having losses also, you can realize that. If you are having any profits also, you can realize that. Now comes the different. If I have chosen my investments ka value, which will be recorded as, which will be classified as FVTPL, then I will write like this. My investment ka value is increased by 10,000 rupees. So my entry will be investment in shares of Geo Limited account data. 10,000 is increased. So here I will write 10,000. Credit I will write to P&L account. Credit I will write to P&L account, and here I have to write 10,000 rupees. This item is completely clear because you have decided to value these investments through FVTPL, which means whatever the fair value ka change which you are getting, that will be directly hitting the P&L account. If you have decided to value any investment using FVTPL ka route, fair value changes will be hitting the P&L account. Sir, there is another way of valuing the investments also, and that is exactly called as FVTOCI. If I choose my investments to get valued using FVTOCI, instead of P&L account, here I have to write something called as OCI account. Which means if there is any fair value changes in any investment, I have to route those changes through OCI account and not P&L account. This is when I value my investments using FVTOCI. To summarize, if any investment is there, I am having two options. First option, FVTOCI ka route. Second option, FVTPL ka route. Sir, what is this FVTPL? If I choose this FVTPL, if there are any fair value changes, directly my P&L account will take the hit. But if you opt for FVTOCI, if there are any changes, your OCI account will take a hit. Now comes the question, sir, which option we have to choose? Can I choose this FVTOCI whenever I like? Can I choose this FVTPL whenever I like? Answer is no, Baba, no, you cannot choose like that. Sir, then who will tell me which option have to choose? That will be clear-cutly explained in Ind AS 109. Ind AS 109 provides the guidance whether you have to value your investment through FVTOCI ka route or FVTPL ka route. But I will right now tell what exactly that standard is telling. Try to understand very carefully. If you have purchased any shares and your objective is to make profits from that purchase. If you have purchased any shares of an entity and your objective is only to make the profits, which means your intentions are very clear. You have purchased at 10 rupees. If the price reaches by 15 rupees, immediately you can sell a share. That is your intention while you purchase. Which means your objective or your intention is to make profits from that investment. Then you have to value at FVTPL. Your intention is very clear that the reason for the purchase of investment is only to make profits from the price difference. But there are many companies which will purchase, which will make the investments, and their objective is not to make immediate profits. They have purchased the investments in order to make a strategic move. Sir, what exactly you are trying to say? Arey Baba, there are many companies who will make investments not to make immediate profits. Their objective is to hold the asset for some time. And if your objective is exactly that strategic move, then for you FVT OCI will be recommended. Guys, I am again repeating, try to understand. If you have purchased any investments and your objective is to make profits immediately, you have purchased it only to make the profits. With respect to the price movements, then you have to value your investment through FVTPL. But your intention is not to make immediate profits. Your intention is to hold the investment for some period. You have purchased it with a strategical intent. Then Baba, you have to classify your investment as FVTOCI. This guidance you will understand while we are discussing Ind AS 109. There I will explain why exactly this kind of classification is required. But now try to understand. You have purchased one investment and you have classified that investment as FVTOCI, which means you are only saying that my intention is not to make immediate profits. My intention is some kind of a strategic intention to purchase that shares. Later, for example, assume you have sold such investment which you have classified as FVTOCI. For example, assume this investment I have sold for 1,20,000 rupees, which means I will write bank account data 1,20,000. 2, I will write investment in shares of Jio Limited. How much it is there? 1,10,000 is the value, because 1 lakh is the cost and 10,000 is the price increase. Here I will write 1,10,000 and 2 P&L account, which I will be writing 10,000 rupees. You have sold your investments, but still if you remember, you are having OCI balance of 10,000 rupees, and the point is this will never be reclassified to P&L account. Sir, why it is so? Arey Baba, if you transfer this OCI ka balance to P&L account, your investors will think like this: okay, this person objective itself is to make profits from this investments, which is not correct. If your intention is like that, you would have purchased the investments and you have chosen the option FVTPL. But you are only saying that you have chosen FVTOCI ka route, which means you are only saying that my intention is to hold the investments strategically for a longer period of time. And now if you sell that investment, earlier balance of this OCI reserve should not be transferred to P&L account, because your intention is something different. Guys, I hope this point is pretty clear. Your intention is to make only strategic investments. Therefore, whatever the balance which you have in your OCI account, if you have sold that investment, that should not be recycled to P&L account. Guys, I hope this point is clear to you, which means this OCI account ka balance will be directly transferred to retained earnings without entering into P&L account. Guys, I hope this point is pretty clear to you. Your intention is not to make profits using such investments, because you have clear-cutly classified that investment as FVTOCI na. You will do such classification only when your intention is to hold the asset strategically. Further discussion we will have in Ind AS 109. Guys, have you understood the point completely or not? Please type yes if you have understood. Otherwise, you have to be a little bit patient, because I am saying you will get complete clarity after going into Ind AS 109 only, because this kind of classification, when you have to do FVTPL and when you have to do FVTOCI, that will be clear-cutly explained in that Ind AS 109 only. Sir, in that case, why don't you explain this while explaining Ind AS 109? There also you will understand nothing if you don't have this clarity. So that is the reason why you guys have to understand few points. And that is the reason why exactly I have started this OCI ka discussion right now itself. Now, if you read this point, here I am saying fair value change of equity instruments. If I have purchased investment in equity shares of Jio Limited, that is nothing but my equity instrument. If it is classified as FVTOCI, this is a non-recyclable item. Understood or not? Next point. Are Baba, this discussion, fair value change of financial liability credit risk, that you will not understand right now. So this point you can write here only that it will be covered in Ind AS 109. This also is covered in Ind AS 109. This also is covered in Ind AS 109. And another point, Baba, this cash flow hedge reserve ka point also, this also will be covered in Ind AS 109 only. Now the last part. Gain or loss due to remeasurement of present value of defined benefit obligation. Arey Baba, one thing I want to make you clear. Assume you are a company and there are many employees which are working in your company. I think you guys have already know about this term which is called as gratuity. I will explain completely from the gratuity perspective. Now I am an employee which is joined in the company today only. I have worked in the company for the next 20 years, and after completion of 20 years the company have to pay me gratuity. The company will not wait till 20 years. It have to calculate the present value of the gratuity which it will be paying me after 20 years. Sir, how it will be calculating? It will take the help of actuaries. I think you have heard the term called actuarial valuation. They can estimate how many employees. See, I am not the only employee in the organization. Assume there are 10,000 employees which are there. So actuaries will make an estimate of how many employees are going to continue in the next 20 years. What exactly is the amount which the company may have to pay after 20 years, and I will be making present value of that, and that itself will be called as defined benefit obligation. Guys, that is already defined in the Gratuity Act. There some calculation is there, last drawn salary into 15/26, some calculation is there. That calculation will be done by the specialists. Actuaries will do the calculation. Now what you have to remember is that present value defined benefit obligation ka, if you have remeasured at the next reporting period, and if there is any gain or loss, that fair value change will also be treated as a non-recyclable item. Guys, this standard is not there in our syllabus, if you remember. This is with respect to Ind AS 19, which is already there at your inter level. But still, you will calculate the present value of the future liability which you have to pay. Next year also you will calculate that if there is any difference between these two values. That exactly is called as fair value change, and that will be transferred to, that will not be recycled to OCI account. Because simple, your intention is not to make profits through the remeasurement of defined benefit obligation. So that is the exact reason why you should not recognize the P&L, why you should not recognize the profit, the OCI ka balance again reclassified to P&L account. The next and the last part which I will be explaining is exchange difference on translation of foreign operations. Sir, what exactly is this exchange difference on translation of foreign operations? Guys, I want another 10 minutes. After that, I am going to leave the class. But the next 10 minutes are the crucial. You guys have to understand. It is very simple. Guys, assume. I think you guys have already studied AS 11 in your CMA interlevels. And if you remember, there are two items which are called as monetary items and non-monetary items. Guys, can you please confirm me? Yes, sir, we have heard these terms called monetary and non-monetary items. I'm sure that you guys may not remember exactly, but at least have you heard these terms called monetary and non-monetary? I just want that confirmation. Monetary items, non-monetary items. According to AS 11, Baba, I'm asking. Brilliant, brilliant, super. Let us take one example, which is debtors. Guys, this debtor is a monetary item. If you remember, whatever the gain or loss which will be there on this debtors at each reporting period, that will be transferred to P&L account. That will be transferred to P&L account. Assume on this date I have sold some goods to debtor. On 31st March, the debtor balance got increased. Whatever the difference is there, that will be transferred to P&L account. This is not the point which we are talking. See, for example, assume I have made one credit sales. For example, debtor account debtor to sales. So the sales ka figure is $1 lakh I have sold into 65 rupees. Just example purpose. It is 65 lakh. Here I will write 65 lakh. Assume on 31st March, dollar value has increased to 2 rupees and it have become 61 rupees. Which means now I will receive 67 rupees. Which means my debtor balance will be increased by 2 lakh rupees. So this exchange difference will be directly hitting the P&L account. I think you have remembered this kind of a presentation because debtor is a monetary item. The next part, this is not I am talking about. Whatever I am talking is in AS 11, there is another topic which is called as integrated, non-integrated operations. If you are having any foreign operations in outside country, if you are having any foreign operations which are located outside, if you are exactly translating that. So what is the meaning of translating? It is very simple, Baba. You have, if you remember in AS 11, there are some problems wherein they will give the trial balance. They will give the trial balance of the foreign entity which is there. You have to convert that entity ka trial balance into the reporting currency. At that time, you will be having some profit or loss. That profit or loss is an OCI item. And that OCI item will be reclassified to P&L account. Sir, what is the reason of this reclassification? Simple, guys. Assume after 10 years you have sold that branch. Whatever the OCI balance which is there, that should be reclassified to P&L account. Sir, you may ask me, sir, what is the reason why you have to do that? Simple, Baba. The reason is, the reason why you have selected that currency, the reason why you have selected that particular foreign operation itself is to make some profits. Your intention is to make some profits. So at the time of acquisition of that branch only, you have decided that you will be making profits. So that is the reason your intention is always to earn profits only. That's why you have started foreign operations there. So now if you sold the branch, whatever the OCI balance which is there, that should be reclassified to P&L account. Understood or not? Because your intention is that only. Therefore, it should be reclassified to P&L account. The next part, fair value change of debt instrument classified as FVT OCI. Are Baba, this discussion also will be there in Ind AS 109. And not only that, this cash flow hedge car reserve also will be there in Ind AS 109. This point you will never understand now. And even this point also you will never understand now. Sir, when it comes to this point, it is very simple. Guys, if you observe here and here, the only difference is non-recyclable, non-reclassifiable item I have explained equity instruments, and reclassifiable items I have explained debt instruments. Sir, what is the difference? Arey Baba, assume I have made an investment in debentures of any company. The reason why I have made the debentures is very simple. My expectation is to receive the interest income. So my expectation is anyways to earn the profit only from those investments. So if there is any fair value changes which are there, that will be automatically hitting the OCI only, because the reason why I have classified this instrument as FVT OCI is nothing but, even if it is strategical intention is there to hold that investment as FVT OCI, till if you got any profits or losses, that will be reclassified to P&L account only. This is not, I am saying, this is set by IFRS ka standard setter, which is IASB. Guys, again I am saying, whatever the topics which I have said, it has interlinking with Ind AS 109. You will be getting a complete clarity then only. Guys, to conclude, I have explained here, this item I have explained, this item also I have explained, this also done, this also done, this done, this done, and this done. Whatever the topics which we have left, that will be covered in Ind AS 109 ka chapter. Guys, to conclude, today we have spent total 1.5 hour time in only understanding what all the items which are not reclassified to PL and what all the items which are reclassified to P&L. Guys, this is the most important discussion. I know it have become little bit heavy. Sir, what we have to do? Guys, please watch this lecture one more time, because since you have purchased live, the advantages, it will be there in your live section only. So you can watch this video once again to get a proper clear cut clarity. So my objective for you is, tomorrow before coming to class, you have to remember all these 5 items plus 4 items, 9 items. You have to remember what all the items which should not be reclassified to PL, what are the items which should be classified to P&L. So that's it, guys. I will be taking just half an hour of time to go through that statement of changes in equity, and once that is done, tomorrow I will give you a brief introduction of what all the asset based Ind AS which are there in our syllabus, and we will be starting with the first Ind AS which is there. Tomorrow only I will explain, sir, which Ind AS you are going to start. But today's objective is, please go through all these items, and my strict advice is, please do watch this OCI ka explanation once again, because this OCI is completely new. Here also I have referred many times that you will get complete clarity only when you study Ind AS 109. But trust me, if you understand this, if you watch this video once again, your understanding levels will be next level. So that's it, guys. I hope you guys have enjoyed today's OCI discussion. If you have any doubts, please drop a text. I will be definitely solving those doubts. So that's it for today. We'll continue in next session, but please revise whatever we have discussed, because this OCI will be the most important discussion. So that's it for today. We'll continue in next class. Bye guys. Good night. So is it fine now? Is it louder? Please confirm. Is it fine now, Lingeshwar? Done. Super. So what our objective in today's class basically is to complete another important component of financial statement, which is nothing but statement of changes in equity. And once that is done, we will immediately get started with Ind AS, because specific Ind AS we are going to start. We will be starting with very easiest standard, and once this statement of changes in equity is done, let us immediately start with the asset based standard. So keeping that in our mind, I just want you to complete whatever we have completed, all the main points. I will complete the clear cut revision in less than 2 to 3 minutes. Okay, so quickly repeat with me guys. First important point which we have understood is the applicability of Ind AS, and we have clearly understood that for all the listed companies and those companies which are in the process of listing any of its security in any exchange, for that Ind AS are going to be applicable. If you are a unlisted company but your net worth is greater than or equal to 250 crore as on 31st March of the last financial year, for you also Ind AS is applicable from the current financial year. And next, if you are a REIT and INVIT, for you also Ind AS is going to be applicable. And if central government wants, it can notify any other body corporate to which Ind AS as applicable. If you are a component of any group, for you if Ind AS is applicable, then for all the components of your group, for example your associate, your subsidiary, your parent company, all the companies also will come under the purview of Ind AS. And then we have also understood that there are some companies and other companies also for which AS is also applicable right now. That is not at all required from the exam perspective, so we did not dig that much deeper into applicability of AS. Correct, sir? Yes, sir. Then we have completed, we have understood that this point we have understood. Division 1 of Schedule 3. Whatever AS which we have studied at your CMA inter level, that clear-cutly applicable for entities who required to comply, who required to present their financial statements on the basis of accounting standards. But that is not at all relevant from exam perspective. Sir, what is relevant from our exam perspective? It is nothing but Division 2 of Schedule 3. This is applicable for those companies who required to present their financial statements on the basis of Ind AS. And then we have understood what all the components of the financial statements as per Division 2 of Schedule 3. Then we have understood first component of financial statement is nothing but a balance sheet, statement of profit and loss account, cash flow statement, statement of changes in equity, and the last but not the least, notes to accounts. We have already completed the formats for balance sheet and statement of profit and loss. I hope you guys have remembered the format of balance sheet also, as well as the format of the statement of P&L as well. Clear guys? Yes. First, if you remember, our balance sheet will be starting with assets. In that assets also specifically, it will be starting with non-current assets. We have already understood that these first 3 assets will be nothing but tangible assets. Next 3 assets will be intangible assets. After that, we are having one biological asset, but other than bearer plant. Once this biological asset is done, we are having financial asset. In financial asset, we are having 4 subcategories basically. First one's investments, trade receivables, loans, and others. Sir, what is the meaning of financial asset, sir? Financial asset is nothing but a contractual right to receive the cash. Further discussion we will be having in Ind AS 109. So whatever relevant for now, I have explained it for you. So hope you have already remembered that part. Deferred tax assets, for this also we are having a separate standard which is called as Ind AS 12. But whatever required right now, I have already explained that part. And then we are having other non-current assets. Once this non-current assets ka portion is done, we have immediately moved to the portion called as current assets. In the current assets, first we will be starting with inventories. Once this inventories is done, we will be starting with financial assets. Same subcategory, investments is there, trade receivables is there. Next we are having loans also and other current assets also we have. But other than those, we are having two more current items, and those are nothing but cash and cash equivalents, and another is called as bank balances, which are other than covered in 3. After that we are having current tax assets, and last we are having other current assets. If you add all these figures, you will be getting the total assets. And then we have moved to the equity and liabilities portion. First we have started with equity. In equity, we are having first one share capital and other equity. And the most important point which you have to remember is, till now we have learned that sir, preference share capital also is one of the shareholders funds. But Ind AS is saying, stop Baba, stop. Preference share capital is no longer a shareholder fund. It will be treated as a compound financial instrument, wherein you have to break the preference share capital into equity portion and financial liability portion. Further discussion we will be having in Ind AS 109 and Ind AS 32. Basically financial instruments ka chapter mein we will be having subsequent discussion. Sir, how exactly to break the preference share capital into equity portion and financial liability ka portion and all I will be explaining there. Clear Baba? Yes sir. Share capital is there, other equity is there. If you remember, I said that these two figures will be directly coming from another component of financial statement, which is called SOCIE. It is nothing but statement of changes in equity. If you check the liabilities ka portion, very simple guys, non-current liabilities will be having, first we will be writing with financial liabilities. Financial liabilities is pretty simple guys. If you have any contractual obligation to pay or deliver the cash, that is said to be a financial liability. In that further subsequent classification, we are having borrowings, lease liability, trade payables. This we have understood that we have to bifurcate how you have to, whatever payment which you have to make to the MSMEs and non-MSMEs, you have to provide a clear-cut breakdown. And once it is done, we have moved to other financial liabilities ka portion as well. Once the financial liabilities ka portion is completed, the next set of liabilities will be provisions. After that, deferred tax liability, and last we have moved to other non-current liabilities. And then we have moved to the current liabilities, and same kind of classification will be there, but order is a bit changed. First, it will start with financial liabilities, exact four sub classification. The same is repeated even in current liabilities ka portion also. But next the order is changed. Next we will write other current liabilities. Then we have moved to the provisions, and last we have moved to the current tax liabilities. Then you will be getting total equity and liabilities. Very, very simple guys. Next we have moved to the statement of profit and loss account. If you remember, we will be having 2 incomes and 7 expenses. 2 incomes, first one revenue from operations, second one other income. If I add these 2 figures, I will be getting total income. When coming to expenses side, we are having totally 7 expenses Baba. First one cost of materials consumed, second one purchases of stock in trade, third one changes in inventory of work in progress also, finished goods also, or even raw material also we will be taking there. Next we have moved to employee benefit expenses. Next finance cost, depreciation and amortization, other expenses. Then we will be getting a total of total expenses. Income minus expenses, you will be getting profit before exceptional items and tax. Here is the first loophole, first pothole where you should avoid, that extraordinary items is the word which we have seen in division 1 of schedule 3. But as per Ind AS, they have removed the word called extraordinary items. Therefore, they have used the word profit before exceptional items and tax. Then we will be making adjustment for exceptional items. Then we will be getting profit before tax. From profit before tax, you have to make an adjustment for current tax and deferred tax. Then you will be obviously getting profit after tax from continuing operations. Then we have to separately disclose profit or loss from discontinued operations before tax, and then give the tax effect also. And then you will be getting profit from disc operations after tax. Continuing operations also we are having, discontinued operations also we are having profit. Please add those figures, then you will be getting profit for the year. The intention of Ind AS is to separately please present the profit from discontinued operations also. Once this is done, our first part of the P&L account is done. The second and most important part is this other comprehensive income. In that we have understood that there are totally 9 items which we have to remember. Sir, what are the 9 items which I have to remember, sir? First one, 5 items which will not be reclassified to PL account. And there are other 4 items which will be reclassified to PL account. And we have to separately disclose the tax effect on them as well. Finally, you will be getting total comprehensive income. After this comprehensive income is done, we have to calculate the EPS. There we have to write the basic EPS also and diluted EPS also. This standard is already there in your CMA inter level if you remember. So now further discussion is not at all required in our final level. Continuing operations ka EPS also we will be disclosing, and discontinued operations ka EPS also, and then we will be disclosing here total EPS as well. Guys, we have taken, I guess, exact 10 minutes to complete the revision what we have discussed in the last classes. If you even revise, it will be even taking you less than 10 minutes also. If you revise further, if you keep on continuously having cumulative revisions, it will be obviously taking less than 10 minutes also. So fine, sir. The next most important component of financial instrument is, financial statement is nothing but statement of changes in equity. Statement of changes in equity. First, I want to show, sir, how exactly it is there in our schedule 3. So for that, I am opening this schedule 3 ka this part, guys. Statement of changes in equity. First, you have to understand this term called as equity. Are Baba, here equity refers to the funds of the owner, funds of the shareholder, which means it comprises of 2 parts. The first one is nothing but equity share capital, and second one is nothing but other equity. Other equity specifically have reserves and surplus, revaluation items are also there, general reserve ka item also there, OCI ka items are also there if you remember, and further breakup you will be knowing that very shortly. But if you observe, it will be clear cutly showing the changes in the equity. You will be starting with the equity ka balance as on first day of the reporting period. You have to just present the changes. It is a kind of reconciliation between the opening balance and the closing balance. That's it, guys. Very, 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 very simple. If you observe this, on top we have to write the name of the company. Then we have to write statement of changes in equity for the period ended. And then first point, they have explained a statement of changes in equity share capital. There we have to write balance at the beginning of the reporting period. For example, assume the balance at the reporting period is 100 crore. So subsequently, assume 15 lakh shares have been issued. Then obviously the balance will be how much? The balance will be 100 crore 15 lakh. Assume it have bought back 5 lakh rupees shares. Then obviously the total will be 100 crore 10 lakh. Guys, this is just a kind of reconciliation as to what exactly happened in your equity share capital. Very, very simple, guys. So I am not discussing much deeper. It is very simple. Opening balance you will be taking. If there is any fresh issue in the current year, obviously our equity share capital will be increased, so that will be added. And if the company have bought back any securities, if the company have buy back any securities, obviously that because of that our share capital will be reducing. So you have to deduct that amount. Simple, guys. Then the most important part, if you check this, other equity ka reconciliation. Guys, here I just want to spend some 5 to 6 minutes of time because this is little bit important. Sir, do we have to remember these many columns? In exam, will they ask these many columns? Answer is no, Baba. Being the first class, being the starting classes, I just want you to give a clear cut clarity as to what exactly is this other equity comprises. So I will be taking a minute to explain, to make you go through all these items. Trust me guys, most of the items you have already know that. So I will be zooming little bit so that you can actually see the part. Okay, first what we have to do is, first let us check here. First let us go vertically and then we'll move to the horizontal portion. Sorry, first let us move horizontally, then we will move to the vertical format. The first one, if you check, it is very simple guys. If there is any balance at the beginning of the reporting period, guys, simply here they are talking about opening balance. If there is any changes in accounting policy or prior period errors, this is with respect to the opening balance, Baba. So whatever the opening balance which you are having, if it is subjected to any errors or any misstatements is there, then you have to adjust that in your statement of changes in equity, and then you will be getting restated balance at the beginning of the reported period, which is also called as revised opening balance. We are having a separate Ind AS, Baba. Ind AS 8 will discuss, sir, how to account for changes in accounting policy or how to do adjustment for prior period items. For that we are having a separate standard that is also there in our syllabus as well. First, please take opening balance. Then please make little bit adjustments if there are any, then only we have to make adjustments. Finally, you will be getting the restated balance or revised opening balance. Then here you will be writing total comprehensive income for the year. Arey Baba, this figure is exactly nothing but in P&L account after adding OCI to the profit for the current year, you will be getting total comprehensive income. This is nothing but total comprehensive income, and this will be exactly sitting in total comprehensive income for the year. If I have given any dividends, I have to reduce that part. If I have transferred to retained earnings, for example, from any other reserve, if I have transferred to retained earnings, for example, items which there are not recyclable to P&L account, if any change is there in that difference will be transferred to retained earnings. Any other internal transfers, for example, general reserve to retained earnings from general reserve, these kind of changes. And finally, you will be getting balance at the end of each reporting period. Guys, we have seen horizontally. Now let us check vertically as well. This is the first part, which is nothing but share application money pending allotment. Sir, here what we have to do? Arey Baba, very simple. If you receive any share application money, but if for any of the shareholders, if allotment is not completed, you have received the application money, but allotment have not been done. So whatever that money is there, please write at the starting. Next most important part, equity component of compound financial instruments. I just want to explain one part, Baba. Sir, what is this compound financial instrument? Guys, we have already know that. Sir, what is the meaning of compound financial instrument? Guys, compound financial instrument is nothing but financial instrument which is having equity ka portion as well as liability ka portion. Sir, where exactly we are going to learn this? We have a separate chapter called financial instruments. There we have 3 set of standards which are combined, and then we will be learning entire thing with respect to the financial instruments. For example, I have said that preference share capital. Preference share capital is a financial liability is what I have said. But if it is irredeemable preference share capital, I think you guys have already know that companies in India cannot issue irredeemable preference shares. But theoretically speaking, a company may issue irredeemable preference share capital. But legally speaking, a company cannot issue irredeemable preference share capital. But still, theoretically speaking, if a company issues irredeemable preference share capital, it is an example of compound financial instrument. Then what you have to do is you have to bifurcate the compound financial instrument into equity portion as well as liability portion. Whatever the equity portion which you have bifurcated, that will come and sit in your statement of changes in equity, and whatever the liability portion which is there, that will be sitting in financial liabilities section in your balance sheet, and this equity portion will be coming and sitting in statement of changes in equity. If you check this, it is nothing but equity component of compound financial instruments. Then we are having reserves and surplus ka portion. The first one, Baba, capital reserve. Guys, I think we have already heard this term called capital reserve. Securities premium reserve. If shares are issued at premium, the difference over the face value will be transferred to securities premium. Other reserves, for example, general reserve, capital redemption reserve, these kind of reserves, for example. Retained earnings also, guys, this retained earnings is nothing but the surplus which you have earned from your P&L account, which means if you check here, we are having total comprehensive income, and this balance will be written here. In retained earnings section, I will write my total comprehensive income. And there are some debt instruments through OCI route, equity instruments through OCI route. Guys, this we have already covered in items which are reclassified through P&L account and which are not reclassified through P&L account. Effective portion of cash flow hedges. Here I have written, Baba. This also we have studied in items which are reclassified to P&L account. Revaluation surplus, item which is not reclassified to P&L account. Exchange differences on transactions taking the financial statements of a foreign operation. Guys, this also I have covered. And other items of other comprehensive income, which means strictly speaking, from this item till this item, all these items are related to other comprehensive income. And finally, money received against share warrants, and then you will be getting a total. Strictly speaking, guys, this item is a P&L account item, and other reserves may, if there is any internal adjustments, for example, sir, if any dividend is issued, for example, if any dividend is issued, I will be deducting that amount here. If any amount is transferred to retained earnings, for example, if general reserves, if retained earnings may transfer is there, I will deduct here and I will add here. In the same manner, assume there is some amount which is deducted from retained earnings and added here. Whatever the balance which is there at the reporting period, that we will be adding here. And strictly speaking, this balance, this total balance what is there will be nothing but this, it will be appearing in other equity section of balance sheet. And the share capital ka total, if you observe, this total will be appearing in equity share capital in the balance sheet. This is exactly what I have explained here. Share capital ka portion will be coming from SOCIE share capital section, and other equity ka portion will be coming from other equity ka portion, statement of changes in equity. But for examination purpose, we will not be preparing a separate statement for equity and liabilities. Sir, then what we will be doing? We will be doing a consolidated statement of changes in equity for equity, share capital also, and reserves and surplus as well. To keep it concise, Baba, first we will be writing opening balance, prior period items also, prior period errors if there are any, I will be adjusting that, then we will be getting restated opening balance. Then we have to write total comprehensive income. If any dividend is declared, that will be deducted. If any transfer is done to retained earnings, that will also be deducted. And if other changes are there, that will also be deducted. And finally, you will be getting a closing balance. Sir, horizontally, first we will be writing equity share capital, share application money pending allotment will be written there. Next, sir, equity component of compound financial instrument. Guys, whatever is required for now, I have explained here. And capital reserve ka portion will be there, securities premium, other reserves, retained earnings. OCI items then we will be writing, and after that share warrants, and finally our total will be appearing there. For an exam, whether they will give all these items, answer is no. They may give this retained earnings, 2 or 3 OCI items, and this equity component of CFI also in very, what should I say, that is a very rare case where they will be asking that point as well. So my question is, guys, have you got a brief idea of how statement of changes in equity will be looking at? First, we will be starting with opening balance. We will be making adjustments, and finally we will be arriving at closing balance. Whatever the balance which we have got here, that will be appearing in equity share capital, and whatever the balance which we have got through here, that will be appearing in other equity. Guys, are you understanding or not? Guys, please reply. Have you got the basic idea of how statement of changes in equity is going to be looking in our financial instruments? Please reply yes if you have got a brief idea. If you got, then let us move to the next portion. Super Prasad, thanks for confirming. I just want yes from other students as well if you guys have got a brief idea of how statement of changes in equity is looking. Very good, Lingeshwar. Super Jyoti, thank you so much. Now, I think you guys have already noted this statement of changes in equity. Please reply yes if you have noted this. I have already shared the PDF with you, I guess. So I think you guys have already completed this statement of changes in equity. If yes, please type yes. If you have already done, I want you people to go through this statement of changes in equity for 2 minutes. Guys, I know that this point you will not get a complete clarity because I have already said now for this we have a detailed portion of detailed chapter which is called as financial instruments. There we will be getting complete clarity there. OCI items also we may not get complete clarity. If you remember, I think, yes guys, that totally 9 items I have said, only these 9 items will be coming. Sir, whether we have to remember all these items? Guys, right now if you ask me, yes sir, you have to remember all the 9 items. Sir, it is very difficult for us to remember these 9 items. But trust me guys, only for a short period of time you may be feeling difficult. But once we have started respective Ind AS, everything will be clarified. Everything you can easily remember. For example, this revaluation reserve of PPE or intangibles we will be covering in Ind AS 16 and 38. So once we have completed those 2 standards, it is a cakewalk for you to remember the first point. But as of now, we have to remember these 5 points and these 4 points. I hope I have given a feeling to remember these 9 items. The first one, revaluation reserve of PPE or intangibles. Second one is not there in our syllabus. This you have already completed at your inter level. If you have any defined benefit obligation, for that you will be recording using present value, and if there is any gain or loss due to remeasurement at each reporting period, if you have any difference, that difference will be recorded in OCI and it is a non-recyclable item. Next we have understood, sir, fair value of equity instruments if it is classified as FVT OCI. Guys, complete clarity Ind AS 109 financial instruments chapter. This also complete clarity Ind AS 109 credit risk point. This I have explained. Share of OCI in associates or joint ventures which should not be reclassified to PL. These items also we have covered, guys. Exchange difference on translation of foreign operations is a recyclable item. Fair value change of debt instruments classified as FVTOCI. Cash flow hedge reserve. This you will be getting a complete clarity in Ind AS 109. And last point I have explained. So with this, I just want you guys to watch this statement of changes in equity for just 2 minutes, and please let me know if you have got a brief understanding of how this statement of changes in equity is looking and what we have to, how we have to go through this, how we have to prepare this. Guys, trust me, in basics chapter, schedule 3, division 2, whatever we are learning, sir, are they important? The right answer is 100% important. Because in examination, in few exam questions, they will ask you to prepare an extract of balance sheet, wherein you have to exactly understand in which area our item which they have given in the question will fall into. Guys, what I am exactly talking, you will understand when we are preparing the balance sheet ka extract. But now, sir, are they important? Right answer is 100% yes. So do we have to remember everything about the formats? Right answer is yes. Because in a subject like financial reporting, in a subject like corporate financial reporting, your full marks will be based on the formats and the proformas only. So my sincere advice, with the kind of explanation which I have provided to you, with the level of understanding which you guys have shown, it is very easier for you to remember. Trust me, guys, like how exactly I have explained, the same manner you have to practice. If you practice 2 to 3 times, trust me, these formats will be fixed in your mind. So that in future, while solving proformas or formats in the class, it will be easily recollected because your mind exactly knows what to remember. So just 2 minutes, please check this statement of changes in equity, and if you have any doubts, please ask me. Once you are done, let us start with Ind AS. So guys, I hope that you guys have gone through the statement of changes in equity, and I hope everything is clear to you. So with that notion, let us quickly jump into next part. Okay, fine. Now, as discussed, our next objective is to start with Ind AS. Guys, I have already explained you in the beginning itself that our syllabus will be having. One second, guys, let me just open that part. One second. If you check this, this is the breakdown which we have given, which I have given. And if you observe, the very first section which we are having is nothing but Indian accounting standards. And once this section is completed, then we will move to how to do the valuation of shares and financial instruments and even NBFCs also. And after that, we will be discussing business combinations and restructuring. Then we will move to consolidated financial statements and separate financial statements. And at last, we will be moving to the theory chapters, which are nothing but recent developments in financial reporting and government accounting in India. Guys, these specific Indian accounting standards, we are having a high weightage. We can consider that weightage because the weightage is not less, guys. The institute have given a 25% weightage. And this is the expected weightage which is given by the institute, and we have also analyzed the actual weightage which they have been following in the examination. If you observe 3 questions, which means 2A, 2B, 3A. So each question carries 7 marks, which means 21 questions, 21 marks out of 28 will be only focusing on Indian accounting standards. And 2 to 3 MCQs also they are asking from this specific Indian accounting standards only, which means put together approximately 27 to 29 marks. They will be focusing only on this specific Indian accounting standards, making these Indian accounting standards super crucial and very important. And even if you consider other chapters also, the reason why I am starting with specific Indian accounting standards is this valuation of shares and accounting and reporting of financial instruments. And even if you observe the business combination and restructuring, or even CFS and SFS also, they are little bit trickier. They need much advanced stage of learning. So what we will be starting is, we will be starting with Indian accounting standards, and that too first we will be taking a very easiest standards, because obviously my objective is to boost the confidence of yours. First let us go with easier chapters, then let us tackle the tougher chapters. And trust me guys, tougher chapters will not going to be tougher for you, because I am there with you and I will be making all the tougher chapters very easier. And when it comes to easier chapters, those are even more easier. Those are just a cakewalk for you. I will give you that much confidence. That is my assurance, guys. What you have to do is simply relax and follow whatever the notes which I am making you write and whatever the questions which I have given. That is more than sufficient. And here the reason why I have opened this specific accounting standards is, here also there is some kind of sequence which the institute have followed. I mean, which the standard setter himself have followed. Definitely guys, don't worry, I will be sharing this PDF in the group, or this PDF will be attached in the free resources section. So don't worry at all. First, right now, watch the video completely. Okay, fine. Sir, here if you observe, is there any kind of classification where we can do with this Indian accounting standards? What I am exactly trying to say is, sir, is there any categorization which we can do? Is there any grouping which is possible with these accounting standards? The right answer is yes, that grouping can be possible. Sir, what is that grouping exactly means? That is nothing but this PPE ka standard. If you observe, This is nothing but an asset-based standard. And if you observe this leases, even this is also asset-based standard. Sir, you are saying leases and you are also saying it as an asset-based standard. Sir, what is the reason? Guys, when we start leases, you will exactly try to understand. But right now in leases chapter also, you will be recognizing something called as ROU asset. Sir, what is the meaning of ROU asset? Arey Baba, ROU is nothing but right of use asset. Sir, what is that exactly means? Arey guys, don't worry. I will be discussing completely when we will discuss Ind AS 116. And if you observe borrowing cost also, this is also having little bit interlinking between asset based standard. So I will be categorizing this standard also into asset based and impairment of assets, very important standard, and that is also having interlinking between assets. So I can categorize this also as asset based standard. And if you observe, we are having Ind AS 38, which is also intangible asset. So if you ask me to provide a subcategory of the classification, I can classify all these asset based standards. There are high chances that in your exam, definitely one question they will ask from this asset based standard. And if you have luck, 2 questions will be directly asked from assets based standards only. I can tell you what is the question which they will ask also. Guys, till now, institute's major focus is on this standard, which is impairment of assets. So they are mainly focusing on this impairment of assets. So we will not focus less, we will also completely focus, because I am saying this on the basis of recent trends which the institute is actually following. Guys, I have made the analysis as well, and here also I can confidently say that Ind AS 36 is one of the standard which is not at all missed even in the single attempt as well. So Ind AS 36 very important. And if you observe the first question, 16, 16, 116, 116, which means here also their main focus is on asset based standard only, making this asset based standards as very important. If you want, I will name these asset based standards as A plus category for our preparation perspective, which means, so I think I have given you an overall overview of how this asset based standards will look. So first preference we have to give to impairment of assets. Second preference we have to give to this PPE Ind AS 16 and Ind AS 116. Not only this, Ind AS 38 is also a little bit important. Guys, I am not asking you to leave other asset based Ind AS. This is the priority of your Ind AS, asset based Ind AS. So while preparation, you are smart enough, you should be smart enough to understand, sir, what exactly are the areas our institute is focusing, and you have to customize your preparation strategy as per that. So whatever I have written here, that I have also shared. Sir, other than those standards what we have discussed, there are other 2 asset based standards also, Baba. Ind AS 2 is nothing but this is a standard related to inventories. And Ind AS 40, this is a standard related to investment properties. Guys, this investment properties, if you remember division 2 ka schedule 3, while discussing non-current assets, I have said 3 tangible assets will be there. Third asset is nothing but this investment properties only. Sir, but are these 2 standards not there in our syllabus? Right answer is they are not there in your syllabus. So, other than this Ind AS 2 and Ind AS 40, all other standards are there in our syllabus. Especially among these other Ind AS also, our main preference Ind AS 16, Ind AS 36, Ind AS 116, Ind AS 38. With this notion, Let us immediately start with the asset based standards, and the first standard which we will be starting is Ind AS 16. Guys, this is a chotu sa standard but very much important from the exam perspective. We have checked that last 3 attempts they have focused on this Ind AS 16. So with that notion, let us quickly start this Ind AS 16. Sir, what exactly this Ind AS 16 is talking about? Ind AS 16 is an asset based standard. Sir, here they will talk about property, plant and equipment. Guys, I think you have already known this word called PPE. Sir, how can we know this word called PPE? Are Baba, in your inter level, I think you guys have already studied one standard which is called as AS 10. Guys, please respond. Have you ever heard the accounting standard 10 in your life? In your CMA inter, I am sure that you have heard this standard called AS 10. Please confirm if you haven't heard this word called AS 10. If you already heard that, type S in the chat box. Otherwise, please type no. I don't think no one will type no, but still let us see. Is there anyone who will type no? Have you heard this word called PP in your inter level? Exactly as expected. You have already heard this word called PPE. But whatever you have studied, that is as per accounting standards, and now whatever we are studying, that is as per Ind AS. Guys, strictly speaking, whatever you have studied at your AS accounting standard level, that is already amended to make in line with Ind AS, which means majority of the concepts what you have already learned at AS 10, that is exactly going to same in this Ind AS 16, Baba. But still, don't worry guys, sir, we have not learned AS 10 at inter level that much perfectly. Don't worry guys, I am there. I will teach entire from the basics. I will teach entire in AS 16, assuming that you guys don't know anything only. So don't worry, just sit back and relax. I will be giving complete clarity with respect to the things. First, you have to understand, sir, what exactly in this standard we will be learning. Which means, sir, what exactly is the objective of the standard which we have to remember. As it is very simple. Any standard, if you look, not only Ind AS 16, not only Ind AS 38, not only Ind AS 23, not only Ind AS 36, not only Ind AS 115, not only Ind AS 116. Any standard, if you observe, the main objective of the standard is, sir, if there is any PPE, how we have to recognize that asset? Sir, what is the meaning of recognition? Guys, recognition is nothing but how to record that amount in your books of accounts. How exactly to record the asset? For example, assume you have purchased a property, plant and equipment. Sir, how I have to record that? Sir, when I have to record that? Everything will be explained in this recognition part of a accounting standard. The second part is nothing but measurement, and this is also very important. Sir, I know when to recognize or when to record PPE. Now the second question which will immediately come into my mind is, sir, at what value do I have to measure the PPE? Which means, sir, at what value do I have to record the property, plant and equipment? Because from this recognition part, I know when to record the PPE. But at what value you have to record the PPE, that will be explained in the measurement section of the standard. And the third part, if you observe, Sir, what about presentation aspect? This presentation aspect is nothing but, guys, you know when to recognize, you know what to recognize, you know at what value you have to recognize. So the next part which will be addressed in any standard is nothing but its presentation in the financial statements. Because after all, if you record any item at whatever the value which the standard has asked you to do, the very next important step is to present it properly in the financial statement so that the users will understand the thing. So the next aspect which any accounting standard or any Indian accounting standard will focus is nothing but presentation aspect, and the last but not the least, it is nothing but disclosure ka requirement. Sir, which means what exactly is the disclosures which we have to show in the standard? So disclosures, as to this, disclosures will be generally done in your notes to accounts, which is also an integral part of your financial statements. To summarize what I have discussed till now, any standard if you learn, there are 4 important points which you have to remember. The first important point is, sir, when to recognize the asset. Second important point is, sir, at what value do I have to record? And third important point is presentation ka requirement. And the last but not the least, it is nothing but disclosure requirement, which means at what value I have to show in my books of accounts. At what value do I have to disclose the value? That will also be explained in the standard. Guys, don't worry about anything. So I will be sharing these notes with you. So whatever the notes which I have prepared for this Ind AS 16, I will be sharing these notes in the group. So you no need to worry anything. You no need to worry anything. So now for the next 30 minutes, please listen to whatever exactly I am explaining, because this 30-minute discussion is going to be the most important discussion with respect to this standard. So first we have understood, sir, what exactly is the objective of the standard, and this notes will be shared in the group, so no need to worry. First let us understand what exactly is this standard talking about. Next we have to understand, sir, what exactly is the scope of the standard. Sir, scope of the standard, sir, what exactly this standard will cover and what all the items which this standard will not cover. You have to understand that aspects as well. To summarize, I can say that Ind AS 16 is applicable to all PPE. It is applicable to all property, plant and equipment except few. It is applicable to all PPE except few items. The first item for which Ind AS 16 is not applicable is if you have any property, plant and equipment, and if that is held for sale. I am having one PPE. I have decided to sell that PPE. My intention is very clear. My intention is very clear that I am going to sell that PPE in the future. My intention is I don't want to continue that PPE in my business. Sir, what is the meaning of PPE? That will also be explained after completion of this scope. So, Ind AS 16 will be applicable to all types of PPE except if the PPE is held for sale. Guys, this standard will be applicable if you decide to use the PPE in your business. This standard will be applicable to you if you decide to use the PPE in your business. But if your intention is to sell the PPE, then for you Ind AS 16 is not applicable. Then students will be getting it out. Sir, in this case, what we have to do? Arey Baba, for this we are having a separate standard called Ind AS 105, wherein they will talk about, sir, if any non-current asset is there, at which value do we have to record? That is very simple. What that standard will say is, you have to record that asset at fair value minus cost to dispose. And this standard is not there in our syllabus, because I have already showed you what all the standards which are applicable. So the first part which you have to remember is, sir, Ind AS 16 is applicable for all PPE except PPE held for sale. Except PPE held for sale. Because for PPE held for sale, Ind AS 105 is applicable. So here don't apply Ind AS 16. So that is the first point which you have to remember. And the second point which you have to remember is, just a moment guys. Second point which you have to remember is, sir, if there is any biological assets, but other than bearer plant, if you are having any biological assets, for you also Ind AS 16 is not applicable. Guys, short discussion relating to bearer plant I have already made while discussing schedule 3 division 2, but further discussion is also there. I will be explaining this part also a little bit later. Sir, for biological assets, why Ind AS 16 is not applicable? Because another standard is there, and that is nothing but Ind AS 41, which will be dealing with all biological assets except bearer plant. Guys, if you remember the definition of bearer plant, I have already shared you one example. I will repeat that example once again. Arey Baba, assume I am having one mango tree, and for my mango tree many mangoes are there, and I have explained that once these mangoes are fully grown, I will be cutting only the mangoes but not the entire mango tree, which means it is also a kind of PPE only. This mango tree is also a kind of PPE, because if you observe what the PPE will do, guys, PPE will obviously produce you some goods, or it will provide you to render, it will make you to render few services, which means my mango tree is also a kind of PPE only na. It will make me to grow some mangoes, and once these mangoes are fully grown, I will cut those mangoes and I will sell those mangoes in the outside market. But still this PPE, this mango plant, in the next season it will grow once again the mangoes, which means I can sell the mangoes once again and I will be earning some income over that, which means this mango plant is also PPE only, and this mango plant is exactly called as bearer plant, and that is also a biological asset only. Further discussion of biological asset I will be making a little bit shorter, but what you have to remember is only bearer plant is covered in Ind AS 16. Sir, what about other biological assets? Arey Baba, for other biological assets you are having Ind AS 41. This is a separate standard. But if you are a bearer plant, you are also biological asset only, but you are covered in the definition of PPE, because the reason is you are pretty similar to the PPE. But if you are other biological assets, please don't come to Ind AS 16, because you are having a separate standard Ind AS 41. Sir, what exactly is the difference? Just be a little bit patient. After completion of the scope, next I will explain the biological asset. And the third one, Baba, if the asset is mineral right and mineral resources. If you are having any mineral resource, or if you are having any right to own any mineral or right to obtain any mineral, then whatever the right which you have there, for you another standard is there. That is some Ind AS 106 or 104, those standards are there which will give you a clear-cut clarity with respect to how to do the accounting for this mineral rights and mineral resources and all. The best part is that is not at all there in your syllabus only. So no need to worry about this point. And the last part which is out of the scope of the Indian accounting standard is nothing but exploration and evaluation assets. Sir, what exactly is this exploration and evaluation assets? Guys, if you observe big seaports and all, there are huge equipments which are installed at the seaports. Huge equipments, they will underground, they will dig too much underground and they will establish new machineries, huge big machineries and all, to explore the oil or to evaluate, to explore different minerals, to explore different mines and to explore different chemicals or whatever the minerals are having. If you are owning such asset to explore any mineral or to explore any oil, etc., that is also a PPE. But that PPE related accounting will not be covered in this Ind AS 16. For that also we are having a separate standard which is also not there in your syllabus. Simply speaking, you have to remember Ind AS 16 is applicable to all property, plant and equipment except if you are a property, plant and equipment held for sale, because for you what is applicable? Ind AS 105 is applicable. Second, Baba, if you are a biological asset other than bearer plant, because for you also Ind AS 41 is applicable na. Sir, but if I am a bearer plant, Arey Baba, for you Ind AS 16 is applicable. Mineral rights and mineral resources also, Ind AS 16 is not applicable because separate standard is there. Don't worry about that separate standard because that is not there in your syllabus. The last part, if you are having an exploration or evaluation asset, which means you are having a huge equipment, you have installed that at the seabed, and whatever that asset is there, please don't apply Ind AS 16 because for that you are having a separate asset. Very simple, guys. Right now I am explaining you the scope of the standard. In the scope of the standard, you have to understand few points. To summarize, sir, Ind AS 16 is applicable to all PPE, but it is not applicable to few PPE. Sir, what are the few PPE? First one, if you are having a PPE held for sale. Sir, why? Because for you, Ind AS 105 is applicable. If you are holding a biological asset and that too other than bearer plant, for you also Ind AS 16 is not applicable because for you also there is another standard which is nothing but Ind AS 41. Third point, if you are having an exploration and evaluation asset, or if you are having any mineral rights and mineral resources, for you also this Indian accounting standard is not applicable. To cut short, Ind AS 16 will be applicable to all PPE, but if you are a non-current asset which is held for sale, don't come to Ind AS 16, we will not tell you the accounting treatment because for you another set of standard is there na, Ind AS 105, go there, don't come to us. If you are a biological asset but that too other than bearer plant, Sir, I am a bearer plant. Welcome to Ind AS 16. But if you are a biological asset other than bearer plant, please don't come to us. Sir, I am an exploration asset and an evaluation asset. Arey Baba, please don't come to Ind AS 16 because you are also having a separate standard. So go there. Sir, I am a mineral right and a mineral resource. Arey Baba, please don't again come to us. You are having a separate standard. So go there and follow. To cut short, this is the scope of the Ind AS 16. So I just want you guys to write these two parts. Objective also I want you to write. Scope also I want you to write. So please write these 2 points, guys. Then I can start with the next point because I want you guys to write this. So don't waste time, guys. Please write this fastly. I will be giving 2 minutes time to copy these parts. Once this was done, the very important discussion which I will be doing is nothing but relating to biological assets. Guys, here you have to get a complete clarity regarding this. So you will be writing that part, but first I want you to keep heading Ind AS 16 property, plant and equipment, and please write these points. I'm giving 2 minutes time, guys, so please copy. And please reply yes when you have copied this objective ka part and scope ka part as well. Just please go through that scope. You no need to remember all points for that scope, but at least have some basic idea. Then we can get started with what is the meaning of biological asset and all. Okay, just 2 minutes. So guys, have you copied? Yes. Sir, now we have understood the objective of the standard also we have understood. Sir, and then we have understood even the scope of the standard as well. Now, let us move to the very important discussion. Sir, what exactly is the meaning of biological asset? And what is the interlinking which it have with respect to this Ind AS 16 and Ind AS 41? Now we will be learning that entire clarity. Sir, first let us understand. Sir, what is the meaning of this biological assets? Guys, this biological assets, if you try to break down this word called biological assets, it is very simple. If any asset is biologically born, that is called as biological assets. So what is the meaning of asset which is biologically born? For example, plants. For example, plants can be biologically born, or even animals also can be biologically born. Just a moment. Guys, can you confirm now? Is the voice fine or is it still lower? Please confirm. So one of the students is texting that, sir, your voice is bit low. Can you please confirm now? Is it fine? Done. Super, thank you. Sir, the meaning of biological asset is nothing but those assets which are biologically born, which means, sir, plants can be biologically born, and even animals also, for that matter, those will also be biologically born. Sir, can you please give us some examples of these animals? Are Baba, if you observe, there are cows or buffaloes, and even goats are also there. Sir, my first question is, why these will be treated as assets? Are Baba, if you observe milk societies like Amul, etc., if you observe, they will be having thousands of cows and thousands of buffaloes. If you observe, they are also definitely assets, because they will give you benefits which are more than for one accounting period. And therefore, if you observe strictly the definition of asset, that will be even applicable to this animals also. So what they have did is, if you are having any cows or buffaloes, so they have designed a separate standard which is called as Ind AS 41. And that Ind AS 41 will be covering each and every detail about biological assets which are specially animals. Because I think you guys have already know this term called depreciation. And it is not possible to provide the depreciation to these cows or buffaloes. You cannot measure how much the value they have depreciated, and all it is not possible. You cannot apply revaluation points and all. So it is, I mean, the entire concept itself is different. So you cannot apply a PPE based accounting for these biological assets which are animals. So what they have decided is, they have framed one separate standard. And if you are a biologically born asset and if you are an animal, for you Ind AS 16 is not applicable. For you, what is applicable, guys? Ind AS 41 is applicable. I hope this point is clear-cutly understood to you. Biological asset is nothing but assets which are biologically born on the earth. Sir, are plants treated as biological assets? The right answer is 100%. These plants will be treated as biological assets. And if you observe, sir, are animals also treated as biological asset? The right answer is yes, sir. Animals also will be treated as biological assets. Cows, buffaloes, goats, etc. For you guys, Ind AS 41 is applicable. But now comes the most important discussion. Sir, what about plants? Guys, if you observe, for plants, we have to remember there are two types of plants. Sir, first type of plant is nothing but bearer plant. And second type of plant is nothing but non-bearer plant. Sir, what is the meaning of non-bearer plant? Arey Baba, non-bearer plant is nothing but other than bearer plants. Oh, non-bearer plant is nothing but other than bearer plants. Sir, can I say that bearer plant is nothing but other than non-bearer plant? Arey Baba, like that you cannot say. So they have given one definition for this bearer plant as well. To summarize, all the animals which are biological assets for you, Ind AS 16 is not applicable. Guys, then which standard is applicable? Ind AS 41 is applicable. Then even if you are plants, if you are a biological assets, for you also Ind AS 41 is not applicable. For you, what is applicable is Ind AS 16 is applicable. Sir, I am a biological asset, but I am not a bearer plant. For you, Ind AS 41 is applicable. Still now, I haven't explained you the definition of bearer plant, but you have already known one example. I will give you definition also as to what exactly have been given in the standard. But have you guys understood this point or not? Biological asset meaning is very simple. If you are any asset which is biologically born on the earth. Sir, are animals considered as biological asset? The right answer is 100% animals will be considered as biological assets. Sir, for biological assets who are animals, is Ind AS 16 applicable to them? No, Baba. For them, separate standard is there. Ind AS 41. Okay, sir, then are plants also considered as biological assets? Right answer is yes, because plants are also biologically born on the earth. For you, you have to check two things. First one, sir, am I a bearer plant? If you are a bearer plant, for you, Ind AS 41 is not applicable, because bearer plant is also treated as PPE and Ind AS 16 will be applicable for bearer plant. If you are non-bearer plant, for you Ind AS 16 is not applicable, Baba. For you Ind AS 41 is applicable. If you are a bearer plant, Ind AS 16. If you are any other biological asset other than bearer plant, 41 is applicable. If you ask me again, I will write like this. Sir, biological assets can be two things, sir. Sir, first they can be animals. If you are an animal, straight away for you, Ind AS 41 will be applicable. So don't come into Ind AS 16 ka purview. But if you are a plant, you have to check, sir, whether I am a bearer plant or whether I am a non-bearer plant. If you are a bearer plant, for you, Ind AS 16 is applicable. Sir, I am a plant but not a bearer plant. For you, Ind AS 41 is going to be applicable. Are you understanding or not? Very simple point. I hope the meaning of biological asset is completely clear to you. Guys, please type yes if you have understood the meaning of biological assets. If you have understood the meaning of biological assets, then let us quickly move to the definition of bearer plant. And once this bearer plant ka definition is completed, then we will be stopping today's class. You have to confirm me, sir, biological asset is totally clear to me. Super, I have received one response. I am waiting for other students also to give me a response. Super Jyoti, Super Lingeshwar, Super Prasad. So done. Now let us understand the definition of bearer plant. Sir, what exactly is the definition of bearer plant? Guys, here I just want you to explain you the definition of the example of bearer plant which we have been using from the few days once again. Sir, I am having a mango tree. Assume many mangoes are grown on this mango tree. Sir, I will wait till the summer season. Once mangoes are fully grown, what I will be doing? I will be cutting those mangoes and I will be selling those mangoes in the market. Correct or not? Will I cut the entire mango tree or will I just pluck the mangoes only? This example I have been repeating number of times. Here I will not cut the entire mango tree. Here I will only pluck the mangoes and I will keep that mango tree as it is. Sir, why will I keep the mango tree as it is? Because next summer season, that mango tree will be again giving you new set of mangoes. Which means it is similar to property, plant and equipment na. You will be using your property, plant and equipment. Once it will produce some goods, you will sell in the market. Will you sell the plant and machinery itself? No, Baba, no. You will only sell the goods which are produced from that plant and machinery. Sir, next year what will happen? Arey Baba, next year again new goods will be produced by the plant and machinery na. In that case, this bearer plant, this mango tree is also similar to property, plant and equipment. And therefore, for this bearer plant, Ind AS 16 is applicable because this is very much similar to the property, plant and equipment. Guys, still I have not explained you what is the meaning of property, plant and equipment. That will be discussed in tomorrow's class, but now you have to understand complete discussion with respect to the bearer plant. So now you have understood that why mango tree is called as a bearer plant and why for bearer plants Ind AS 16 is applicable. Guys, I hope you guys have understood why bearer plant is also a PPE. And now the next important discussion is, sir, what is the definition of the bearer plant? Definition of the bearer plant is nothing but, sir, bearer plant should be a living plant. If it is already expired plant, if it is already a dead plant, that is not treated as a bearer plant. Bearer plant means, first of all, it should be living plant. And then it should be used in the production of agricultural produce. It should be used in the production of agricultural produce. Sir, what is the meaning of agricultural produce? Arey Baba, mangoes, apples, oranges, all these are nothing but agricultural produce na. And the second point, guys, sir, it is expected to produce for more than one accounting period. Guys, if you observe mango tree, sir, accounting period means please consider it as 1 year. Guys, will your mango tree produce mangoes for more than 1 year? Answer is yes. This year mango season also it will produce mangoes. Next year mango season also it will produce mangoes. For the next 5 years also it will produce mangoes. For the next 10 years also it will produce mangoes, which means a bearer plant is a living plant. It is expected to produce agricultural produce. And next one is, it is still expected to produce for more than one accounting period, which means definitely it should produce for more than 1 year. And the last part is, plant itself is not expected to sold. Means, sir, I am not solding that entire plant. I am only solding the agricultural produce from that plant. This is the definition of the bearer plant which they have been given in the standard. Sir, please repeat with me. Bearer plant is a living plant, Baba. It is not a dead plant. Sir, it should be used in the production of agricultural produce. It should be expected to produce for more than one accounting period. And the third part is, it should not be expected to be sold. Some exception is there. If you are solding it as a scrap, that is okay. But otherwise, you should not sold the plant. Arey Baba, if the plant itself have become useless, then what I can do? I can sold it as a scrap. But normally, you will not sold the plant. Guys, a bearer plant is a living plant. It should be used in the production of agricultural produce. It should be expected to produce for more than one accounting period. And plant itself is not expected to be sold except scrap. And this is exactly the definition of bearer plant. Guys, I will ask you one question. You have to tell me. Sir, example, if I grow sugarcane, once the sugarcane is fully grown, will I cut only the sugarcane or will I cut the entire plant itself? Guys, I want your answer. Sir, if sugarcane is fully grown, will I cut only the sugarcane ka portion or will I cut the entire plant itself? You have to tell me. Will I cut the entire plant or will I only just pluck the sugarcane? Exactly. There comes the difference. If you observe sugarcane, once the sugarcane is fully grown, you have to completely detach the plant, which means that sugarcane is not a bearer plant. If it is not a bearer plant, Ind AS 16 is not applicable. Are Baba, go to Ind AS 41 because you are a biological asset plus not a bearer plant. Therefore, Ind AS 16 is not applicable. If you observe crops like wheat or maize also, rice plant also, wheat also, maize also, Are Baba, all these cases, you will cut the entire plant once the crop is ready, which means all these items will not be treated as bearer plants. But mango tree, apple orchard, orange trees and all, you will only cut the produce, you will sold that produce in the market, but not the entire plant. Guys, I hope you have understood exactly what is the definition of the bearer plant. If you are fine, please copy this meaning of biological asset and further discussion we will be having in the next class. So please copy the meaning of biological asset and you can copy till here. Okay, you can complete the bearer definition, bearer plant ka definition as well, and then we will have the further discussion in the next class. Thank you, Guru Prasad. Thanks for confirming. So now please copy this definition, meaning of biological assets. Please copy. I am waiting for you. Please copy till here. The definition of PPE will be covering in the next class. In tomorrow's class, we will cover the definition of PPE and all. So I request you, please copy till here. If you are done, please let me know. We'll stop today's class. Okay, very good, Jyoti. Very good. Yes, Prasad, I am planning to take 2 classes from tomorrow. The reason is pretty simple because our target is to complete this CFR as quickly as possible, because you guys are preparing for the December 2025 attempt. So you guys should have a proper time to revise and all. So I will be taking 2 classes from tomorrow. One class will be fixed. We will take one class at 8:30 p.m. only. Actually, I have some other classes also, Lingeshwar, to keep entire classes on evening itself. So that is the reason I am planning. So one class will be conducted at morning. The correct schedule I will be sharing with you tomorrow. I will text in the WhatsApp group regarding the schedule. So what I am currently planning is morning till 10:45 I am having classes. So right now the only gap which is there in my schedule is basically from 11 to 1. So I am planning to take one class from 11 to 1 and another class I am planning to take 8:30 to 10, like how we have taken today. So if you guys are having any problem to attend the morning class, what I will be doing is, as soon as I have completed the morning class, I will be immediately uploading that class in the your Class Plus app. So what you have to do is, you have to immediately watch the video. So, okay, I totally understood your query, Lingeshwar, but what we can do is, I will be taking that class and I will be uploading that, and that video will be shared. So you can watch the video probably after 3 also. So still it is having more time, because that video, that class will be only 1.5 hours only. So even after 3 or even after 4 also, before 8:30 you can watch the video. That is the assurance which I can give. I will make sure that video will be uploaded before 3 o'clock only. So you can watch the video after 3 or even 4 or 5 is also doesn't matter, because that class is only going to be 1.5 hours. So I think further updates I will be sharing in the WhatsApp group. If you have completed till now, please revise what we have discussed today. So we will be continuing from tomorrow's class. Sir, tomorrow's class, what is the timings and all? I will be sharing that in the WhatsApp group which we have been created. So that's it for today, guys. We'll continue in the next class. So I'm planning to complete the syllabus probably somewhere around first week of October. So we will definitely complete all the important chapters from the exam perspective. 95% coverage we can do till first week of October. But if any chapter here and there, if it is left, I will be sharing a complete revisionary video in the YouTube that will be uploaded in the YouTube. So you guys can watch that free of cost. But all the majority chapters, all the important chapters from the exam perspective, those will be solved and those will be completed before first week of the October is our target. So some plus or minus 1 or plus or minus 3 days will be there. So, but maximum we will try to complete within the first week of October only. If there are any chapters which are left, I will be uploading those in YouTube, so you can watch whenever you have free time. Okay, so with this, good night guys. Let us continue tomorrow. So whatever we have discussed, please watch them, please revise them, because revision is very, very important. Okay, because this is very big, this is very huge when compared to the other subjects. If you make cumulative revisions, so daily once the class is completed, I just want you to spend half an hour time. If you watch the classes effectively, if you spend just half an hour, it is more than sufficient. But daily you have to do, guys. Cumulative revision is the key to get 90 plus. And that revision also you have to practice by writing. Just saying will not fetch you marks in subject like CFR. Okay, so that's it, guys. Thank you so much. Thank you so much for the class. Good night to you. We'll meet in tomorrow's class. As I have discussed, I will be sharing the schedule tomorrow. Okay, thank you, guys. Okay, fine, guys. Good morning, everyone. So let's get started with today's live. In last class, if you observe, we have completed basically what are the basics chapter which we have completed. We have completed that division to schedule 3, and then the thing is, in last class basically we have focused on completion of statement of changes in equity, and once again I have revised the entire balance sheet cutting and statement of profit and loss account as well. And once that is done, we have immediately started with a specific Indian accounting standards part, which is very much important from exam perspective. That also we have focused. And once that we have understood, next I have explained you a clear-cut classification of how exactly the asset-based standards can be categorized. There I have explained that Ind AS 2, 16, 38, Ind AS 40, 23, 36 and 116. All these standards are nothing but asset-based standards. And I have also explained that Ind AS 2 is not there in our syllabus, and Ind AS 40 is also not there in our syllabus. And then we have immediately started with Ind AS 16, which is going to talk about property, plant and equipment, which will prescribe the accounting treatment for the property, plant and equipment. And then we have understood that the corresponding standard which will be discussed is at your inter level is nothing but AS 10. One second. Can you increase the volume from your end, Guru Prasad? I think it is fine from my side, so please check that. Is it fine now? I guess it is fine. Is it fine now, Guru Prasad? Please confirm. Is it fine now? Please confirm, Prasad. Is it audible? Can you confirm now? I think I have once again disabled and enabled the audio capture. So can you please confirm? Super, done. So yes, till now what I have said is what we have discussed in the last class. I have just summarized, and I am starting with this Ind AS 16, which is property, plant and equipment. This we have already started in the last class itself, and the corresponding accounting standard which is there with respect to this Ind AS 16 is nothing but AS 10, which you guys have already learned at your CMA inter levels. And we have also completed a few points. The first point which we have completed is the objective of the accounting standard, of the Ind AS, which is this Indian accounting standard Ind AS 16 will prescribe the accounting treatment for the recognition of PPE, when exactly you have to bring that into your books of accounts, and what is the measurement criteria which you have to follow, which means, sir, at what value do we have to record that PPE in our books of accounts. And then comes the presentation requirement, which means, sir, how to present the same in our financial statements. And the last part is nothing but disclosures. Sir, what all the disclosures we have to give with respect to this in AS 16, which is property, plant and equipment. And then we have studied, sir, what is the scope of this Ind AS, which is Ind AS 16. And then we have clear-cutly understood that Ind AS 16 is generally applicable for all property, plant and equipment except 4 items. First one is, if the non-current asset is classified as held for sale, for you another standard which is Ind AS 105 is applicable. Second item also we have understood that if you are a biological asset but other than bearer plant, for you also Ind AS 16 is not applicable, because for biological assets which are other than bearer plant and if it is related to agricultural property, you are having a separate standard called as Ind AS 41, and luckily that is not there in our syllabus. But if it is a bearer plant, then for you Ind AS 16 is applicable. Guys, complete clarity I have given, sir, what is the meaning of biological asset and what is the meaning of bearer plant in the last class itself. I hope that discussion is pretty clear to you. And then we have started, sir, if you are having a mineral right and mineral reserves, for you also you cannot account as per Ind AS 16, because there is another standard which is there specifically talks about this mineral rights and mineral reserves, and also exploration and evaluation assets also. If you are having a separate standard in order to provide the accounting treatment for those assets. Those are also not there in our syllabus. So this scope is a little bit important, but still you can easily remember the concept if I revise it multiple times. So no need to worry about this scope. Another important clarity which we got is the meaning of biological assets. So biological assets are nothing but assets which are born biologically on the earth. Sir, all the living plants will become biological assets? Answer is yes. Sir, are all the animals also become biological assets? Answer is yes. But if you are a living plant, that too a bearer plant, for you Ind AS 16 is applicable. If you are other than bearer plant, for you Ind AS 41 is applicable. And if any animal is there, for this also Ind AS 41 is applicable only. To cut it short, only bearer plant is covered in Ind AS 16. Baki remaining all animals, remaining all biological assets, we are having a separate standard which is called as Ind AS 41. And then we have started with the definition of the bearer plant, where they will say very simply, Baba, bearer plant has to be a living plant first, which should be used in the production of agricultural produce and which is expected to produce for more than one period. And then plant itself is not intended to be sold, but except it can be sold as a scrap sale. That is an exception, but generally plant itself will not be sold. Sir, what is the example which we have used? Sir, we have used the example of mango tree or apple orchard, etc. Once the mangoes or apples are fully grown, we will just cut the apple or oranges or mangoes for that matter, but not the entire plant, which means it is very similar to the property, plant and equipment. But if you are having annual crops like wheat, maize, etc. or bamboo trees, these are not rated as a bearer plant, because these annual crops means what? They are not expected to produce for more than one period, which means they will not satisfy the definition of bearer plant, but still they are a biological asset. And therefore, since they are a biological asset other than a bearer plant, for them this standard is not applicable. So that is the point which you guys have to understand. And with this understanding, now let us start the next discussion, which is nothing but the definition of PPE. So the definition of PPE is nothing but, just a moment guys. Sir, the definition of PPE is nothing but, first of all, the full form of PPE we are already knowing. PPE is nothing but property, plant and equipment. Sir, what is the exact definition of PPE which is given in the standard? Let us try to decode that definition. Sir, first of all, PPE means it should be a tangible item. It should be a tangible item, which means it cannot be an intangible item. Sir, what if the asset is intangible item? Arey Baba, if the asset is intangible item, we are having a separate standard for that intangible assets, and that is nothing but Ind AS 38, and for that also we are having a separate standard. So in order to call an asset as PPE, first of all, it should be a tangible asset, and the second most important thing is that tangible item should be used by you. That tangible item should be used in the production of goods. Production of goods. Example, sir, I have purchased one plant and machinery. Sir, is plant and machinery a tangible item? Answer is yes. Sir, I will use that plant and machinery to produce some goods. Later, I will sell those goods in the market. Which means now I can say that whatever the machinery which I have purchased, that I will be using, that is a tangible item, and that item I will be used in the production of my goods. So whatever the equipments or whatever the machinery or whatever the items which you have purchased, if that is a tangible item and if that is being used for you for the production of goods, that is going to be satisfying the definition of PPE. And the second part, Baba, sir, I have purchased one item. I mean, I am having a tangible item, but I am not using that for production of goods. Rather, I am using that for rendering of services. Sir, can you please give us one example wherein you will use plant and machinery for the purpose of rendering of services? The answer is very simple. Guys, in order to record the classes, I am having one laptop. Sir, that laptop is a tangible item and I am using that tangible item for the rendering of services. Which means this laptop is also satisfying the definition of PPE. And not only that, I am having one documentary camera. And through that camera only I am recording the lectures. So this camera is also going to be a tangible item, and that also I am using in the rendering of my services, which means the camera itself will also satisfy the definition of PPE. And other than this, I am having an iPad, and I am using this iPad also for the purpose of rendering of services, that is teaching classes or coaching classes to you guys, which means this iPad is also a tangible item, and now I am using that tangible item for rendering the services to you, which means it is also satisfies the definition of PPE. To summarize, PPE is nothing but a tangible item which should be used in the production of goods. Second item is it should be used in the rendering of services. And the third item is if it is used for giving rental to others. If I have given any asset as rent to others, if my intention is to give any asset as rent to others, obviously I will be getting some rental income. I am using that asset to give it on rent. If you are holding that asset also for that purpose, still that will also be treated as PPE. Sir, you are having one tangible item. If you are using that for production of goods, PPE. If you have one tangible item, if you use for rendering of services, PPE. And if you have any tangible item and if you are using that for giving rent to others, that is also treated as PPE. And here only I just want you to give another clear-cut clarity. Sir, if I am having one land or building, if I am having one land or building, if I have purchased the land or building, if my intention is only to earn rental income, which means I just want to give the building on rent and obviously I will be receiving the rental income. The purpose of holding the building itself is to earn rental income, and whenever the property of the building increases, I will be immediately selling that, which is also called as capital appreciation. If I am having a land or building and if my intention is to earn any rental income by giving them on rent to others, in this case, whatever the rental income or the capital appreciation which you are getting, if you remember, this will be classified as investment properties. These will be classified as investment properties, and if you remember division 2 ka schedule 3, first I have written 3 items of non-current assets. The first item is property, plant and equipment. Second item is capital work in progress. And the third item is nothing but investment properties. Sir, but this investment properties only cover land or building. And if you are holding that land or building only for the purpose of earning rental incomes or capital appreciation, in only these two cases that property will be treated as investment property. And for this investment property also, I have already said that we are having a separate standard which is Ind AS 40, and this is not applicable for us. To summarize once again what we have discussed, sir, first of all, a PPE is nothing but a tangible item, sir. If that PPE is used in the production, if that tangible item is used in the production of goods, it will satisfy the definition of PPE. Or I am having one tangible item, I am using that tangible item for the rendering of services, it is also treated as PPE. Sir, I am having one PPE, I am using that PPE for rental to others, that will also be treated as PPE. But hold on guys, one exception. If you are having a land or building, if the purpose of you to hold that asset is only to earn the rental incomes or capital appreciation, then that item will be treated as investment property. And for you, the accounting has been given in Ind AS 40, and this is not there in our syllabus. Sir, then which items will be covered in the definition of PPE if my intention is to earn rental incomes? Guys, whatever the assets which are other than land and building. For example, I am having a plant and machinery, I am having a car, I am having a bike, and I have given these items on rent. And whatever the rental income which I have received from these items will be called as, these will be categorized in the definition of PPE, and that PPE is covered in Ind AS 16. So I hope this point is very much clear to you. If you are having any tangible item and if you have used that for giving rental to others, that will be treated as PPE only. But if it is a land or building, and if your intention is only to get rental incomes or capital appreciations, then in this case it is not treated as PPE, Baba, because for these items they have designed one separate standard which is called as investment properties, but that is not at all there in our syllabus. Sir, I am having a vehicle, I have given that vehicle to another person for rent, because that person is using that vehicle for the transportation of passengers. But my income is to earn the rental income from such vehicle or plant and machinery kind of a thing. So this is going to be a PPE, and for this you will be applying Ind AS 16. To once again summarize all the things, what you have to understand is, sir, a PPE should be a tangible item first, and this tangible item should be used in the production of goods, and this tangible item should be used in rendering of services, or this PPE should be used for giving rental to others. Then in all the cases the item will be treated as PPE, and this is nothing but property, plant and equipment. And we are having a last item which is nothing but if you are using a tangible item for administration purposes. Sir, what is the meaning of administrative purposes? Guys, administration purposes is nothing but assume I have purchased one building. I am running office in that building. I am running my corporate office in that building, or I have started is my CA, my own CA practice, and I am running that practice in that building. Sir, is building a tangible item? Right answer is yes. Sir, am I using that building for my administrative purpose? Answer is again yes. So this will be satisfying the definition of PPE. If you are holding the building for earning rental income, it will be treated as investment property. But if you are using the building for administration purposes, it is a PPE, and Ind AS 16 will be applicable in that case. Guys, I hope you guys have understood what exactly I am trying to say. So with this, we have completed the definition of PPE. And in all these cases, benefits should be expected for more than one accounting period. Then only you can call any item as property, plant and equipment. Guys, in all the examples which we have discussed earlier, sir, for example, assume I have purchased one plant and machinery and that I will be using for production of goods. Sir, will I only produce goods only for 1 year? Answer is no. With that machinery, obviously you will be producing for more than 1 year na. Even if you observe the laptop or camera or iPad which I will be using for the rendering of services, all those items also will be used for more than one accounting period only. And if I am giving any asset other than land or building to rent also, obviously the benefits will be earning by me more than 1 year only na. And even the last part also, if you are using it for administration purposes also, if you are using for those purposes only, then in that case also that tangible item will be treated as PPE. But the thing is, benefits should be accrued for more than one accounting period. I hope you guys have completely understood what exactly I am trying to say. So now what you have to do is, I just want you guys to see this definition of PPE which is there. It is nothing but, PPE is nothing but tangible asset used in the production of goods. Example, machinery. Rendering of services, example laptop, iPad or whatever, camera which I am there, all these things. And last one is, sir, held for rent to others except land and building. Sir, why except land and building? Because for land and building we are having separate standard that is not there in our syllabus, so don't worry. Other than land or building, for example, if you are having any machinery, if you are having any vehicle, if you have given those items as rent to others, that will become your PPE. And for last, if you are using any asset for administrative purposes, then in that case also, that item will be treated as PPE. But in all the cases, those should be expected to be used for more than one period is what you guys have to remember. If all the benefits are giving only for less than one accounting period, it will not become PPE. First of all, it have to be a capital item also na. Then only it will satisfy the definition of PPE. So what you guys have to do is, please copy the definition of PPE and just spend some 1 to 2 minutes in interpreting the definition of PPE. Because this is the first time and last time you have to read this part. You should definitely understand what I have written in the screen just right now itself. Without understanding, I cannot proceed further. So I want you guys to copy this, the definition of PPE, and please tell me once you are done copying, so that we will be starting with the next part. If you complete, please say S Prasad. I'm waiting for you. You guys have to increase your writing speed because CFR is going to be a very lengthier paper, guys. So you have to definitely practice more writing so that your writing speed is very much increased, because it is not possible if we guys are having a slow writing speed when it comes to tackling a subject like CFR. So yes, Guru Prasad, fine, that is super. Now, sir, we have exactly understood what is the definition of PPE. Sir, if you repeat once again, guys, you have to repeat along with me so that after going home, all these items will be exactly fixed in your mind. So if you just open the book, you will remember exactly all the items which will be discussed in the class. Trust me, I can give that much confidence to you. So first of all, sir, what is the meaning of PPE? Are Baba, PPE is nothing but it should be a tangible item. And sir, this tangible item though I have to use either for production of my goods, or I have to use for rendering of services. Sir, or I have to held that asset for giving it as rental to others. Or in the last case, I can use that for my administrative purposes. In all the cases, it is expected to give benefit for more than one accounting period. So this is the definition of property, plant and equipment as per Ind AS 16. So now let us try to understand, sir, when exactly we have to recognize a PPE? When we have to recognize PPE, or is there any recognition criteria which is being specified in the standard? Basically, they have gone ahead and prescribed two conditions. You have to check whether these two conditions are satisfied or not. Sir, these two conditions are there now. If these two conditions are satisfied, then only you have to recognize that PPE in your books of accounts. You will not recognize all PPE in your books of accounts. You have to check whether this recognition criteria, which I will be explaining right now, is satisfied or not. If it is satisfied, I will record that item in my books of accounts. If this recognition criteria is not satisfied, then I will not be recording that item in my books of accounts. Which means the first condition which they will say is future economic benefits should flow to the entity. This is the most important criteria which you guys have to be remember. This future economic benefits, guys, this is nothing but cash flows. Sir, how will I get cash flows? Arey Baba, if you use any PPE, either in your production of goods, either for rendering of services, either for rental to others, or either for your administrative purpose, in all the cases, your objective is to earn future economic benefits, which is nothing but future cash flows. If that asset will generate future economic benefits, then only we have to recognize that item as PPE. Sir, can you please give us one example? Right answer is yes. Assume you have one plant and machinery which have become totally useless. Sir, can I use that property, plant and first of all, is that a tangible item? Right answer is yes. Sir, is it used in the production of goods? Right answer is still now it is used in the production of goods only. But the machine have become totally useless so that it is not capable of generating future economic benefits. So you should not recognize such kind of asset. Sir, but the asset is already there in my books of accounts. So now you have to de-recognize that asset. If this recognition criteria is met, then only first you have to recognize the asset. If future economic benefit itself will not flow into the entity, then that item cannot be recorded as an asset, and this is the first recognition criteria which you have to check. And the second item is nothing but cost should be measured reliably. So the meaning of this is whatever the cost which you have incurred to purchase the PPE or to construct the PPE, that should be measured reliably, which means the cost you should be able to measure the cost, that too reliably. If these two conditions are satisfied, then only you will record the property, plant and equipment in your books of accounts. First of all, it should be a property, plant and equipment, which means it should be a tangible item which should be used in the production of goods or in the rendering of services or for giving it as rental to others, or at last it should be used for administrative purposes. First of all, it should be a PPE. Next, it should satisfy the two recognition criteria which is there in the standard. Sir, what is the first one, sir? First one is nothing but future economic benefits, and second one is nothing but cost should be measured reliably. If these two recognition criteria is satisfied, then only I will recognize PPE in my books. Sir, what is the meaning of recognizing? Recognizing is nothing but bringing the asset or bringing the PPE into our books is called as recognition of an asset. Only two conditions you have to check, guys. First condition, future economic benefits should be flow to the entity, which means the asset is capable to generate future economic benefits. And the second condition is cost should be measured reliably. If these two conditions are satisfied, then only you have to record the asset in our books of accounts. Clear, guys? If you guys have clear about this point, I want you guys to copy this recognition criteria as well. Here what they will say is PPE will be recognized when it is probable. When it is probable, which means more than 50% it is correct that future economic benefits will flow to the entity, and the second part is nothing but cost can be measured reliably. These are the two recognition criteria which you have to check. If these two recognition criteria is satisfied, then only our PPE will be recognized. So please copy these 2 points as well. You have to copy these 2 points in less than 2 minutes. So please copy and just tell me once you are done. Super. So brilliant, Prasad. Sir, first of all, sir, we have started with the scope of the standard. And then we have understood, sir, this Ind AS 16 is applicable to all PPE except if your PPE is a non-current asset held for sale. Because for you, Ind AS another standard 105 is applicable. Sir, if I am a biological asset, sir, if I am not a bearer plant, for you also Ind AS 16 is not applicable. Next two items, exploration asset and evaluation asset and mineral rights and mineral resources. Even in this case also, Ind AS 16 is not applicable. After once we have understood the definition of biological asset also, we have understood the definition of bearer plant also. And then we have started with the definition of PPE, which is nothing but it should be a tangible item, it should be used in the production of goods, or it should be used for rendering of services, or it should be used for giving as rental to others, or it is used for administrative purposes. In all the cases, it is expected to be used for more than one accounting period. Then only it will be called as a PPE. Next, we have understood the recognition criteria of PPE. Sir, how many conditions are there, sir? Sir, we are having only two conditions. Sir, what is the first condition? First condition is nothing but property, plant and equipment should generate future economic benefits to the entity. And the second condition is cost should be measured reliably. If both the conditions are satisfied, then only we will recognize the PPE in our books of accounts. Guys, I hope you guys have understood till here. If you are fine, let us start with the next concept, which is called as spare parts, accessories and standby equipments. Sir, what exactly is the meaning of this spare parts? Guys, I think you have already know this spare parts ka definition. I will take one example so that you guys will understand. For example, generally what we will be doing is, I have laptop in front of you. Back of this, I am having one camera. And through that camera, I will be recording classes. And I will be coming live through that camera only. Sir, what if suddenly this camera fails? Assume I am conducting a war room session. The day before our CFR exam. Assume I am conducting the war room session. But unfortunately, my camera have stopped working. Guys, that was very important for you. That was very important for CMA final student. If you guys do not attend my war room session at that point of time, obviously you will be facing difficulty. So that is the reason I have thought proactively and I am maintaining another camera also for safety purpose. Sir, what if unfortunately something happens? I will be having a spare camera. I will be replacing that camera and immediately we will be resuming the war room session, because our focus is we should not miss this war room session, which means this spare part, whatever the camera which I am using right now, it is obviously my property, plant and equipment, because it is a tangible item and I am using that for the rendering of services. But whatever the spare camera which is there, what should be the treatment for that will be addressed by now. I hope you guys have understood. Whatever the camera which I am using that currently, that anyway will become my PPE, because that will be generating future economic benefits also. And obviously I will be measuring the cost also now. Therefore that will definitely become my PPE and I will recognize that PPE also in my books of accounts. But the second part is, sir, what we will do, what should be the accounting treatment with respect to the spare camera which I am having? I hope you guys have exactly understood what I am trying to say. Or this spare parts ka accounting I will explain right now. Second kind of example, second kind of point which they will be covering here is nothing but accessories. Sir, what is the meaning of accessories? Can you please give me example of accessories? Right answer is yes. Arey Baba, assume I am having batteries. Batteries in my see, in front of me there is one light is well. The studio light is also there. I will operate this light with this remote. So, sir, obviously this remote is being operated by batteries. Sir, what if my batteries are gone suddenly? Our classes should not stop. Our war room should not stop. So I will be maintaining a spare kind of batteries as well. I will be maintaining a spare kind of batteries as well. I am having one mic also which is there. I will be using this mic. Sir, what happen if suddenly the charging is completed? Then Baba, I am having another spare mic also with me. If this mic stops, I will use this mic. In all the cases, our CFR war room session should not be disturbed. That is the crucial part. So, I will be maintaining spare parts also. I will be maintaining accessories also. Sir, can you please give me another example? This calculator. Sir, is calculator also a PPE? Are Baba, yes. Sir, is it a tangible item? Obviously, yes, it is a tangible item. Sir, can I use this in the production of my goods? Are Baba, generally for my administrative purposes and all, I will be using this calculator. And also while teaching also, which means indirectly I am using this calculator for the purpose of rendering the services. And obviously it will be giving benefit for me more than one accounting period. Arey Baba, if properly used, this calculator will be keep on working for the next 5 years also. So this calculator, this mic, this remote, this batteries, everything will be called as accessories. Everything will be called as accessories. And one more item which they will prescribe here is nothing but standby equipment. Sir, what is the meaning of standby equipment, sir? Standby equipment is nothing but, let me give you one example. You will exactly understand what is the meaning of standby equipment. Sir, we are currently having our CFR war room session the day before examination. Everything is going good. My mic is also good. My batteries are also good. My camera is also good. My studio light is also good. My laptop is also good. But unfortunately, the power issues have been happening. From the past 24 hours, there is no power. Because of that also, our CFR ka war room session should not stop, because that is our primary objective. Arey Baba, my objective is to get you all 90 plus in my subject. So what I will be doing is, I have kept a generator also. In case of these kind of unavoidable situations or unexpected situations, I will be turning on my generator immediately. And through that, we will continue the war room session. Which means, now whatever accounting treatment which I am right now saying, that will be for the spare parts also, for the accessories also, and for the standby equipment also. Sir, what is the meaning of spare part? Can you give me examples? Arey Baba, spare camera I am having. Spare mic I am having. And when it comes to accessories also, I am having batteries, I am having remote, I am having calculators, and all these are nothing but my accessories only. And when it comes to standby equipments, assume generator, etc. Sir, what should be the accounting treatment for these items? Arey Baba, our standard have also prescribed the accounting treatment for all these items. Sir, what the standard is suggesting? Now let us try to understand that part. Arey Baba, first one, for example, if you observe the spare camera also. Sir, if that spare camera satisfies the definition of PPE, if that spare camera satisfies the definition of PPE and also the recognition criteria also, then that will be treated as property, plant and equipment. Sir, if PPE definition is not satisfied, then we will be treating that item as inventory. whatever the spare part, whatever the accessory, whatever the standby equipment which is there, if it satisfies the definition of PPE. Sir, what is the meaning of satisfies the definition of PPE? Arey Baba, simple. Tangible, production, rendering of services, use it for rental, use it for administrative purposes. And it should fetch you future economic benefits to the entity, and also cost should also be measured reliably. If all these conditions are satisfied, even that spare part, even that accessory, or even that standby equipment also should be recorded as PPE. And if the definition is not satisfied, then it will be treated as inventory. I hope you guys have exactly understood what I am trying to say. If you are having any generator, or assume you are having extra projector or extra camera for recording setup, that will be treated as PPE. And if you are having batteries, it is not a PPE. Sir, why batteries will not be a PPE? Arey Baba, batteries ka benefit will not be there for more than 1 year. So obviously that will not satisfy the definition of PPE. If it is not a PPE, you have to treat this item as inventory, and Ind AS 2 is applicable, and unfortunately this is also not there in our syllabus. Guys, I hope you have exactly understood what I am trying to say. And another item is also there, guys. Arey Baba, assume I am having a toolkit. Assume I am having a toolkit. In this toolkit, what have happened is, sir, there are 100 screws which are there, and I am having 200 molds, and I am having 300 dice. And other than these items, I am having cutting pliers. I am having screwdrivers also. I am having some electrical items. All electrical items are there. Sir, do I have to recognize each screw as PP? Do I have to recognize each mold, each nut, each plier, each screwdriver? Sir, do I have to recognize all these items as PP? The right answer is, guys, those are very, very immaterial. It is not possible for us to record each and every item. So what they are suggesting is, in this situations, you can do aggregation also. Sir, what is the meaning of aggregation? Aggregation is nothing but you can combine all 100 screws, all 300 dice, all 200 molds, and you can record all these items as a single asset. You can do aggregation of those items which are individually insignificant. If any item is individually insignificant, then I have to do aggregation of all those items. So the same point which I have written here as well. Of course, they should have met the definition of PPE. If they have met the definition of PPE, whatever the insignificant items which you are having, all those items will be aggregated for recognition, and this will also be treated as PPE. Guys, have you understood what I am saying or not? If you have understood, please give me yes as a reply, and then you have to write these points also, Baba. Please reply if you have understood. If you are understood, you can just copy this part and then we can continue the next part. Brilliant, Prasad. Super. If you are done, please copy this part. Treatment of spare parts, accessories, standby equipment. Copy this part, this note item also please copy, Guru Prasad. Then we will continue with the next point. So I think you have copied this note as well. So now the next part which we will be discussing is little bit interesting. And this discussion is about, sir, assume there is one asset. And sir, this asset I have acquired for environment purpose or society. Sir, what is the accounting treatment if you have purchased any asset for environment or society or safety reasons? Sir, how to do accounting treatment for that? Let us try to understand with the help of an example. Guys, assume there is one factory. Assume there is one factory which is located, and obviously it is emitting harmful chemicals. So many chemicals are being emitted and they are directly released into the air, or they are directly releasing into the water. So what, there are many laws which will tell you that if you are a factory and if you are causing a pollution, it is not correct. So what you have to do is you have to install something called as chimneys, and through that your smoke will be going to be released. And this smoke also should not be directly released into the atmosphere. Filtering will be done. Major components will be removed and they are filtered, and only the residual part will be mixed with the air. So for example, assume this is called as chimneys. So sometimes many entities, as their responsibility, will install these kind of chimneys, and of course all the companies are not that much good enough which they will think that much from the society point of view, and they will not do that kind of things. All companies are not that much good. So there are many laws which will say that, Are Baba, if you are causing pollution, it is your responsibility to install the chimneys and only you have to reduce the pollution. Like this, there are some laws. There are some environmental laws which are there. For safety purpose, what they will be saying is, Are Baba, go ahead and install the chimneys. Now, my question is, you guys have to answer my question. So listen to this very, 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 very carefully. Sir, if this chimney is not installed, if this assume my sales, if no chimney is there, it is only 1 crore rupees. Sir, if I install this chimney, is it anyway related to the production of goods? Because of this chimneys, is my production capacity increased? Which means, sir, because of this chimney, will I get any future economic benefits is my question. Sir, because of the chimney what you have installed, will I get any future economic benefits or not? You guys have to respond and tell me, sir, if this chimney is not there, will my future economic benefits are affected? Or even if this chimney is there also, will it increase my future economic benefits? The right answer is obviously no, na. Which means if you observe, sir, recognition criteria is not satisfied for this chimney, na. Because the very first recognition criteria will say that, Are Baba, future economic benefit have to flow to the entity. But here, the first recognition criteria itself has failed because it obviously will not generate the future economic benefits. But still, if you observe, sir, what many public society will think this way also. Oh, the company is doing so much for the benefit of society, which means some sort of reputation will be building in the public that, okay, this factory is taking care of the public. Therefore, they may purchase the factory ka products, which means some kind of indirect benefit is there for this chimney. This chimney may not help the entity to produce future economic benefits directly, but it may produce future economic benefits indirectly. So Ind AS 16 suggests the accounting treatment of this chimney also. Sir, but simply saying this chimney is not at all satisfying the recognition criteria. But still, this kind of assets will be called as enabler assets. This kind of assets will be called as enabler assets. Sir, why enabler assets? Arey Baba, if you understand, this asset will enable your normal PPE to produce more goods because more goods will be sold in the market. Sir, why more goods will be sold in the market? Because public will trust you. Public will see that, okay, the factory is very much responsible to the society. Therefore, what they will be doing is, they will be placing complete trust on you. So, obviously, your sales will be increased, not directly, but indirectly. Which means, can I say that this chimney is enabling my property, plant and equipment, or this chimney is enabling my entity to grow their future economic benefits but indirectly? Therefore, Ind AS 16 also suggests the accounting treatment for something called as enabler assets also. And what they will be saying is, if you observe here, sir, if any asset acquired for safety or environmental reasons, they will also be recognized as PPE if they are necessary to derive the benefits from other assets. And this kind of assets are exactly called as enabler assets. These assets will not directly produce the future economic benefits, but these are necessary to derive the benefits. Sir, how these are necessary to derive benefits? Arey Baba, example, assume there is one law which is there which will definitely asks you to install a chimney. If you do not install a chimney, your factory should be closed. You cannot run the production, you cannot sell the goods. So you will definitely install the chimney. Because of this chimney, it is very much necessary to derive the benefit from other assets, and therefore it is exactly called as enabler assets. Guys, are you understanding or not? If you understood, please copy this 7th point also. Please copy this 7th point also, which is nothing but asset acquired for environmental or safety reasons. So please copy this. Next, I will start with the initial recognition ka point. Super Prasad, excellent response. Thank you so much. Please copy this 7th point. So guys, let us continue the class till 1 p.m. After 1, I will stop. I want you to discuss another most important exam oriented concept. So if you are done, let us get started with that point, which is initial recognition of property, plant and equipment. Brilliant, Prasad. So now let us start with the next concept, which is called as initial recognition of PPE. Initial recognition of PPE. So what is this initial recognition of PPE? Are Baba, initial recognition, if you understand the word itself, the moment you purchase something, at what value you have to record, and all will be covered in this concept, which is initial recognition. First of all, there are many cases wherein you acquire a PPE. Sir, what are you exactly talking about? Answer is yes. One way to acquire is nothing but purchase. Purchase or acquisition I can do. Sir, another way of acquiring the asset is nothing but self-generated or constructed. If I want, I can construct my own plant and machinery, or if I want, I can self-generate my plant and machinery. Or there is another kind, which is nothing but exchange of assets. Exchange means one plant is exchanged for another plant. So this can also be possible. So what we will be doing is slowly let us understand all the cases. Sir, in case of purchase or acquisition, how to do the accounting treatment, at what value you have to record, at self-generated or constructed assets, what is the value which we have to record, or in exchange of assets also, what is the value which you guys have to record. So there comes the first thing is, sir, I have gone ahead and purchased one asset. So this, let us understand a purchase or acquisition. If you have purchased one PPE, what is the value which you are going to get? This is the concept which I am explaining right now. The first point is, Are Baba, assume you have purchased one air conditioner. If you look at the invoice, obviously in invoice, what are the items which are there? Are Baba, first one is nothing but purchase price na. Sir, this purchase price may, if you observe, in this purchase price also we are having something called as taxable value. If you check any invoice, you will be having taxable value, and there the most important concept which is called as GST. So this GST can be either CGST or SGST, or this GST can be IGST also. So this purchase price will include the taxable value also along with the taxes also. So the first thing what I am explaining is, sir, whatever the PPE which I have purchased, I will be recording that PPE at my purchase price. Sir, but this purchase price may also contain taxes. Sir, this purchase price may also contain taxes. So I will be explaining a complete understanding. I will be giving you a complete understanding of the treatment for these taxes. Sir, for this you should have a little bit knowledge with respect to the GST ka portion. I will be explaining completely. Even if you don't have any knowledge, still you can understand what exactly I am trying to say. But complete knowledge you will be getting after your indirect taxes is completed. I hope you guys have already learnt GST at your inter levels. So this concept will be clearly understood by you. So don't need to worry. Assume I have purchased one AC. The cost of the AC is 1 lakh rupees. And the GST which they have been charged, assume IGST at the rate 18%, they have charged. For example sake, I have taken 18,000 rupees. So the total is nothing but 1,18,000 rupees I will be paying. Sir, can I say that whatever the AC which I have purchased, I will be using that for my business, then only it will become PPE? Which means according to GST, I will use the term called as input. This tax which I have paid on my inputs is called as input tax. Sir, whatever the tax which I have paid on my input, sir, input means that will be used in your business, Baba. So whatever the tax which you have paid for your business, that will be called as input tax. That will be called as input tax. And this input tax 18,000 rupees, assume I have sales. And the sales which I have is nothing but assume 10 lakh rupees. I have to pay GST on my sales. So assume the same 18% is the GST. So now I have to pay to the government 10 lakh into 18%, which is 1,80,000 is the output tax which I have to pay. But GST department is saying, Are Baba, you have to pay 1,80,000. So department is asking you to pay 1,80,000. But you are saying, Are Baba, no, I am not that much mad. I have already paid you taxes. I have already paid taxes at the time of purchasing some inputs. And that input only I have used in my business. And through that item only I have earned output. Which means, can I utilize this input tax which I have paid against the output tax which I have to pay? The right answer is yes, you can do that. Which means I will not pay now entire 1,80,000. I will be adjusting this 18,000 rupees, and whatever the balance amount which is there, I will be only paying 1,62,000 to the department. I hope you guys have understood this point. Are Baba, I will not be paying the entire amount. I will only pay after adjusting input tax credit. Which means the person is already getting the benefit of tax which he have paid. Sir, how he is getting the benefit? Are Baba, he is getting the benefit in another way. He will get a reduction in output tax liability. He will get a reduction in output tax liability. So what they are trying to say is, Are Baba, you are getting one benefit there. If assume I have added this 18,000 also in the purchase price. For example, assume I have recorded my asset which is PPE. For example, Are Baba, if you purchase any PPE, you will debit the PPE and credit you will write bank. Which means here I will be writing 1,18,000 assume. If I write 1,18,000 here, I will get depreciation benefit. I will get depreciation benefit on this 1,18,000. If you observe very carefully. Super Prasad, excellent point. That is the thing which we have to understand. Brilliant. Sir, I have purchased PPE. The assume I have recorded at 1,18,000, which means this 1,18,000 includes 1 lakh also, 18,000 also. Can I say that you will be getting depreciation on taxable value also and on GST component also? If you observe, person is getting the double benefit. Sir, first of all, he is adjusting that balance against output tax liability, and the second benefit, he is again claiming the depreciation also na. So they have understood this and they are saying, Are Baba, if you are getting credit on output tax liability, please don't add to the value at which you will record the PPE. If you get credit of that tax, please don't add to the cost of PPE, which means here I will not record at 1,18,000. Here I will record at 1 lakh rupees only. Sir, but credit is 1,18,000. So what they will be saying is, Are Baba, here write input GST account debtor, and here I will be writing 18,000 rupees. This input I will be using to set off my output GST. If you observe, here I will be getting only one benefit. I will be only getting the depreciation ka benefit on this, on this taxable value. I will not be getting the output tax liability. I will be getting the output tax liability ka benefit. Therefore, depreciation should not be getting on this amount. Sir, we want another example. Are Baba, if you remember, in your GST ka portion, if you remember, there is a concept called as blocked credits. I hope you guys have definitely remembered this word called blocked credits. And if you purchase any motor car, they will not give you ITC on this. They will not give you ITC on this. Sir, for example, assume the car ka price is 10 lakh rupees. And assume 28% GST is charged, which means 2,80,000 should be the GST amount which I have to pay. If I add, the total cost is nothing but 12,80,000 rupees. Sir, can I use this input GST against my output? The right answer is no, Baba, no, you cannot use this GST. That's why it is called as blocked credit. You will not get the benefit of output tax, so you can add it in the cost of the asset. So now your cost will become 12,80,000 rupees. Are Baba, to conclude, you will get only one benefit. If you get input tax benefit against output tax liability, which means if you reduce your output tax liability, please do that. Please don't come to me. But if you don't do that, if ITC is not availed, please add to the cost of PPE. Please add to the cost of PPE. And there comes the first point. Sir, if ITC is availed, that will not form part of cost. If ITC is not availed, then that should be added to the cost. I hope you guys have exactly understood what I have tried to say. Sometimes in the question they will give you import duties also. Sir, if I have purchased the machinery from outside India, then obviously I have to pay import duties. I have to pay customs and all. So these import duties, generally you will not get refunds. Generally you cannot adjust against your output tax liability unless you are exporting also. So that much extreme situations they will not give in your examination. So if they have given any import duty, please don't assume it will be refunded to you. So you will not get that benefit. So please include this in your cost of PPE. But GST, if they have said, if you have taken credit, don't add. If you don't take credit, please add the things. So there comes the first point. Sir, first of all, initial recognition of PPE will be done at cost. Sir, this I can have different ways. I can acquire the asset in different manners. The first item which you have to include is purchase price. And if it is including import duties, then you can get that. Sir, non-refundable taxes, or you can write here taxes for which credit is not availed. If credit is availed, which means your tax is refunded, this is a kind of refundable tax. Refund means they will not give you physical refund, but obviously if you reduce your output tax liability, that is also a kind of refund only na. Assume you have to pay 1 lakh rupees, but you have already paid 10,000 rupees as input. So now what they are saying, Are Baba, okay, reduce that 10,000 and pay only 90,000, which means it is also a kind of refund only na. If that is a non-refundable item, please include then only. Import duties will be generally refundable. Sorry, will generally be not refundable. So import duties you can include in the question. And the next part, if the question have given you trade discounts. Sir, what is the meaning of trade discounts? Guys, trade discount is very simple. If you generally purchase in bulk, you will be getting one discount, and that discount will be exactly called as trade discount. And one point you have to remember is trade discount will be specifically given in the invoice only. So that is the reason if there is any trade discount which is given for the purchase of any asset, that trade discount, or sometimes they will give like rebate also. If any rebate is specifically mentioned in the question, that also should be deducted from the purchase price. The reason, on that amount you will not pay the GST, and that amount you will not pay to the vendor, and that amount will be specifically given in the invoice also. So which means that trade discount or rebate will be deducted from the cost of the PPE. So let us stop till here, guys. I hope you guys have exactly understood what I am trying to say. Initial recognition of PPE. In case of acquired asset, you have to take the purchase price. If it includes import duties, please take that import duty. If it also includes non-refundable taxes, only those will be taken. Sir, what if it has refundable taxes? Then please don't take. For those items, you will not get taxes. You will not get credit. Only those will be taken. Others should not be taken. Minus any trade discount or rebate should be excluded. Sir, only what will be excluded, sir? Trade discounts will be excluded. Rebates will be excluded. Guys, have you understood till here or not? Please respond a yes if you have understood. I want to stop the class till now. The next part is also very important. It will be about cash discounts and what are the other items which will be included in the cost of PPE, and all will be discussed in the next class, which will be happened by today evening itself at 8:30 p.m. If there are any changes, I will update you. But till now, I just want to confirm, is everything clear or not to you? Brilliant, Prasad. Brilliant. So this notes, let us write at the evening class. But whatever we have discussed till now, that is also very important. Because if you observe, we have completed the definition of PPE. We have also completed the recognition criteria, and we have also completed how to do the accounting for spare parts and accessories and standby equipments, and also assets acquired for environmental or safety reasons as well. We have completed all these points. So with this, let us stop today's class and we will continue the same at evening. So those who have watched this, so please revise what we have discussed. These are very little few points, but these should be registered in your mind. So while solving questions, you will exactly understood, sir, why you are saying these many times to revise. So with that notion, let us quickly stop today's class and we'll continue in the evening. So that's it for today. Thank you so much. So hi guys, good evening. Actually listen Jyoti, so what I am planning is I will be anyways conducting revision session for all the important chapters also, that is for sure. So whatever the important chapters which are there, I will be anyways releasing a marathon kind of series. Actually I was thinking whether I should come up with super 50 questions this time, or whether should I solve, what should I say, whether should I solve concepts first and then questions next for all the topics, or whether should I come up with super 50 questions is right now a question for me. So I will analyze and I will come up with the best thing which is useful for you in October first week. So before October first week, we will be anyways completing 95% of our syllabus. If there are any minute chapters which are there, those are not at all important that much from exam point of view, but still if you guys have time to watch them, you can easily watch those videos. But in YouTube, I will be providing revisionary for all the important chapters also. Along with that, if there are any chapters which are unable to complete because of time, all those are irrelevant chapters only from exam perspective. So those also will be anyways uploaded in YouTube. So you no need to worry at all. I will explain which are relevant, which are irrelevant. So according to that, you can plan. I hope this point is clear. So I will be uploading all the important concepts also. So actually I was thinking whether to come with super 50 questions this time or whether to come up with every chapter. That I will take care. You guys no need to worry. First let us complete the regular batch classes. Then I will be there with you till the examination. You no need to worry at all. Okay, fine. So with that, in last class we have basically started with Ind AS 16 and we have considered and we have completed considerable part as well. We are going little bit faster only, but I hope this speed is fine with you because I am not missing any point. At the same time, we have to complete the syllabus on time as well. So I hope this speed is fine to you. So then let us immediately revise what we have discussed in the last class and then we'll continue with the things. So next, if you observe, in AS 16, property, plant and equipment we are discussing. Already we have completed the objective part. Sir, objective of this standard is very simple. When to recognize, at which value you have to recognize, what should be the presentation and what are the disclosure requirements of this word called PPE. Just a minute. Fine. Next we have understood, sir, what is the meaning of scope of PPE, and we have understood that in AS 16 will be applicable to all PPE except if the PPE is held for sale. If that PPE is held for sale. Sir, why? Because we are having a separate standard for Ind AS 105. So that is covered there. Second part we have understood, sir, if there is any biological asset which is other than a bearer plant. For this also Ind AS 16 is not applicable, but if you are a bearer plant, for you Ind AS 16 is applicable, and further discussion also we have completed. Hope you remember all the points. And mineral rights and mineral reserves are also covered under different set of standards, so that also will not come in the scope of Ind AS 16. And the last point we have also understood exploration and evaluation assets, and it is also being covered in another set of standard. So these four items are not covered in Ind AS 16. Next we have understood, sir, what exactly is the meaning of biological asset. Biological asset is nothing but assets which are biologically born from the earth. And we have understood living plants and animals both will be treated as biological assets, and we have understood for all the animals we are having a separate standard which is Ind AS 41. If you consider these living plants, we are basically having one set of classification as bearer plant and another set of classification is non-bearer plant. If you are a bearer plant, you are into the scope of Ind AS 16. If you are a non-bearer plant, Arre Baba, get out of Ind AS 16 because you are having another standard which is Ind AS 41. Next, we have also understood the definition of bearer plant. Bearer plant is nothing but a living plant which is used in the production of agricultural produce, and it should be obviously expected to produce for more than one period, and it should not be expected to be sold except for scrap. Plant itself you are not selling except from scrap, except for scrap cases. Some rare cases you may sell that entire plant as a scrap, but generally you will not but generally you will not sell the plant. And we have understood the examples as well. Mango tree, apple orchards, orange trees, etc. will be best examples of property plant, will be best examples of bearer plant. Then we have understood the definition of PPE. This is the most important part, guys. And we have understood, sir, PPE is nothing but all tangible items, and this should be used in the production of goods, rendering of services, and given as rent to others, except land and building. Because land and building, if your intention is to give it as rent to others, you are covered in Ind AS 41, which is a separate standard for investment property. The last point, if you observe, sir, it should be held for admin purposes. Sir, if you are using the tangible any item to these purposes, then you will be called as a PPE. I hope this point also we have understood. So, tangible asset used in the production of goods or rendering of services or held for rental to others, but except land and building. Last, or you can use the same for administrative purposes also. And the thing which you have to remember is it should be expected to be used for more than one period. And then we have understood, sir, what is the meaning of recognition criteria? Guys, always remember, we will not record all the PPEs. PPE will be recorded only when the recognition criteria is met. Then you may ask, sir, what is the meaning of recognition criteria? Very simple, guys. They will be specifying only two conditions. First condition is PPE should be able to give you future economic benefits. Future economic benefits should be flow to the entity. If PPE is capable of generating future economic benefits to the entity, then only you have to recognize the PPE. And second part is nothing but, sir, second condition is nothing but cost can be measured reliably. If these two conditions are satisfied, then only I will be recording PPE. Otherwise, I will not be recording PPE. Next, we have understood the treatment of spare parts also, and accessories and standby equipments also. I have given you the example of spare camera, batteries, remote and generators. I think you guys have exactly understood this. If PPE definition is satisfied, if recognition criteria is also satisfied, you have to treat them as PPE. However, if definition is not satisfied, then you have to treat them as inventory. I hope this point is clear. Next, I have also said that, sir, if you are having any individually insignificant items such as screws, tools, molds, etc., those may be aggregated for recognition. Those may be aggregated for recognition. And the next part, if you observe, sir, if I am having any asset and if I have acquired that for environmental or safety reasons. Guys, I have given the example of chimney. This directly will not increase the future economic benefits, but obviously this will indirectly give you the benefit. And these assets are exactly called as enabler assets, and Ind AS 16 also prescribes the accounting treatment for these enabler asset also. This also should be recorded as PPE because that also will indirectly help the PPE, that will indirectly derive the benefit from another asset, and therefore this also should be treated, this also should be recorded as PPE. And I have also explained you the logic as well. And now in the last class, we have also started with this part, which is nothing but initial recognition of PPE. Sir, at what value you have to record the PPE? And I have also explained that, sir, depending on the mode you have acquired, your recording will be different. First of all, sir, the first mode I have already explained. In case you purchase the asset, then how you have to record, that we will learn first. Once this is done, in some instances you can either construct the asset, or it can be self-generated also. So, sir, how to record if the asset is self-generated or constructed by my own, then what cost do I have to record, and all that will be explained a little bit later. And if you observe, there is another way also which you can acquire the asset, and that is nothing but exchange. Sir, if I exchange one plant and machinery with another plant and machinery, how I have to record, at what value I have to record, and all that will be explained after completion of this self-generated or constructed ka portion. So if you observe, or we have already started with at which value you have to record the assets which we have purchased. Obviously, I said that you have to record at purchase price. And while recording at purchase price, Baba, always remember, if import duties have given, please add these import duties, and if there is any non-refundable taxes which are there, those will form part of the cost of the PPE. If the taxes are refundable, or if there are taxes for which input tax credit is availed by the entity, Are Baba, obviously you will be taking the benefit of input tax credit na. So don't take dual benefit. If you want only take ITC benefit, then that will not be forming part of the cost. If that item is a non-refundable, which means credit is not available, then you are not taking benefit there. So now you can include that in the cost of the PPE, and then you will be getting a depreciation ka amount on this, which means you will be getting benefit once. You have to get the benefit once. You will not be getting the benefit twice. So this is the thing which you guys have to understand. And I also have said that, sir, if there is any trade discount or rebate which is given, that should be deducted. Sir, what should be deducted, sir? Trade discount or rebate should be deducted, because first reason, this is directly given in the invoice. Second reason, after deducting the trade discount only, whatever the amount which you have got, you will be paying GST on that amount only. If any trade discount is specified in the invoice, after deducting that discount only, you will be paying the GST. So this standard is also saying, if there is any trade discount which is given in the question, Are Baba, please deduct that trade discount from the cost of the PPE. And this is the first point which we have to focus. This trade discount will be generally given if goods are purchased in lots. Simple example I can give. For example, assume the cost per unit is 10 rupees if I purchase individually. But what I have did is, I have purchased some 100 units. Obviously, the price should be how much? 100 units into 10, which should be 1000. But they have gone ahead and they have given me discount of 1 rupee for each unit. Then obviously my price would be 900. And this 100 rupees will be called as trade discount, and you have to record the PPE after deducting the trade discount. That is nothing but at 900 you have to record your PPE. I hope this point is pretty clear to you. If this point is clear, now let us move to the another point, which is nothing but cash discount. I hope you have heard this word called cash discount. Cash discount is nothing but discount given by the supplier if prompt payment is made. If prompt payment is made, whatever the discount which is given by the supplier, this will be called as a cash discount. For example, assume the supplier is saying, Are Baba, if payment made within 15 days, if payment is made within 15 days, 2% cash discount will be provided. Supplier is saying if payment is made within 15 days, then 2% cash discount will be provided. For example, assume I have purchased one item which is 1 lakh rupees and I have got a 5,000 rupees trade discount. I have got a 5,000 rupees trade discount. Then obviously the amount which I should be paying to the supplier is how much, Baba? 95,000 is the amount which you have to pay to the supplier. But now the supplier is also saying, Are Baba, if you have made payment for me within next 15 days, then I will be giving you additional discount. Just a moment, guys. Then I will be giving you additional discount is what the supplier is saying. So here what I have did is I have made payment in the next 10 days only. I have made the payment in 10 days only. In that case, I will not be paying this entire 95,000. I will not be paying this entire 95,000, sir. How much amount will be paying? Are Baba, I will be paying 95,000 rupees into 98% only I will be paying, which is nothing but 93,100 rupees. Sir, if you observe, the difference of 1900 rupees is nothing but a cash discount which they have been given. And now let us try to understand the treatment for this cash discount. Guys, first what you have to write is you have to record the PPE account debtor. 2. Vendor account is what you have to record. Guys, always remember we will be excluding the trade discount, but cash discounts will not be excluded. Sir, the amount which is after excluding the trade discount is nothing but 95,000 rupees, which means here I will be writing 95,000 rupees. While making payment to the vendor, I will be debiting the vendor account or supplier account. Sir, how much, sir? 95,000 I will be making. But sir, I will not be making the full payment now. Sir, how much payment you will be making, sir? 93,100 I will be making. Sir, whatever the balancing figure, 1900 is nothing but this is called as cash discount, and this will be transferred to P&L account. The point which you have to remember is this cash discount will not be adjusted from the cost of PPE. The reason is also pretty simple. Guys, if you observe the invoice also, sir, what is the cost of PPE? Are Baba, cost of PPE is 95,000 rupees. If you observe, sir, why the cash discount is given? Are Baba, that cash discount is given in order to make the payment prompt. In order to make the payment early, they have given the cash discount, which means if you observe, the discount which they have given is not related to the asset, that is moreover related to the early payment. So it should not be adjusted in the cost of the asset, rather it will be recorded as a separate income in your profit and loss account. I hope this point you guys have understood. Sir, if the trade discount which is given in the question, Are Baba, that will be anyways given in the invoice only. So net amount 95,000 only you will be recording the PPE. But sir, if further they have said any kind of cash discount which is given in the question, always remember that cash discount will be separately treated as an income that should not be adjusted with the cost of the PPE. I hope you guys have understood this point. Guys, please type S if you have understood this point. Point is pretty simple. You have to take the purchase price including import duties, and if there is any non-refundable taxes, that also you will be taking. But Baba, if there is any trade discount which is given, that will be excluded, but don't exclude cash discounts. Cash discounts will not be deducted, will not be adjusted. Rather, it will be treated as a separate income which will be recorded in a P&L account. Thank you so much, Jyoti, for confirming. So once this is understood, now let us move to the next part. And that point is nothing but, here I have written, sir, the first preference which you have to give is, the first point which you have to write is purchase price including import duties, along with that non-refundable taxes or taxes for which credit is not availed, minus you have to deduct trade discounts and rebates. But Baba, cash discounts will not be deducted. Cash discounts will not be deducted, and this is the first point which you guys have to be remembered. The first major component of the asset which you have purchased is nothing but a purchase price. I hope you guys have exactly understood what I am trying to say. Prasad, have you understood or not? I understood or not? I haven't seen any response from you. Please type yes if you have understood. Or if you have any doubt, please let me know. Please type in the chat box. I will be responding that. Brilliant, Prasad. Fine. Now, Are Baba, I have purchased the PPE. That is fine. Sir, now next, what should be the case? Are Baba, first you have to understand one thing. Assume I am taking the example of an air conditioner. And the cost of the air conditioner which they have given is, assume 50,000 rupees. I have deducted the trade discounts and cash discount adjustment I have not made. So assume it is 50,000 rupees. I have purchased the air conditioner. I want to use that air conditioner to be fitted in my office. That air conditioner should be installed in my office. So will my purpose serve if I only purchase the asset, or I have to bring that asset to my office and I have to install that AC in my office? Correct or not? So just purchasing the asset itself will not make the asset available to use. You have to incur few other costs also to make the asset ready to use. Which means only purchase price recording is not sufficient, because purchase price itself will not make the asset available to ready to use. Which means, there are obviously a kind of, for example, assume there is one person who have carried the AC from the shop to your office, and that is nothing but freight. Correct ya nahi? Freight. Assume you have purchased imported AC and you are staying in Hyderabad. You have purchased the AC from Germany. that AC from Germany, first it have reached to Mumbai, and from Mumbai it is reaching to Hyderabad, which is very expensive. If something happened to that AC, assume the cost of AC is 50 lakh rupees. Just example, it is very big AC, central AC, very bigger one. 50 lakh rupees is the cost of AC. So freight will be incurred, and what I have did is I have taken some transit insurance. I have taken some transit insurance, and whatever the insurance which I have taken, that will be also recorded as an expense, that will also be capitalized. I will be explaining the reason for that capitalization. Next, what have happened is I have analyzed, I have engaged one consultant, one professional who is excellent, who have excellent knowledge in air conditioners. So what he did is he compared some 10 ACs, and using his knowledge and experience, he have picked one best AC for me. So obviously I will be paying some cost to the consultant also, some fees to the consultant also I will be paying. And another thing, if you observe, the AC, once it reaches to Hyderabad, to my office, I have to install that AC. I don't know how to install and all. So obviously they have sent some people, and they have charged me some installation fees. They have charged me some installation fees also. Guys, if you observe, sir, other than purchase price also, it is very necessary to incur few costs, because of which our asset will be ready to use by the management, and all such costs should also be capitalized, is the point which you have to remember. Guys, please understand this term called directly attributable costs. Directly attributable costs, which are necessary to bring the asset to the intended location and purpose of the use by the management. This term you have to understand. If there are any directly attributable costs which are necessary to bring the asset to the intended location and purpose of use by the management, guys, all these costs also should be capitalized. So the meaning of capitalization is nothing but you have to include all these costs also in the cost of PPE. I hope this point is pretty clear to you. I will be explaining more examples of directly attributable expenses so that things will be aram se settled in your mind. Second part, Baba, directly attributable cost to bring the asset to its intended condition and location. It should be brought to the intended condition, which means the management have decided to use the asset for certain purpose. In order to bring that asset to that purpose, whatever the costs which are incurred, all those costs will be treated as directly attributable costs, and even those costs also should be capitalized. And location also. Sir, what is the meaning of location? Simple, Baba. Whatever the cost which I have been incurred to bring the asset to my office, to my location, and to my condition, and to the condition and location which is intended for use by the management, all those costs should be capitalized, is what you guys have to remember. Guys, I will come to this part a little bit later. First, let us get some complete clarity with respect to the second point. Sir, directly attributable cost to bring the asset to its intended condition and location. And next, I have given few examples of directly attributable cost. If you check these examples, you will be exactly understanding what I am trying to say. First one, Baba, initial delivery costs and handling costs. So whatever the product का storage cost, whatever product का packaging का cost, whatever delivery charges which they have been incurred, अरे बाबा, without these costs you cannot bring the asset to the intended location and condition which should be used by the management. Which means because of this cost only, I am bringing the asset to the intended location and condition which should be used by the management. Therefore, this cost will be capitalized. And second part is site preparation cost. So what is the meaning of this site preparation cost? Arey baba, simple. I want to construct one big tower. I want to construct one big cell phone tower. This cell phone tower cannot be constructed at a normal place. So first of all, there is some land which should be settled, which should be prepared and all. So I will be sending one road roller. It is basically clearing the entire road. It have made the road a flat, and then I have installed one cell phone tower. Or I just want to construct a random building. I just want to construct a building and I want to conduct coaching classes there. So whatever the building which I want to construct, that cannot be constructed in a land which is like this. If the land is there, then it is not possible for me to construct the land. So first I have to do the leveling of the land. I will be sending one road roller to that land, and that road roller will be leveling such land. And without this site preparation ka cost, I cannot bring the asset to the condition and location used by the location intended to be used by the management. So this cost also should be added to the cost of asset. And if you observe installation costs, assume I have purchased one air conditioner. Arey baba, I don't know how to install na. So obviously the company, the air conditioner ka company will be sending a technical person, and that person obviously will be having the knowledge to install the plant and machinery, or any air conditioner, any example you can take, baba. Or assume if I have purchased a huge plant and machinery, installation I don't know at all. So the vendor have sent some technical person, and obviously he will be charging me some fees, and that installation ka cost also, if I don't pay those installation costs, Arey baba, I cannot bring the asset to the intended location and condition which the management wants to use. Therefore, even this condition also should be capitalized. Assume I have purchased a huge machinery. I have imported the machinery from another country. Since the machinery is very huge, it have come in different parts. Knocked out form it have came. Now I have to assemble that. Arey baba, that is very big machinery and I am not having any technical knowledge to do that. So what I have did is, the company have sent some technical person, and that person have assembled the machine. And now I will be using that machine. Which means if this assembly is not there, I cannot bring the asset to the intended location and condition which the management wants to use. Therefore, obviously this also should be capitalized. Next, baba, sir, employee benefit costs arising from constructing or acquiring a PPA. Simple. Assume I have purchased one plant and machinery, and what I did is, I have employed one person, and that one person ka responsibility itself, that one person ka full-time responsibility is to supervise the asset. So till the PPE is constructed or till the PPE is acquired, after some time, that person is fully devoted to that plant and machinery only. Example, supervision. If this is not done, our asset cannot be brought into the intended location and condition used by the management. And this is the reason even this employee benefit cost also should be added to the cost of the property, plant and equipment. And next part, professional fees. Guys, this I have already explained. Assume I have taken the help of a consultant who have advised me which asset to purchase and what are the factors which we have to consider in purchasing the asset and all. He have made some good analysis, and later he will be charging some fees. And obviously, if I do not use it the help, if I did not use it the help of that professional, I cannot purchase the asset on my own. Which means without this cost, I cannot bring the asset to the intended condition and location used by the management. Therefore, this also should be capitalized. And last one, trial run expenses. Are Baba, assume you have purchased a huge machinery. If if you did not perform the trial run, if you have directly started production, what if something harm which have happened? If the machinery is not installed properly, assume one employee is just dropping some raw material into the machinery, and now what have happened, that machinery have completely taken the hand of the person, hand of the labor, while dropping some huge force have come and hit the employee, and assume the employee is taken over by the machinery. This kind of accidents can happen. Therefore, it is very essential to do trial run expenses. And this trial run ka expenses, of course, there may be some units which are produced from that trial run and you will be selling that as a scrap. For example, assume the trial run ka cost which I have incurred is 50,000 rupees, and assume some scrap is generated. I have sold the scrap and I got some 10,000 rupees. Sir, what is my net trial run ka expenses? It is nothing but 40,000 rupees. Because without testing or without trial run, you cannot use the asset. That is the main condition. So whatever the trial run ka expenses which you have used, that also will be added to the cost of the asset. I hope this point is very much clear. So one point I have to make you guys to remember is, Are Baba, always remember this part. Whatever the costs which you have incurred to bring the asset to the intended location and condition which the management is expected to use. Without that expense, you cannot bring the asset to intended location and condition which the management is expecting to use. Which means, sir, if my asset is already in an intended location and condition which the management is expecting to use, after that if any expenses is incurred, those items will not be capitalized. Those items will not be capitalized. For example, assume I have purchased one machinery on 1/4/2024. This I have purchased. And 2 days later, assume on 2nd April 2024, that machine have reached the office premises. On 3rd April 2024, they have sent one person to install the plant. He have installed, and on 4th April 2024, on 4th April 2024, the asset is ready to use. The asset is in the intended location or condition which the management is expected to use on 4th April 2024. Now what have happened is 10 days later, for example 14th of April 2024, what they have did is they have conducted some staff training expenses, and they have given training to all the staff as to how to use the machinery. On this date, what have happened is asset is ready to be used. whatever the purpose or however the management have expected to use the asset, now the machine is in that condition and now the machine is in that location on this date, which is 4th of April 2024. Sir, after this date, after the date when the asset is ready to be used in the intended condition and the intended location of the management, now if you incur any cost after this, those will not be included in the cost of the asset, and this is the most important point which you have to remember. Sir, all the assets till the asset is into that condition and that location which are intended by the management to bring the asset into the intended condition and location which the management is expected to use, all those costs will be included. But once the asset is ready to use, subsequently if you incur any cost, those costs will not be capitalized, is what you guys have to understand. Sir, can you please give us some examples? I will be giving you some examples, Baba. First one, if you observe. Sir, staff training expenses. Baba, the asset is already ready to use. After that, what I am doing is I am incurring some staff ka training expenses. First of all, you guys have to understand this staff ka training expenses cannot be capitalized. Sir, the reason being, guys, do you have any control over the staff? For example, assume you have given a training of 3 months to one person. After 3 months, after learning so much, that person have changed the job only, which means do you have any control over that person? Therefore, that is not an asset and it should not be capitalized. Another reason is that is incurred after the asset is brought into its intended location. Therefore, this is not at all included in the cost of the PPE. And second reason, if you observe, inauguration expenses. I have opened a new building and I have basically all the interiors, all the exteriors, everything is ready. Everything is ready. And now what I have decided is I have decided to invite Pooja Hegde to my shop opening. To my shop opening, I have invited Pooja Hegde to come. And whatever the inauguration expenses and all, I have conducted some puja, some lightning ceremony like that I have conducted. And obviously, a lot of inauguration expenses have been incurred because I have arranged a huge security also, because Pooja Hegde is a very famous celebrity. So I only have incurred the security costs and all. I have incurred 30 lakh rupees inauguration expenses. Sir, will that 30 lakh rupees inauguration expenses also will be included in the cost of PPE? Arey Baba, no. Your asset is already ready to be used. After that, if you incur any cost, no, those will not be capitalized. Sir, then what will be doing with this? They will be charged to P&L account as an expense, because whatever the expenses which you have incurred, that asset is already brought into its intended location and condition which the management is expected to use. Therefore, this will not be capitalized. And the next part, if you observe, advertisement expenses. Arey Baba, if you observe, why you will be incurring advertisement expenses? The reason is pretty simple: to increase your sales. It has no connection with the property, plant and equipment. And this should not be included in the cost of the PPE, and therefore this advertisement expenses also will be charged to the P&L account. And the next part, staff relocation, organization relocation also. Sir, what is the meaning of staff relocation or organization relocation? It is very simple, Baba. Assume there is one person basically who is very much experienced in using one machinery. That person is basically located in Bangalore. But now the machinery is installed at Hyderabad. You need that person to come here and that person have to work here. So whatever the cost which you are incurring to shift that person from Bangalore to Hyderabad, that is also already the asset is ready to use now. So whatever the cost which you have incurred after the asset is brought to its location and condition, those will not be included. Because again, same reason, that staff ka control itself is not there with you. So you cannot include that in the cost of PPE. And next part, if you observe, organization relocation expenses. For example, if because of any reason one organization is relocating from one place to another place, your asset is already ready, but now you are just shifting your organization location. But in this case also, whatever the expenses which you have incurred, your asset is already ready to use. For these costs will not be capitalized. And the last one is administration and general overhead ka cost allocation. Guys, if you remember costing, you may heard this term called admin and general overhead cost allocation. Are Baba, thus the cost allocation is only to understand how much cost is attributable to that. And simply speaking, these are nothing but indirect costs. These are nothing but indirect costs. But here what I have said, only directly attributable costs will be included in the cost of the PPE. Understood or not, even whatever the indirect allocation of overheads and all if you have incurred, those also will be making, those also will not be forming part of the condition. I hope you guys have exactly understood what I am trying to speak. The reason is pretty simple. All these items have incurred after the asset is brought into its intended location and condition to be used by the management, and hence all these expenses will not be included in the cost of the PPE. Yes, Guru Prasad, correct. Whatever you have said is correct. Inauguration expenses, even they have incurred before ready to use condition, still it will not be capitalized. The reason is pretty simple. If you don't incur that inauguration expenses also, will it affect any working of the plant and machinery? Answer is no. So that is the reason that will definitely not form part of the cost of PPE. Those expenses have no connection with your property, plant and equipment. That is the exact reason why you should not include in the cost of the PPE, whether you have incurred before the asset is ready to use or whether you have incurred after the asset is ready to use. All these items will not have direct connection with the property, plant and equipment, and that is the exact reason why all these costs should not be included in the cost of PPE. I hope these points have completely clear to you. Guys, all these points are very, very important. These points will be straight away tested in the exam. So you guys have to be very clear about whether one cost will be included in the cost of PPE or whether one item is not included in the cost of PPE. If you guys have understood, please give me a heads up. If you are done, you have to write this part and then let us move to the next part. I hope this point is pretty clear to you. So first I want you guys to give a response and then you guys can start noting, and then once you are done, let us continue the balance part. Super Jyoti, super Prasad. Now what you have to do is, please copy this part. I will be waiting for 3 to 5 minutes. Please copy this. If you have any doubt, please drop a ping. Please ping, I will respond. Guys, have you completed? Please let me know once you have done. Next, let us discuss most important point. Fine, Prasad. Done. Super. Excellent. Now, if you observe, we have completed this first part. I hope this first point is clear to you. And this second part also we have understood. What are the directly attributable costs which are there to bring the asset to its intended condition and location? This point is also completed, and now let us move to the most important part, which is nothing but initial estimate or present value of dismantling, removal and site restoration costs at the time of purchase. At the time of purchase. So what exactly is the meaning of this initial estimate or present value of dismantling or removal and site restoration? Guys, please give me one example so that we can easily remember the parts. Don't worry guys, I will be coming up with very good example. Okay. So what I have did is, after completion of my CA, I have decided to start my own practice. So what I have did is, I went to one of my friends, wherein he have gifted me one plain building. He have gifted me, sorry, not gifted, he have just leased me. Sorry guys, my bad. What he did is, he just leased one building. He just leased one building for 5 years. He just given me outer structure of the building. Just building ka structure is completed, interiors and all have not taken care by my friend. So what I did, I just leased the building for 5 years. So here what I did is, I have constructed one big room for myself, and I have constructed different cabins for different articles and other employees also. At the time of giving the asset on lease itself, he have, see, all these items have been constructed by me only. What I did is, I have constructed one coffee shop also in the building itself, just to refresh, and I have constructed one conference room also, wherein lot of things will be discussed. So this is my cabin, and this is for articles. So what my friend have said me is, Are Baba, I have given you the building on lease, and you have to pay me lease amount for the next 5 years. Okay, sir, we have understood this example. And at the beginning itself, my friend has said that, Are Baba, once your period of lease ends, you have to return the building into its original position. Whatever the constructions which you have made, all those items are not necessary for me. So what you have to do is you have to demolish all these items. You have to decommission all these items, and you have to restore the asset back to its original condition. Once the lease period is completed, whatever the items which you have recorded, whatever the items or assets which you have constructed, I have constructed one very big central AC also across the whole office. So all these items are not needed by his friend. What his friend is saying is, Are Baba, after completion of 5 years, I am having very different plans. I want to completely let out this property to some very commercial area which will give me 5 lakh or 6 lakhs monthly rental. But your lease is only 1 lakh rupees. So I cannot afford you after 5 years. So what that person is saying, Are Baba, once your lease period is done, you have to demolish all these items and you have to restore my asset back to its original condition of exactly how I have given to you. Are you understanding or not, guys, what I am saying? Once this lease period is completed, whatever the asset which is there at the time when you have received, you have to make that asset once again, you have to restore that asset once again to the original condition at the time when you have taken the asset on lease. If you observe, in order to demolish all these items, in order to destroy all these items, definitely I will be incurring some cost. I will be engaging some cranes. I will be engaging some hammers. I will be engaging some, what should I say, some drill machines and all to demolish these items. So what they will be saying is this costs will be called as dismantling costs or decommissioning costs. And this will be also called as decommissioning, restoration, and other liabilities. And this is shortly called as drawl. Sir, what is the meaning of drawl? Drawl is nothing but decommissioning, restoration, and other liabilities. So here what you guys have to understand is, assume after 5 years, the expected cost which will be incurred by me for dismantling, assume it is some 10 lakh rupees. This is the estimated cost which will be incurred by me to dismantle all these items. Are Baba, if you observe, this 10 lakhs is something which I will be incurring after a period of 5 years. Now, currently I am talking about initial recognition, which means I am there at year 0 and this amount of 10 lakh is there at year 5. If you remember financial management where you are doing at CMA interlevel, you guys will exactly understand what I am trying to say. This is nothing but discounting you have to do. Discounting, or this will be called as present value calculation, because this amount is something which I will be incurring after a period of 5 years. So I cannot record in my books 10 lakh rupees. So then what you will be recording? I will be recording present value of this liability which will be incurred after 5 years. Guys, this is what you are hearing for the first time. Sir, present values, discounting, year 0, year 5, all these items we have heard in financial management. But these items we have never heard in our accounting. These items we have never heard in our accounting. Sir, of course we know how to calculate the present value, how to do the compounding, how to do the discounting in financial management, even in SFM also we know how to perform. But sir, this is the first time in accounting we are listening to CFR classes and suddenly you are talking about discounting, compounding, present value. Sir, first of all, are you teaching me CFR syllabus only? Are you suddenly started teaching financial management syllabus? Or are you suddenly teaching SFM ka syllabus? Guys, relax. Welcome to Ind AS. Till now, you never heard present value. You never heard discounting in accounts. But welcome to Ind AS. Welcome to Ind AS. Here you will be integrating whatever we have learned called as financial management, and that integration will be done with accounts in specifically Ind AS. In many areas you will hear this term called present value calculation or discounting calculation in our subject, which is CFR. There are many areas where we will calculate the word present value. Because trust me guys, this is also the liability. This 10 lakh rupees is also the liability which I will be incurring. That is for sure. That is for sure. That is not going to change. So what this Ind AS is saying is, Are Baba, you are saying that you have to definitely incur this 10 lakh rupees. But when you will incur that cost you will be incurring after the end of 5 years. Na? So whatever the present value to demolish or what should I say? Present value to demolish or destroy the asset, take that present value also, and that also should be included in the cost of PPE. Because the moment when you purchase the asset, your liability also arises to restore the asset back into its original position, not immediately, but at some future point of time. Guys, again I am repeating this point, so try to remember. The moment when I have purchased the asset today, I am getting this obligation that I have to restore back the asset to its original condition, but not now, but after 5 years or after 6 years or after 10 years, as the case may be. So now comes the present value calculation in your Ind AS. Sir, what it is exactly trying to say is, Are Baba, please calculate the present value of 10 lakh rupees. And that present value of 10 lakh rupees will be also forming part of your cost of PPE. And here that is the reason why I have exactly written the word called as initial estimate. Sir, initial estimate is also called as present value. You have to write. You have to convert that amount, because that amount you will be incurring in future, say after 3 years, after 5 years, or after 10 years, depending on the estimated period. So whatever the dismantling or removal on site restoration cost which you have incurred, Are Baba, strictly speaking, these obligations have arisen at the time of purchase itself, and therefore this is the reason why I have to even record the present value of the dismantling cost also in the cost of PPE. Guys, are you understanding this point or not? If you guys have understood this point, I will be explaining further. I will just take another 5 minutes to continue the class. If you guys are fine, please tell me. Then we can proceed with next 5 minutes. If you guys have any doubt, please ask me the doubt. If you are fine, please say that yes sir, we have exactly understood what you are trying to say. Brilliant, Jyoti. Thanks for confirming. Super. So now if you observe, decommissioning or restoration liability. The moment you purchase the asset, obligation is also coming to you, that after a period of 5 years or after a period of 7 years or after a period of 10 years, I have the obligation to restore the asset back to its original condition. So that is the reason what they will be saying is cost recognized and measured according to Ind AS 37. Sir, we are currently discussing Ind AS 16. Suddenly from where this Ind AS 37 have came? Arey Baba, Ind AS 37 is related to provisions, contingent liabilities and contingent assets. Are Baba, you are getting an obligation, and that obligation is nothing but a provision. And therefore, in AS 37 will come into picture. You will be incurring a liability, but that will be incurred after 5 years. Nah. But still, that is a provision, and therefore, in AS 37 will come into the picture. And what they are saying is that will be included in the cost of asset if it is incurred at the time of acquisition. Sir, please give us one example, then we will exactly understand what you are trying to say. Simple, Baba. Assume there is A Limited which have purchased PPE for 1 crore rupees, which has a useful life of 5 years. Here comes the important point. It has a contractual obligation to decommission the asset and restore the same, which is estimated at 10 lakh rupees, which will be incurred after 5 years. The current market rate of discount is 10%. Guys, without seeing the answer, I want you guys to calculate the present value of the decommissioning liability, which is 10 lakh rupees, and the interest rate which they have given is 10%. I am waiting for the answer. You guys have to tell me the present value of the 10 lakh rupees, which is going to be incurred after 5 years, and the discount rate is 10%. Discount rate or the interest rate is basically 10%. So I want you guys to calculate the present value and tell me, sir, what is the present value? I am waiting for your answer. Please tell me the present value. Guys, have you understood my question or not? I have asked you to calculate the present value. Have you know how to calculate the present value? Please type yes if you know, otherwise type no. I will explain anyways, but just I want to understand whether you guys have know that point or not. Prasad, where are you? Jyoti, where are you? Have you guys know how to calculate the present value calculation, or do you want me to explain? Simple. Amount is 10 lakh rupees that will be incurred after 5 years. Discount rate is 10%. Last 5 minutes, guys. 5 minutes. I will close the class. Don't worry. Huh? 37 lakh 90,786. Just a moment, guys. Okay. Guys, don't worry. I will explain. I think, Prasad, you have calculated the present value of this 1 crore, which is not correct. Okay. Maybe what Jyoti have calculated is correct. So let me just check that point. Okay, Prasad, you did one mistake. That mistake is nothing but you have calculated the present value of you have calculated the present value of 1 crore, which is not correct. Are Baba, why you are calculating the present value is very simple. Are Baba, along with the cost of PPE 1 crore rupees, you will be incurring decommissioning liability also, which is nothing but after 5 years you will be incurring 10 lakh rupees, which means at year 0 I am paying 1 crore rupees, and along with this, after 5 years are completed, I will be paying an amount of 10 lakhs. Sir, how I will get the present value? Are Baba, open your calculator and type 1 divided by 1.1. Press equal to, you will get the present value for first year, but I want for second year also. Press again equal to, third year factor you will get, again equal to, fourth year ka factor you will get, and again equal to, and then comes the present value ka factor, which is nothing but 0.6209. And this is nothing but your present value ka factor. And if you multiply this amount, it is nothing but 6,20,900 approximately. And now the total cost of the PPE is nothing but 1 crore plus 620,900, which is nothing but 1 crore 6,20,900 rupees. Exactly, Prasad. Fifth year ka present value factor you have to use. I hope this point is pretty clear to you. Initial recognition में you have to add the purchase price. You have to add the purchase price including the import duties, non-refundable taxes, trade discounts and rebates, directly attributable costs also to bring the asset to the intended location and condition used with the management. And not only that, this comes the most important initial estimate or present value of dismantling, removal and site restoration ka cost also should be added to the cost of asset. Guys, we are having further treatment for this. This is a very comprehensive example. So this will take some time to understand, which will be discussed in tomorrow's class. I hope this point is clear till now. Please respond if whatever we have discussed is completely understood to you. Please type yes. If yes, sir, we have understood all the topics which we have discussed in today's class. If you have any doubts, please drop a message. I will be happy to solve all your doubts. Super, super, excellent. Thank you, Jyoti. Super. So if you guys are done, I want to complete the class till now. Tomorrow we will have a class. Brilliant, Prasad. Super, super, super. So tomorrow I am planning to take a class. I will be, so no problem. Don't worry. You can complete your Ganesh ka puja and then only you can join the class. Okay, because my objective is to complete the CFR ka classes as early as possible. So that is the reason which I am wishing to take the class. But don't worry guys, I may not be taking the 2 classes. We will be taking only 1 class wherein you will have a 2 hours or 2.5 hours ka discussion. Okay, I will update the timings shortly in the WhatsApp group. Okay, I will update the timings, Jyoti, don't need to worry at all. So this point, till this point, what we have discussed, those are very, 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 very crucial for further understanding. Guys, if you understood, I am developing a platform which will make you understand the later complicated parts. Your basics should be strong in order to solve the questions which are being asked by the institute, and we are exactly building our foundational basics. Please be a little bit patient. From tomorrow onwards, we will be starting problems. And another important thing also, which I want to share right now itself, that workbook, CFR ka workbook, I am currently working. I am including more and more questions. I have covered all the recent examination questions along with solutions, and all the study material ka questions also I have compiled. And not only that, I have also incorporating the recent questions which are released by the institute in the form of workbook. Currently, I am working on that and it will be ready in the next 2 to 3 days. Once it was ready, that will be sent for printing, and by September 1st or 2nd, your books will be dispatched. Your hard copies of CFR workbooks will be dispatched. So till then, whatever the problems which I will be discussing, I will be sharing a soft copy with you, and that will be uploaded in the Class Plus app free resources ka section. You no need to worry at all. Only for first chapter I am guessing, or maybe for the second chapter. Only two chapters I will discuss, and before these two chapters are completed, you will be getting the physical hard copy of CFR workbook that you will be getting. No need to worry at all. I hope this point is also pretty clear, because I am incorporating more and more questions so that it should be a one-stop solution for all your needs. You should not refer to any workbook. I mean, you should not refer to any other material. Again, you should not refer to institute ka study material. Again, you should not refer to any kind of previous examinations and all. Therefore, it is taking a little time. So I want you guys to be a little bit patient. At the same time, please focus on the foundational basics which we have been discussing. If you are fine, I want to stop the class now. And I will be announcing what are the timings for the today's class and all in the WhatsApp group which we have created. So good night, guys. Please revise what we have discussed till now, because these are most important, and the next class is going to be even more interesting. And trust me, you will understand everything. You just have to revise whatever I am discussing in the class. So with that notion, I want to end today's class. So that's it, guys. Thank you so much. We'll meet tomorrow. Bye bye. Good night. Fine. So yes, guys, in yesterday's class, we'll just quickly revise only the few important points what we have discussed in the previous classes, and then we'll get started with the current class. If you remember, we have covered this scope of Ind AS 16, and that is nothing but all PPE will be applicable except Ind AS 105 when the asset is held for sale. And second part is, sir, if you are a biological asset but other than a bearer plant, for you also Ind AS 16 is not applicable, but if you are a bearer plant, Ind AS 16 is applicable. And then we have studied, sir, mineral rights and mineral reserves. For you also, they have given one separate standard. So Ind AS 16 is not at all covering that. And last, if you observe, exploration and evaluation assets are also being covered here. Sorry, these are also out of the scope of Ind AS 16, because for them also we are having a separate set of standard. And then we have understood, sir, what is the meaning of biological assets? Biological assets are nothing but those assets which are biologically born out of the earth. And the first thing we have understood, the living plants and animals will be called as a biological assets. All animals are covered by Ind AS 41. But when it comes to living plants, we are having a classification of bearer plant and non-bearer plant. For bearer plant, we are having Ind AS 16. For other than bearer plant, we are having Ind AS 41. Next, we have also clear-cutly understood the definition of a bearer plant, so I am not going into that. We have also started with the definition of PPE. PPE is nothing but a tangible item. Only tangibles are covered. If that should be used either in the production of goods or in the rendering of services, or you have held the property for giving it as rental to others, but except land and building. Sir, why land and building are excluded? Simple reason, guys. For these land and building, we are having a separate standard, but that standard is not there in our syllabus. So it is just a normal discussion. But another purpose is also covered, and that is nothing but if you are using a tangible item for the purpose of administrative purposes and all, even that also would be included in the definition of PPE. That is also a PPE. And then we have understood, sir, all these cases, whatever the above examples or above purposes which we have said, our expectation to use should be for more than one period, then only we will be treating that item as a PPE. And then we have understood the recognition ka criteria. Sir, what is the meaning of recognition criteria, sir? Arey Baba, remember one thing, PPE, all kinds of PPE would not be capitalized. PPE will be capitalized only if the recognition criteria is met. Sir, and what exactly is the recognition criteria about, Arey Baba? That is very simple. PPE will be recognized only when it is probable that future economic benefits will flow to the entity. Definitely future economic benefits have to flow to you, then only you will be recording the PPE. And the next part, cost should be measured reliably. And then we have also understood the treatment of spare parts and accessories and standby equipment also. So what they are exactly saying, Are Baba, they will be saying if PPE definition is satisfied, you will be recognizing that as PPE. If PPE definition is not satisfied, then what we'll be doing is then that will be treated as inventory over there. And we also understood, sir, if there is any asset which is acquired for environmental or safety reasons, for example, chimneys, etc., installed in any kind of factory premises and all, Baba, that will not directly give you benefits, but it will help the other PPE to derive the benefits. So these kind of assets are called as enabler assets, and our standard also suggests that you have to recognize even these chimneys also, even though they do not provide direct benefits, but still they will be indirectly providing the future economic benefits, and hence that also should be recognized as PPE is what the standard is suggesting. And this part also we have completed. It is nothing but, sir, initial recognition of property, plant and equipment. Initial recognition of property, plant and equipment. And if you observe, there are different kinds of treatment depending upon the manner which you have acquired the asset. For example, if you have purchased the asset, obviously, sir, what are the items which I have to include in my cost? This we have already explained, guys. So here I just want to summarize all those points. Sir, it is very simple. If I have purchased any asset, I have to directly write the purchase price of that asset, including any import duties. Unless specified in the question, these import duties are not refundable. So I will be assuming these as a non-refundable duties, and I will be adding these items as well to the purchase price. And you have to think one thing, guys, sir, any non-refundable taxes are there, or taxes are there but no credit is available, those items should be added. Those items should be added. And the next part what we have understood is, sir, all the directly attributable costs which I have incurred to bring the asset to the intended location and condition necessary for the management expectation to use. I have to add all the directly attributable costs which have made to bring the asset to its intended condition and location to be used by the management. And not only this, guys, we also have to add something called as present value of decommissioning, restoration, and other similar liability. And exactly we have stopped our discussion at here in the last class. I hope you have remembered this decommissioning, restoration and other liabilities. I will be quickly remembering you the example which I have discussed in the last class. Assume I have taken one building from my friend, and what I did is I have taken it as lease for the next 5 years, and through that 5 years, basically what I have did is I have constructed I have made that building to be used for my practice. So what I did is I have constructed cabins, I have constructed central AC, and I have constructed a cafeteria, and I have constructed cabins for all the articles, and I have constructed the cabins for other managers as well. All these things I have did. So suddenly what have happened is, after the 5 years have gone, I have entered into the contract at the starting itself that I will be restoring the asset back to its original condition, and that is completely my responsibility, is what I have promised. That is there in the agreement only, which means the moment I have purchased the asset, liability is also arised. The obligation also to restore the back to its original condition also arises in my books of accounts. So what the standard is suggesting is, Are Baba, at the time of initial recognition of the PPE itself, please also provide for the future cost which you are incurring, and that exactly is nothing but whatever the decommissioning and restoration and other liabilities cost is there, that also you have to recognize while doing initial recognition only. That also you have to recognize while doing initial recognition only. Guys, these points, I think you guys have already remembered all these costs. We will be solving questions so that you will once again remember all those points. Costs not to be included or super important. Any cost which is incurred once the asset is already brought into its intended location and condition. If the asset is already into that condition, then whatever the subsequent cost which you have incurred, that will not be capitalized. That will not be capitalized. Okay, fine, Baba. Next, we have stopped till here. This decommissioning and restoration liability. I will be just once again repeating this example, and then I will be exactly explaining what is the accounting treatment for the entity and all. If you observe decommissioning and restoration liability, the word restoration is because, sir, I will be, while purchasing the asset itself, I also have the responsibility to restore the back to its original condition, but not now, but not immediately. That responsibility is there, but that is not immediately. That will be there maybe after 3 years, after 5 years, after 10 years, depending on the contract and the agreement. So let me just read the example. Sir, A Limited have purchased property, plant and equipment for 1 crore rupees. I will be just writing this information here. Sir, A Limited purchased PPE for how much, sir? 1 crore rupees. Fine, sir, I have purchased the PPE for 1 crore rupees, which is having a useful life of 5 years. It has, this is the important, contractual obligation to decommission the asset and restore the same, which is estimated at 10 lakh rupees, which will be incurred after 5 years. Along with that, I am also having an obligation. I am also having an obligation to restore the asset back to its original condition, and that obligation will be there after 5 years. That obligation is there after 5 years. Sir, what is the estimated cost which you will be incurring after 5 years? Are Baba, that also they have given in the question, and that is nothing but 10 lakh rupees is the estimated cost which I will be incurring after 5 years. And the question have also said that, sir, the current market rate of discount is 10%. They have given, sir, interest rate is nothing but 10%. So now what I have said is, sir, the standard is asking you to record even that obligation also now, but not at 10 lakh. You have to calculate the present value of this amount which you will be incurring after 5 years. Sir, how to calculate that present value and all? It is very simple, guys. Type 1 divided by 1.1 in your calculator, press equal to 5 times. You will be getting the present value interest factor, and you have to multiply that amount with 0.6209, and the final value which you will be getting is nothing but 6,20,900. And the standard is asking you to record this amount also at the time of initial recognition of PPE, which means, sir, assume here I am recording my initial recognition of PPE. Sir, first I will be writing purchase price. Sir, how much is your purchase price? Sir, purchase price is 1 crore rupees. Along with that, I also have a provision for decommissioning, restoration and other liabilities. Sir, how much it is? Arre Baba, you have to record that item at 6,20,900. Sir, if you please tell me the total is nothing but 1,06,20,900, and this is the amount which I have to record in my books of accounts at the time of initial recognition. Guys, have you understood the concept or not? Sir, if you ask me, sir, what is the journal entry which we will be passing? That also I will be explaining right now. We will be debiting PPE account debtor. Sir, how much we have to debit, sir? Sir, we have to debit this entire 1 crore 6,20,900 900, and you guys have to tell me, sir, to bank how much I have to write. Guys, you have to tell me, sir, to bank how much I have to write. Sir, will I write this entire 1 crore in bank, or will I write this, sorry, will I write entire 1 crore 6,20,900 in my bank account, or should I write only this 1 crore in your bank account? You guys have to tell me. That will make me understand whether you guys have really understood the concept or not. Brilliant. We will be paying only 1 crore out of cash na. I got the correct answer, Jyoti. So credit I will be giving only 1 crore rupees. Sir, what about the balance 6,20,900? Are Baba, that 6,20,900 is nothing but I will be creating a provision for DROL, and that exactly is nothing but provision for decommissioning, restoration and other liabilities. Which means, see guys, I have to debit this PP. I have to debit this PP, which means this 6,20,900 should be increased, because that is my obligation to restore the asset back to its original condition. Now, I want to credit something. I want to credit something if the debit is already given, and that credit is exactly called as provision for decommissioning, restoration and other liabilities. And Baba, accounting for this provision we will learn in Ind AS 37. This standard will suggest, sir, when to create provisions, how to create provisions, when to create contingent liability, how to create contingent liability. All those things will be discussed in that standard. That is not there in our syllabus. But here, why I have written like this is cost recognized and measured according to Ind AS 37. Guys, in Ind AS 16, they will say that, Are Baba, whatever the present value of the decommissioning, restoration and other liabilities is there, please add to the cost of asset. That they have given in Ind AS 16. But if you are adding it to cost of asset, corresponding credit also you have to give na, and that credit is given in Ind AS 37, because you will be creating a liability, you will be creating a provision as a credit side, and that exactly is the reason why Ind AS 37 comes into picture. I hope this point is pretty clear. So first of all, I just want you to note till here. I hope this entry is also very much clear to you. So initial recognition, what we'll be doing is, sir, we will be debiting PPE this amount, to bank we will credit this, and to provision for drawal we will be writing this 6,20,921. This exactly is the thing which we have to follow. So what you will be doing is, आराम से copy this decommissioning and restoration liability का part, copy this items, and this example also please copy. You have to copy while reading, because this is the most important example. If you understand this, we will be using this concept. This concept means recognition at present value, because I already said in the last class, sir, till now we have never calculated present values in our accounting except lease standard in your CMA intern. But other than that, we have never calculated present values. We have never recognized anything such as in our books of accounts. But now, welcome to Ind AS. You will be applying this concept called recognition at present value, present value, present value in number of areas. And trust me guys, the whatever the thing which I will be discussing for the next 30 minutes, that is going to give you entire clarity as to how exactly our accounting treatment will be. So in order to understand that, so please copy this example and also copy till here, which is nothing but initial recognition ka entry. Okay, so please copy this guys. Once you have completed, please type me yes, so that I will be moving ahead. Please tell me once you are done. Okay, fine. So come on guys. Now let us discuss this part. If you analyze this entry, if you analyze this entry, if you understand the credit part, so this 1 crore 6,20,900 is basically consisting of two parts. So first part is nothing but this 1 crore rupees which I will be making payment right now, and this 6,20,900 is the present value of the payment which I will be making after 5 years. Correct ya nahi? Yes sir, we have exactly understood what you are trying to say. But in our books of accounts, the value at the year 0 is how much? 6,20,900. I am talking about provision ka value. This value after 5 years, this value after 5 years, my estimated cost is I would be incurring 10 lakh rupees to restore or dismantle the asset back to its original condition. So what the standard is suggesting you guys to do is, Arey Baba, you have already recorded it that at present value, but this is not the payment which you will be making after 5 years. After 5 years, you will be making 10 lakh rupees. But currently you have recorded at present value. If you observe, this amount should be adjusted. Otherwise, after 5 years also, if this amount is only 6,20,900 rupees, then my purpose will not be served. Correct? So we will be making adjustment to this amount so that after 5 years, it should become 10 lakh rupees. And once after 5 years, this amount becomes 10 lakh rupees. At that time, I will make 10 lakh rupees payment and I will be passing that entry after 5 years. So little bit patient, be little patient. Now you will be exactly understanding, sir, what will be the accounting treatment which I will be making at the end of year 1, at the end of year 2, at the end of year 3, at the end of year 4, and at the end of year 5, so that this 6,20,900 becomes 10 lakh rupees. This is exactly what we are doing, and that process is called as unwinding of discount. That process is called as unwinding of discount. Guys, be little patient and try to understand what I am doing here. Sir, here as you said, as you said, we have understood the initial recognition ka entry. So now what we have to do? Please check this table. Please check this table. We will be making a table called as provision for withdrawal. Guys, please look at this table. Please look at this table and you have to tell me whether you got any idea or not. Whether you got any idea or not, just look at this table for 2 minutes, then you will understand what I have did exactly. I want you guys all to observe this table and what is your observation on this? You will be easily understanding this table. I know this is not the first time you are seeing this kind of table. Number of times you guys have solved this table. So please go through this table for just 2 minutes, you will be understanding. Brilliant. Correct, exactly. One of the student is said that, sir, we are increasing provision year on year. Sir, how exactly we are increasing? What exactly we are increasing? Why exactly you are increasing? I will be explaining everything, guys. Guys, while solving hire purchase ka chapter in your CMA Inter, if you remember, we will be drawing a similar kind of table. Sir, starting we will be writing year and then we will be writing opening balance. After that, we will be calculating interest amount. And after that, we will be writing installment paid. And then we will be writing something called as closing balance. I hope you guys are remembering this table. This table is also exactly like how we have done at your CMA inter-level hire purchase chapter. So if you check this table, first year 0 का ending balance will become opening balance for year 1. Correct या नहीं? Yes sir. So initial recognition का balance assume I have recorded at 6,20,921 rupees. And I have given that, sir, interest will be at the rate 10% is what we have given. So if you take your calculator and type 6,20,921 multiplied by 10%, you will be getting 62,092 rupees. If you add these two figures, you will be getting a closing balance. That is nothing but 6,83,013. For the time being, I have ignored all the decimals. I have just did some rounding off. Second year, Baba, if you observe year 1 ka ending balance is 6,83,013 rupees. So that will become my opening balance for the year 2. In the same manner, I will be adding a 10% ka interest cost and that exactly is nothing but 68,301. If I add these two figures, I will be getting 751,314. Similarly, for the third year also, the second year ka closing balance will become the opening balance for the third year. I will be adding, one second. I will be adding the finance cost for the third year as well, so that my opening balance will become 826,445. In the same manner, this third year ka closing balance will become opening balance for the fourth year. Again, I will be adding interest. And my closing balance at the end of year 4 will become 9,09,089. And the last year also, I will be taking the closing value of the year 4 will become opening value for the year 5. But now wait guys, sir, if 5th year is completed, your obligation to restore the asset will come. Therefore, you have to pay how much? 10 lakh you have to pay. But my liability is only 9,09,081. Sir, what is the difference? Can you please calculate the differencing figure? The differencing figure is exactly nothing but 90,911. In the last year, what we will be doing is we will be calculating the balancing figure. Even if you do into 10%, you will be getting a little bit 3 to 4 rupees ka rounding off ka difference, but that rounding off ka difference is totally fine. Guys, if you observe what I did exactly is, sir, year 1 ka amount is 6,20,921. This is the initial recognition which you did, but after year 5 this balance have to be 10 lakhs. Sir, opening balance is 629.21, ending balance is 10 lakh. This process of how it become 10 lakh is called as unwinding of discount. Sir, whether we do this unwinding of discount only at the end of year 5, right answer is no, Baba. We will be doing unwinding of discount in the end of each year, and this is exactly called as subsequent recognition of provision for drawal account. Sir, if you observe, opening it is 629.21, closing it is 683,013, which means it should be increased. It should be increased by 62,092. Sir, provision for decommissioning and restoration liability is a liability, which means it is having a credit side. Now it should be increased from 6,20,921 to 6,83,013, which means 62,092 should be increased, which means the entry will be going to look like this: to provision for drawal account. Assume year 1 I am passing, end of year 1, to provision for drawal account I will be crediting. Sir, how much interest you are charging, sir? Sir, the interest which I am charging is 62,092 rupees. Now you have to debit something, and that debit is nothing but you will be debiting finance cost account debtor. Sir, how much I should debit, sir? Sir, you have to debit 62,092 rupees. Guys, if you observe, the opening balance is 620,921 plus 62092 will be added. Therefore, the closing balance will become, here only I will write 620,921 into 10%. Okay, 620,900, I guess what I have written is 620,921 into 10%. Sir, at the end of year 2, what will be the entry which you will be passing, sir? Arey Baba, same. My provision will be increased from 683,012 013 to 751,314. Sir, so what I will be writing is same entry I will be passing. But this time I will change my interest amount. Sir, how much is your interest amount? That is nothing but 68,301. I hope this point is clear to you. Like this, you will be passing the similar entry for year 3 also. You will pass another entry for year 4 also, and you will be passing another entry for year 5 also. Sir, if you ask me to show the journal entries, here I have given you the journal entries, Baba. Subsequent recognition for provision for drawal account. Arey Baba, year 1 you will be debiting finance cost account data to provision for drawal account 62,092, 62,092. Year 2 also, if you observe, same entry will be passing. Year 3 also you will be passing the same entry. Year 4 also you will be passing same. Year 5 also you will be passing same entry. So whatever the entries which I am passing, I have recorded here, and the table also I will be recording here. So please copy this table first. Okay, first pass the journal entries and then you can slowly record the table as well. I hope you guys have exactly understood what is the point. I will once again explain, but before that, first I want you guys to look at this journal entry and try to understand what is the subsequent recognition for provision for drawal account, which we will be doing while writing. Guys, CFR is such an exam where you will be cracking a maximum number of marks with number of times practice. Understanding wise, there are no complicated areas nor conceptual areas which are there. when compared to other subjects like SFM or DT or IDT like that. There are not many conceptual areas, but trust me guys, all these are common sense areas only, but you will be getting maximum number of marks only by practice, practice, practice. Of course, many logical concepts are there, but they are not highly complicated or highly complex. Very normal things. If you do enough kind of practice, you will be easily securing great amount of marks. So first, please copy these items along with the table. Then I will be explaining all the things once again in an overall holistic manner. Copy this table as well so that it is easy for you to understand later. I hope you have copied, guys. Super Jyoti, thank you. Thanks for the response. So I hope you guys have understood, sir, how this provision for drawal will be initially recognized and how its subsequent recognition will be there. That also we have understood. Guys, here I have to explain one thing. Sir, at the end of year 1, year 2, year 3 and year 4 and year 5, every year PPE will be depreciated. That I will explain little bit later, but I think you guys have already know that point, that sir, every year PPE will be depreciated. So that depreciation also will be transferred to P&L account. If you remember the statement of profit and loss ka format, we have separate line item which is called as depreciation and amortization, and that is pretty simple, sir. And whatever the finance cost which I am incurring every year, that finance cost also will be moved to the P&L account only. This is also a separate line item in our P&L account na. So those entries I am not passing here because my objective is only to make you understand, sir, how this provision for drawal ka subsequent treatment will be. What I have explained is every year this finance cost will be transferred to P&L account, and along with that there is another item which is called as depreciation and amortization, and that will also be transferred to the P&L account. I hope you guys have exactly understood the point. Guys, tell me how much is the balance of this provision for drawal at the end of year 5? It is 10 lakh rupees. Correct ya nahi? Yes. So after 5 years I will be making my payment. Sir, at that time what will be the entry? Arey baba, very simple. I will be debiting this provision for drawal account. Assume it is 10 lakh rupees. Assume the payment is also 10 rupees, 10 lakh rupees. So I will be crediting the bank, and that exactly will be 10 lakh rupees. This is how the entry will be closed, because after 5 years my provision will be completed, which means my obligation will be coming. Therefore, I should be de-recognizing this provision for withdrawal account from my books. Sir, what you are saying? You have to de-recognize the provision. Recognizing means bringing into the books. De-recognizing means removing out of the books. So whatever the provision for withdrawal which you are having a credit balance, now you have to cancel that to make it as a debit balance, and this is the manner how you will be closing the asset balance. So we have understood this part. Now what we will be doing is, for examination purpose, I have designed one format. In some questions they will ask, sir, what is the amount of PPE? What is the amount of cost which should be included in PPE? Like that they will ask some questions. So what I have did is, for the examination purpose, I have designed one format, and here whatever the question which they will be asking as to costs to be included, you can be easily answering any question which they have given. So it is very simple, guys. All these points we have already know. First one is purchase price reduced by trade discount and rebates. If any trade discounts and rebates are given in the question, you will be deducting those amounts. But one thing you have already know, that cash discounts will not be adjusted here. Second part, Baba, non-refundable duties and taxes which are import duties, etc., or taxes for which credit is not there, those also will be added back here. If credit is given, that should not be added back. Directly attributable costs will be added: initial delivery and handling, site preparation costs, installation and assembly, employee benefit costs, professional fees, trial run expenses, transit insurance, plus present value of decommissioning, restoration and other liabilities also. We will be adding all the items. Plus another item is called borrowing cost. Sir, what is the meaning of borrowing cost? Arre Baba, borrowing cost is very simple. Assume this further discussion we will be having in another standard, which is Ind AS 23. We are having this standard in our syllabus. So you will be exactly understanding what is the meaning of qualifying asset or something. Some cases, interest also we have to capitalize in the cost of PPE, and that will be done only for qualifying assets. So qualifying assets ka discussion I will be making when we will be discussing that standard. But right now you can remember like this: qualifying asset is such an asset which will take substantial time to get ready to use. And that subsequent discussion I will be making when we are starting Ind AS 23. Another point, guys, if you have received any government grant, guys, cost of the asset is 1 crore, but the government is saying, okay, for you I am giving a grant of 20 lakh rupees, so the balance 80 lakh rupees only you have to pay. This is government grant. Sir, what is the treatment, sir? Simple, Baba, that government grant will be reduced from your cost of PPE. This further discussion I will make. I have written that part here, but still, since this is the format which we will be using for examination purposes, I have used it here only. So then comes your initial recognition. Next part, leasehold improvements are also included in the cost of PPE. Sir, what is the meaning of this leasehold improvements? Guys, if you remember the example which I have discussed, in order to make you guys understand the concept of decommissioning, restoration and other liabilities. If you remember, I am there. I have taken the building of my friend. I have constructed cabins. I have constructed central AC. I have installed central AC. I have constructed different cabins, different offices, different cafeteria. I have constructed. I have constructed one conference room also. I have installed many chairs. I have installed, many furnitures also I have purchased. If you observe, all these items are my PPE. Arre Baba, but the building which you have taken is not yours. Building is my friend's only. But whatever the assets which I have purchased, whatever the furniture, whatever the equipments I have installed, whatever the cubicles which I have constructed, everything is mine only, na. So those also will be treated as leasehold improvements, which means those also will become assets in my books, not my friend's books. Building, it is not my asset, but these leasehold improvements will be included in the cost of PPE. I hope you guys have exactly understood this point. So you can copy this point once again. Once you are done, let us discuss the questions. I will be discussing you two questions right now. But I want you guys to copy this part so that it will become a practice for you. In exam, they will not be giving all the costs. They will only give 2 to 3 costs which should be included in the cost of PPE, and 2 to 3 costs they will give which should not be included in the cost of PPE, but you have to remember this format in order to score good marks. So right now, please copy this format. It will be taking just 2 to 3 minutes, guys. No need to worry. The more and more you practice, the more and more marks you will be getting. So with that notion, please copy this part. But while copying, try to remember whether you have remembered this point or not. You just have to recollect whether we have discussed this point in the classroom or not. Because during the class itself, I will be making you revise multiple times. So once after our class is done, if you just open our daily notes at least for 30 to 40 minutes, trust me guys, your preparation will be next level. You will be easily getting 90 plus. Okay, so please revise that format. Please write this format along with that. Once revised, then we will be solving two questions from our study material. Completed. Is it done? Super, Prasad. Thank you. Thanks for confirming. So what shall we do? You only tell me, sir, whether should we solve for questions or whether we will discuss a few theory concepts. That is your wish. I will be end the class by next 20 minutes. So whether let us solve a few questions or let us just continue the theory only. If you are feeling this theory is boring, let us solve some 2 questions and then we'll again come back to theory. Because this theory is very much essential, guys. Because this theory we cannot solve problems. So these standards are completely theoretical only. Mostly theoretical. So what should we do? Whether we start problems or whether you want me to continue the theory part only. I'll end the class by next 20 minutes. I'll continue for the next 20 minutes. So what you guys want me to do? Is theory fine or do you want me to go for questions? Okay, understood. So let's solve few problems. Okay. So yes, guys. First of all, I will just listen to me very carefully. I will share this PDF ka questions in your, I will share in the WhatsApp group also, and I will share this in the free resources section also in our app, in the Class Plus app. I will share this also in the free resources section. Along with that, I will be sharing this in your WhatsApp group also. As I have said, workbooks will be dispatched in the first week of September. So till then, be little bit patient because I have summarizing all the questions. I will be summarizing all the questions. So for the first 2 chapters, please adjust with the soft copy. Okay, this is the thing which I want you guys to get some clarity. Okay, fine. Now, let us start the first question. Very, very simple. I want your 100% attention. More I will read the question, less I will spend while solving the question. That is our approach should be. That is how our approach is going to be. More and more we will be analyzing the question, and while reading the question only, we will be solving the answer also. But obviously presentation part I will be anyways explaining. Okay, fine. If you check the first part, what they are saying is Excel Limited sets up a plant at the purchase price of how much? 5 lakh rupees plus GST at the rate 18%, and they are saying intrastate. Guys, I think you guys have already know the meaning of this intrastate. Intrastate is nothing but location of the supplier and place of the supply both belongs to the same state, which means in intrastate CGST and SGST will be levied. That is what they are trying to say. Okay, and they are saying that freight is also there. Freight paid at the rate 20,000 plus GST also at the rate 18%. This is also intrastate, Baba. Paid 10,000 rupees as employee expenses for installation of the plant. This is not planet, this is plant. This will be corrected in your book, no need to worry. After the plant was put to use, maintenance cost incurred is 5,000 rupees, and the question has asked you to measure the initial cost to be recognized and the past journal entries. Estimated dismantling cost they have given, that is 30,000 rupees, and they have also given you the present value, which is nothing but 12,000 rupees. If you observe, the question is pretty simple. In the question is asking you to calculate the initial recognition ka amount, and it is also asking you to pass the journal entry. Very simple, guys. You just have to remember what all the items which should be included in the cost of PPE and what all the items which should not be included in the PPE. If you understand that, this question is a cakewalk for you. First of all, purchase price. Guys, is this should be included in the cost of PPE? Sir, the right answer is yes, Baba. This purchase price have to be definitely included in the cost of PPE. Next item, GST they are saying. Guys, GST ka credit you will get if you purchase machinery. If they are specifically saying that credit will not be given, only that will be added to the cost of the asset. If nothing is said, we will assume GST cost they will get the credit. GST ka item, they will get the credit. So that will not be added to the cost of the asset. Freight. Freight is nothing but directly attributable expense, which in order to bring the asset to the necessary condition and location intended by the management. So this freight also I will be adding. Freight ka amount also I will be adding. Same logic, GST at the rate 18%. GST on freight will not be added. The reason is pretty simple. GST ka item you will get the credit na. Therefore, on that you will not be added to the cost of the item. Next part, paid 10,000 rupees as employee expenses for installation of the plant. Simple. If you have kept any employee and that employee is wholly dedicated to the installation of the plant only, that employee ka cost also will be added to the cost of PPE. Guys, this point we have already discussed. After the plant was put to use, maintenance cost incurred is rupees 5,000 rupees. Guys, you have to tell me, sir, whether we have to include this 5,000 rupees also in our cost or not. Whether this 5,000 rupees also will be added to the cost of PPE or not. You guys have to confirm and tell me. Along with the reason also, please type the answer, because I know that you guys have already know this point. I am waiting for the answer. You have to tell me whether we have to include that 5,000. If yes, why? Otherwise, no. Super, super, brilliant. The reason is simple. It will not be added because the asset is already put to use. The asset is already put to use. Not only put to use, if the asset is ready to use, whatever the cost which you have been incurred after that, that will not be capitalized. So this 5,000 should be ignored. And they are saying we are having some estimated dismantling cost also, which is 30,000 rupees. But we will be taking present value of decommissioning liability na. Present value of the dismantling liability is how much, sir? 12,000 rupees. To summarize, sir, I will be taking the purchase price. I will be taking the freight. Installation cost also will be added, employee installation cost, and I will be adding present value of dismantling cost also. So my total will be coming to 5,42,000 rupees. Guys, my total will be coming to 5,42,000 rupees, and this will be nothing but my PPE ka amount. This is the amount which I will be recognizing in my books of accounts. GST and maintenance cost would not be recognized in initial cost. GST and maintenance cost would not be recognized in initial cost. Sir, what I will be doing this maintenance cost? This maintenance cost will be transferred to PL account. Sir, what about this GST? But this GST you will be using while paying output tax liability. While discharging your output tax liability, I will be setting off this GST ka amount there. Guys, are you understanding or not? Yes, sir, we have exactly understood what you are trying to say. If you observe, sir, what will be the journal entry which I will be passing? Very simple, guys. Machinery account data. Machinery account should be debited to 5,42,000. 5,42,000 is the initial recognition of the machinery. So this will be debited. Along with that, you have GST ka amount also. So on what amount this GST amount have come, sir? Very simple, Baba. 5 lakh purchase price is there, and along with that we are having freight also 20,000, which means if you calculate 9%, that is nothing but 46,800, and the same amount of SGST is also come. This marking I have given here only. So that also will be debited, and along with that, maintenance expenses. Guys, that is our expense. Sir, what will be the entry? Arey Baba, maintenance expense account data to bank. Maintenance expense will be transferred to P&L account. So P&L account data to maintenance expenses will be the entry, another entry. Pretty simple, na? So here they have passed one combined entry. They have passed one combined entry. I hope this point is pretty clear to you. Instead of this machinery account, you can write PPE account data also. Instead of to liability for dismantling, you can write like this also, to provision for dismantling. Anything is fine. Anything is fine. I will try to explain this a little bit in the next. I just want you to help you in preparing the journal entry. Guys, we will be preparing like that. PPE account data. Sir, how much, sir? PPE account data ka working note we have already calculated, and this is nothing but 5,42,000. So what I will be doing is I will be debiting 5,42,000 here. Credit I will be writing, sir, to bank. Sir, how much amount I will be paying for bank and how much amount will be created for provision for decommissioning liability. If you observe, sir, my provision for decommissioning liability is pretty simple, sir. It is 12,000 rupees only. So credit I will be adding to 12,000, and whatever the balance which is there, that is nothing but 542,000 minus 12,000, that is nothing but 5 lakh 30,000. This is one entry which I will be passing. Second entry, if you observe, GST ka entry also I will be passing, which means, sir, input GST account data. Let me write CGST, and in the same manner, sir, input SGST account data. Sir, how much, sir, it is? That is 46,800. 46,800. Guys, this also I have to make the payment. So here also I will be crediting the bank, which means 93,600 will be credited. And the next entry, if you observe, next entry is nothing but maintenance expenses account data are to bank. Sir, how much is my maintenance expenses? Arre Baba, maintenance expenses is nothing but 5,000 rupees. So, sir, here I will be writing 5,000. Guys, even if you pass three different entries, or even if you pass one single combined entry, anything is same. Anything is same, Baba. So have you understood this combined entry or not? If you don't understand, you can write these individual set of entries also in our books of accounts. Anything is fine, guys. If you are not understood that, I just want you guys to write in our running notes, keep question number 1 and just try to pass these entries. Working and all in our book, they have clear cutly given. So working, you no need to calculate separately. Since this is the basic question, I am not solving and writing the question. A few important questions I will be writing along with you. Super Prasad, brilliant. Is this combined entry clear? Then we can move. Otherwise, I just want you guys to copy these individual entries also. Sir, in exam, whether we have to pass combined entries or whether even passing individual entries is also enough. Right answer is any entry you can pass. You can pass combined entry also, you can pass individual entries also. Sir, when will we understand how to pass the combined entries and all? Guys, through practice, you will be understanding how to pass the combined entries. That is very basic thing, Baba. No need to worry at all. Okay, if anyone wants to copy this, I will just keep the screen for next 1 minute. You can copy these individual entries also. If you observe, if I add the items where the bank is credited, if you want me to add, I will be getting 5,30,000 and 93,600 plus 5,000. If I do, I will be getting 6,28,600, and that is exactly where they have credited. So both are same. So anything is fine. You can write this or you can write that. I'll be just keeping this for the next 1 minute. So please copy if anyone wants to copy that. The question have asked you to calculate initial recognition amount also and journal entry also. It have asked you to calculate. So you have to prepare this working also. You also have to write the note point, what all the costs we should not included, that also we have to write, and then we have to pass one journal entry also. Then only you will get full marks. This is the very basic question. This question they will not ask in your exam also. Just for practice, I just given this question. Okay, now right. So I hope you guys have completed this. So what I was doing is I am right now sharing this PDF to you. Just give me a moment. Can you please confirm whether you have received that PDF or not? In day 16 ka workbook, questions related PDF, please confirm that. If you are fine, I hope we can start our class for now, because if I start another concept, it will take another 15-20 minutes. So I just don't want to extend that. Fine. So now I will stop today's class, but I just want you to tell, sir, what exactly are the pending topics which are there in this standard. Guys, we just have, sir, if exchange of PPE is done, what should be the accounting treatment? That will be discussed in next class. And the next point is, sir, when the PPEs are self-generated or when the PPEs are constructed by our own, then what should be the accounting treatment and all? We will be learning those points. And next comes the most important points, revaluation and cost models of PPE. This is called as subsequent recognition. This is called as subsequent recognition. This concept is very much important. And once this is done, we will be starting with another concept which is called as depreciation. So these are the major topics which are pending in our chapter. So probably I will be taking 3 classes to complete this, not 3 days, only 3 classes. Maximum it can extend by another class. Maximum 4 classes, which means I think some 4 to 5 hours discussion is pending. We will plan accordingly. No need to worry. This is a very easier set of standard in our syllabus, very basic standard. I have already said that the reason why we have started this standard is it is very chotusa standard, very simple standard also. But still, these are very, 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 very important. Revaluation models and depreciation. Self-generated is very normal thing. These two are the most important points which we'll be discussing in the further classes. So what you guys have to do is, I forgot to give the homework question. Let me give you. Guys, please solve the second question as homework. I will explain this question definitely in tomorrow's class, but I just want you guys to try this question. Okay, will you do that? Yes, definitely you will do that. You are very good students. You will definitely do that part. I no need to worry at all. So that's it, guys. I want to end the class today, and we will be continuing in the next class as to what all the balance topics which are being there. Okay, so that's it, guys. Thank you so much for attending the class even on festival day also. Thank you so much for your commitment and all. So that's it for today. We'll continue in the next class.